our capability in sourcing and our end-to-end supply chain and also our brand. In terms of what the share that we see, I think in the domestic market, we definitely hope to see non-basmati contributing at least 10% of overall revenue in the next couple of years.
Right, so 10% of overall revenues that could come in from non-basmati in the next couple of years. Thank you, Ashish, so much for joining us on the show and sharing your views. So that's the management of KRBL. A quick check in terms of the long-term performance as well. 2.5% up move, a very stable day so far for a KRBL as such. If you can just have a 6-month to a 1-year chart as well, 12 months, there you go, a downtick of around 21 to 22%. So the key question from here that comes up is it the right time to actually enter the rice space from a KRBL to a LT Foods? These will be stocks that will be on investor radar as well. But completely out of time. With that, it's a wrap on this edition of the Small and Mid Cap Show. Keep watching NDTV Profit, and next we will have a lot of queries that will be answered by Mahima and Alex with their guests on Ask Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and with me is Mahima Vajrajani, and we will take you through the next 1 hour of trade. Well, it was looking like it was going to be a break in the selling. Unfortunately, that relief did not last very long, and we are, in fact, trading in the red for the benchmark Nifty 50, and it's given up about 0.7% or thereabouts. It had a high point of about 0.5% gains, but then that was very short-lived, as you can see on the screen. But we are still in the green for the broader markets, and so there is some semblance of a relief there. Of course, we are also off the high point of the day for the mid-cap as well as the small-cap index, both of them losing quite a bit of ground. Let's also very quickly pull up the market breadth, just to give you a sense how things are going. And there are more advances than declines in trade today, but that gap has narrowed quite considerably over the course of the day, and hopefully that continues to be the case. There will be more advances than declines, but you can't say for sure. It's been that kind of market over the last couple of weeks, and indeed that is primarily on account of the selling by foreign institutional investors that has exacerbated over the past couple of weeks. Let's take a look at the sectoral picture as well, and you have the media index that is up and about in trade today, gaining over 1%. Realty doing reasonably well for itself, up about 0.8% or so. Auto up about 0.6%. The losers include the FMCG pack. They've been under pressure and they continue to lose ground, down about 0.9%. Nifty Bank not doing too much in trade, down about 0.2% or so, and the PSU banking pack also under a tad bit of pressure, not too much to speak of, though all of the action really is stock specific today. And let's mark some of those stocks. Mahima, what are you looking at?
Right, some of the stocks, that are bucking the trend, and somehow they've managed to be in green, and Eicher Motors is one of them. The numbers did not look very good in the first look of it, but the management has given quite a good guidance for the company. Growth is in focus is what the management has emphasized on. They're saying that inventory stands just at 2 to 3 weeks, and there's a strong headroom for growth going forward, considering the festive season is also kicking in. Eicher Motors is up 7.5% on the back of that. Let's also pull up Apollo Tyres. Revenue growth seen in AP, MEA and Europe regions, but margin is under pressure and led by high raw material costs, but the stock is doing well, up 4%. Let's also put up Patel Engineering. Revenue growth was higher than 10% growth guidance, and margin in line with 14% guidance of FY24. The stock is doing well, up 3%. Let's also pull up Thermax and see how Thermax is doing in trade today. All of these stocks are in focus after its Q2 earnings, up almost 4%. Revenue, margins, net profit beat estimates, and order book higher due to large orders in the infra energy segment. And earnings is clearly now, about to end, but there's some earnings which are really trying to, keep the markets in check and trying to keep them in green. But moving on, the stock in focus today is PI Industries. The company has slashed FY25 revenue growth guidance, and Varsha joins us with more details on that. Varsha.
Thanks, Mahima. So yes, company is in focus. If you see, the stock is down almost 7%. Now, because they've reduced their FY25 guidance to high single-digit growth. Now, they were expecting 15% growth for FY25, but now that has been reduced. Now, this is on the back of weak pharma performance. Previous revenue guidance was around 15%. Now, but let's look at the numbers. So, numbers were actually in line, or pretty good set of numbers that beat estimates, wherein the acceleration in Q2 FY25 numbers on the back of exports. Their CSM exports, that is custom synthesis, saw double-digit growth with new products up 42% year-on-year. Domestic revenues, though, declined due to reduced supply to institutional customers and due to ongoing pricing pressure that we are seeing in the chemical segment. The pharma segment, so basically they've reduced their guidance because of this pharma segment. The profitability remained drag. Flat revenues were seen sequentially, but management is expecting H2 FY25 good based on the order book that they have. EBIT loss narrowed for pharma segment to 50 crore versus 70 crore in Q1. Margin increase that we are seeing, that EBITDA margin increase is due to the better product mix and operating leverage. While if you see, the net profit would have grown much, but it's just grown 5% because of the tax rate, which was 23% versus 6% last year. Lastly, if you see, Jefferies has a buy rating with target price of 5,100, upside potential of 12%. Now, according to them, the overall revenue met expectation. Domestic business was in line and pharma was slightly above. FY25 guidance have been taken into consideration while they have given this buy call. While pricing pressure, according to them, is expected to persist in upcoming quarters, and management is expecting improvement in H2 FY25 as per Jefferies also.
Right, thanks so much, Varsha, for getting us those details. And that sets up the focus conversation for the start today. We've got Sameer Dalal of Natvarlal and Sons Stockbrokers, as well as Kush Bora, founder of kushbora.com. Thanks so much, gentlemen, for taking the time, as always. I love the new look, Sameer. Looking great. Let's talk about whether you think that PI Industries also looks as good. What's the view?
So it does look good from a longer term perspective, and even actually if you look at the short term, it's not so bad. The results were decent, yes, but what the management is indicating is, that the growth may not be at the original expected level, and which is why we are seeing a knock on the stock, right? So when the management is not confident of sales, obviously it sends a negative picture into the system. And from that perspective, I think we are seeing a bit of a correction. Now, earlier your analyst discussed the stock a little bit, and let's further just say around what she said, that the pharma sales, they're expecting it to remain a little low, but it'll still be good given the order book that they have. So obviously they have enough orders and visibility to ensure that they will still have a growth, but it'll be lower than initially expected. Second, this time we've had a slightly prolonged monsoon within India, and once that is the case, you obviously see the demand for insecticide, pesticides taking a little bit of a drag, so which we've seen. But given that we had a good monsoon this year, I believe the next season, that is half two, will definitely be better, which was also expected from the management, when it comes to the agrochem sector. So given that we expect the second half for that segment to be doing well, and that is the largest share of the overall business, I don't think we should take it too negatively from a slightly medium to longer term perspective. Yes, in the short term, there might be some pressure, but I believe that, look, given the kind of products that they have, given the growth opportunities that lie ahead, especially for the domestic agri and also for the pharma, I think corrections are good buying opportunities in PI Industries.
All right, so correction is a good buying opportunity for PI Industries as per Sameer Dalal. But moving on to the queries for the day, for viewers tuning in for Ask Profit, you can ask all your stock related queries, whether they're fundamental or technical, on the number that is flashing on your screen. The first query of the day is from Ray, who's from Bangalore. He's holding 100 shares of HDFC Life at 745 per share, and he's also given a target that he wants to achieve. It's 800 rupees. Now he's asking whether does this look achievable in the near term from a 6 months perspective. The current loss that he has is around 5,000 rupees, and the stock currently is trading at 691. Kush, according to you, do you think that the stock will reach the target of 800 in 6 months?
Hi, first up, a very good morning. Well, in 6 months, there is a possibility that the stock might actually reach, the target of 800. However, it may not be as smooth a sailing as one would like. The reason being, I'll first attribute the positive factors. In a market like this, if you see the stock is actually consolidating with a mild bit of negative bias, I agree, but it's still consolidating. Only when the market has broken below the 200-day moving average has the stock broken the support zone of 700. But there is this congestion zone up until 750. Once that is taken out, I think a move towards 800 and higher is also likely. 6 months is a fairly decent time frame. He can continue to hold. A positional stop loss on this one comes in at 650.
Okay, all right. So let's take the next question. This is on Eicher Motors, and this is from Chandan Jain, who's writing in from Hubli in Karnataka. He's bought at levels of 2,750, and he's been holding for a while. He says, I believe he bought this quite a while back, 5 years, and he's wondering whether to book profit and move on to something like a Bajaj Auto. Sameer, what's the view here? Because we've just discussed, of course, we didn't come to you on this one, but we were talking about how the outlook going forward, based on what was discussed on the conference call, has been taken very well by the street. What's the view on Eicher?
So you rightfully say, the management has given a very positive outlook going forward in regards to their sales. And also, if you look, they've just launched their first electric vehicle. Of course, it's just been announced. It's not been yet hit the market. But we believe that there will be traction. And given the fact that we believe that the electrification of India in automobiles is going to pick up steam, Eicher has making an entry is a very big thing. Of course, the way, the real thing that needs to be looked at, if you ask me, in the case of Eicher is, will they be able to get traction in the electric space, for the simple reason that, their whole philosophy of the bike selling is the high power that they generate, the kind of riding bike that they have with the noise and all of that. Now coming to a fully quiet bike, electric, it needs to be seen if that picks up, but we believe that Eicher will be able to compete. So from that perspective, it's good. But again, where we find difficulty in Eicher is purely when we compare across the board, when you compare to the likes of the other auto industry, the valuations are a little bit on the higher side. So from that perspective, we have a slightly cautious view, but corrections are good buying opportunities. And today is not the day to go out and buy it, given the fact that the stock is run up by 7% odd. I think the Indian market overall is going to correct. And when that happens, you're going to see a correction across the board, including the likes of Eicher Motor. So I would say, ignoring the 7% run up today, which we would like it to go off, but another 10% below that. So we're talking of a 15 to 17% correction is where we have comfort in buying Eicher Motors. Now, for this particular person, would he hold on? Given if he doesn't have a short-term view, I think you can hold on. But if you are looking for something short-term, I mean a short-term exit, then I would say at this point, book profits.
Right. The stock has seen around an 18% upside since the start of the year, but today itself, the stock is up around 8%. So good moves coming in for Eicher Motors. Moving on, next question is from Lokesh, who's from Bangalore. Suzlon is the counter that he's asking for, whether he should hold or buy for long term. And, Suzlon, according to him, I don't know whether it was down 10% or not yesterday, but today it's up around 5%. So he wants to know whether this is a good counter to get into right now from a long-term perspective. Samir, I'll stick with you for this one.
Yes, from a long-term perspective, so this is the price we would be comfortable buying Suzlon, to be very frank. It had run up all the way to 80, where we had discussed on your channel also that we found valuations had moved up far ahead of what the fundamentals justified. Now, let's just talk a little bit about India again, because India is moving to the renewable space quite quickly. Wind energy is obviously going to be one of the key drivers. And Suzlon has one of the largest capacities in India for setting up these wind power plants. They have these new towers which have higher heights and bigger wingspans, which allow them to generate higher amounts of power, which can even look at certain regions where the wind is not as great. Earlier, there used to be this belt where you had to put in your wind turbines where the wind powers were, the wind was stronger, so you could generate the power. Now, because of these new turbines and these new heights that they've taken, you can actually look at certain other regions. And if you look at it on a on the power generation front, wind power is starting to look quite attractive when it comes to setting up, and the ROEs and ROCs are quite attractive. So we believe the order flow for them will continue to grow. They are also expanding this capacity. They have a strong order backlog. Their execution is improving every quarter, and we believe that will continue to improve. Their operations can scale up all the way to 75-80% utilization, which they're running at about 30-35% right now. So operating leverages will kick through. Profitability will continue to increase. The companies become debt-free. So from all those angles, it's a buy. But like you said, it's a long-term buy. I think it's an investment for 2 years and not less than that. Ideally, I would say a 5-year would be a great investment horizon, but minimum of 2 years.
It's already looking significantly more attractive than it did even a month back, because it's dropped quite a bit, as you can see from the charts. Let's talk about the next question. I'm going to split it into two. Sagar is asking a question on Colgate Palmolive. So it's not an F&O question per se, but he says that he shorted from 3,660 levels. Is there a good time to book profits, or would you sense another leg of correction is the view? So technical view on Colgate Palmolive first. How does it look, Kush, on the charts?
Well, first up, congratulations on this massive short trade. I mean, he's making truckloads of money in a market like this. it'll not be a bad idea if he's got multiple positions, then to book at least partly, at least 50%. A couple of factors for that are that there is a good support zone around the 2650, 2700 zone, so that might kick in. Also, the stock has gone into deep oversold territory, so you could expect any kind of a rebound on this one. But that would most likely just be a rebound trade. So if he's got multiple positions, then you're better off booking partly and holding on the rest. If you've got just one lot per se, then not a bad idea to book right now and sell again when the stock rebounds close to 3000 odd levels or 2950 odd levels.
Fair point. The second part of the question is actually a fundamental question, and this one's a bit of a nuanced question, right? Samir, I'm going to add some aspects of it to what he's saying. First, I'll read what he's saying. He's saying the India consumption story seems to have gone awry due to inflation and low demand, with urban and metro spending less and tepid rural demand. Where do you see the moderation coming, or do you see this as a seasonal impact? Now, it has been suggested to a certain extent, Samir, that the preferences in urban India have changed. And so with FMCG companies saying that the middle class has shrunk, perhaps that's not an accurate representation. Perhaps it's that people are choosing better options, people are choosing to live healthier, and that is impacting certain pockets in the FMCG space. Nobody is denying that there's a slowdown in consumption, but how do you read that, and where would you play the consumption theme?
So yes, very clearly there is a slowdown in consumption, and you can see that across the board when you look at the results, right? Be it Lever, Nestle, I mean, you talk across the board, there is a slowdown, and it's more from the urban side. The rural had anyways been going slow, but we're beginning to see an uptick because now we have had a good monsoon. I think the rural side will see a better uptick going forward. So we believe that consumption is a short-term hit it's taking. We expect things to bounce back. Now, would you want to play the all-out FMCG pack, or do you want to play a different sort of consumption theme, which is a discretionary consumption? So my bets personally would be more towards the discretionary side, where we have seen a certain amount of cuts in spendings because of the higher interest rates. I mean, I'm just talking about a simple middle class. Like, let's talk about the story. If the fact that interest rates have gone up, if you have a housing loan, a car loan, whatever other consumer durable personal loan, whatever you have, your EMIs have gone up, which means you have less money to spend on discretionary products, right? So that is where the hit is coming. If you look at this entire space, which is the auto, the QSR, you talk about the air conditioning, you talk about the electronics, electricals. I mean, whatever you talk about, we're seeing a bit of a slowdown. But once the interest rates start moving down, and are we there yet? I mean, I don't have the answer. I would think, given the fact that we saw inflation seeing a little bit of an uptick, it could be pushed back by maybe a couple months, but eventually interest rates have to start coming off. And as they come off, that will allow EMIs to go down and allow more discretionary spend. And that money that is saved will go towards these various sectors that we discussed, which could be automobiles or QSR or paints or home improvement or whatever across the board. So we believe the discretionary spend is a better way to play it, and not necessarily FMCG where valuations are high.
Right. I mean, that sums it all up, right, Alex? But moving on, the next question is on HAL. Now, Harsh from Indore is asking that he has 20 shares of HAL bought at 4,445 a piece, and he wants to understand whether buying more will average out the price, and does that strategy make sense right now? Kush, I'll come to you for this one. Does buying or entering HAL right now make sense?
So first up, let me reiterate what I've said a couple of times on the show, which is I'm not a big fan of averaging. I don't think I'll ever be. Not a good idea to average, just yet. I mean, the only case when averaging makes sense is on the way up. Right now, the stock's broken below the 200-day moving average. Hasn't really found any kind of meaningful support zone. It might look attractive because it's fallen off the cliff by quite a few percentage points. But you might want to hold on. It's a good idea to perhaps average it when the stock rebounds and comes closer to, let's say, 4,200, 4,250, where the 200-day moving average lies. And the rationale that is that once you've seen some kind of base formation in the stock on the way up, there could be further momentum that takes the stock higher, rather than buying it at 4,000 and perhaps seeing 3,800 on the downside. Who knows? So don't average. Wait for a rebound on this one. That's when you might want to consider buying some more.
Still up 43%, despite the kind of fall that it has had. and that's quite an achievement. Let's talk about Equitas Small Finance Bank next, and this is Abhinay's question. He's bought at an average price of 94. He's holding 900 shares. Let's see where the stock is currently trading, and he's looking for a view. Hasn't specified what his time frame is. So Kush, I'm going to come across to you on this one. He's losing ground. It's currently trading at very close to 62, and it's not done too well this year. What would you suggest that he do?
As painful as it might be, not a bad idea to book, some losses here. The stock's actually been in a downtrend even before, the market sort of turned around. And if you will recall, about 110 odd levels were, from where the stock started reversing around, end of June. And that was, as I said, way before what the rest of the market was doing, suggesting that there was already inherent, weakness in the stock, exaggerated by the fall in the market. My suggestion would be to move out of, Equitas Small Finance Bank and move to something like a Federal Bank, where there has been relative strength. I know it's consolidating around that 195, 205 mark, but in a market like this, you will take a consolidative move. So my suggestion, switch from Equitas Small Finance to Federal Bank.
Right. The next question is from Vino, and his question is on Spandana Spurti. Now he's holding 573 shares at 657 a piece. The current market price is at 365 right now, and he's incurred a total loss of around 1.7 lakh rupees. Now he's asking whether there is any chances of recovering these losses. If yes, how much of an upside can we expect going forward, and should he sell after a point of time, is his question. Coach, I'll stick with you for this one. How does Spandana Spurti look on charts?
You might as well play my previous answer on rewind and give it to him. But the only small difference here is that this stock has actually now gone into oversold territories. You might see a bit of a rebound close to about 390, and once that is taken out, 410 kind of levels, and I understand that will be still substantially below his buying price. So any kind of a bounce towards, let's say, 390, 400, 10, 415 should be taken as an opportunity to exit this one. Again, weakness started way before the entire market started to crack. Buy Federal Bank instead, consolidating, and I've already given the rationale for that. So sell it on bounce and switch to Federal Bank.
All right, Vedanta is the next counter that we're talking about. Bought at levels of 310. This is a question from RP Singh, who's writing in from Vadodara. He's got 350 shares, and it's a simple question of whether he should hold or exit. He's making profits here, Samir. What should he do based on the fundamentals?
We've been saying that commodities is very dependent on China, and the stimulus packages that have come from China have not been that attractive. So the probability is that the entire commodity space may not do as well as probably initially expected. Secondly, I'm not a big fan of the management. They've always taken steps which are more favorable for the management rather than for the shareholders. So unfortunately, as much as, given the fact that the price is corrected and maybe Vedanta is not too expensive, just given the fact that I'm not expecting a big rebound from China and I'm not happy with the management, I'll go ahead and say book profit. If you want to play the metals theme, I think the better way to play it would be a Hindalco, where we also have seen a correction. We believe the aluminum and copper space will do well going forward, given the fact that they are used for more industrial purposes rather than just pure infrastructure. But Vedanta is not the way to play it. At least that's not the way I would like to play it.
All right, that's a clear view coming in on Vedanta from Samir. The next question is from Manu, who's from Bangalore. He wants to understand whether he can buy L&T Finance for next 3 to 5 years. And if not L&T Finance, would you suggest any other peers of L&T Finance? Samir, I'll stick with you for this one. Your view on L&T Finance, if not that, then which counter?
So L&T Finance, I'm very positive on. I think you can stay holding on to it. We believe that the opportunity for growth for them is quite good. Actually, we like the entire NBFC space. L&T Finance, though, has given a good correction. So I would say hold on. And if you want, you can add some more. But yes, in the NBFC space, there are a lot of other companies which we like. Samman Capital is something that we've discussed on your show before, which is into the housing finance space. Similar, LIC Housing Finance has seen a good correction. That also looks attractive. If you ask me, Bajaj Finance has also recently seen a decent correction. Its growth numbers have been quite strong, so that is something that can be looked at. And last, I would like to put in one which is catering to a slightly different segment, which is the MSME business segment, which is Ugro Capital, growing their loan book at 30+%, top line and bottom line at 35 and 47% respectively. We believe the opportunity there also is quite strong, but L&T Finance is a great hold. So I would hold on to that. And if you want to diversify, these are the others I would look at.
Coming back to you on a quick view on KPIT. And this is a question coming from Hema Bisht. She's writing in from Abu Dhabi. She's bought at price of 1800 and she's wondering whether to hold or to add more at this point. She's making considerable losses at this juncture.
Alex, sadly, she's bought it at a very high price. The company is doing extremely well, and we believe the opportunity for them is extremely good, given the fact that automation in cars, given the digitization of cars, in the sense the kind of systems that they're putting in, KPIT caters to that. But given she bought it at extremely elevated levels is why she's losing money now. Should you average at this point? I think you can average it at this point. You can probably expect a price of about 1500 to 1600 in the next 1 year. So at that point, then of course you have to review it again. But if she averages at this point and it reaches what we are talking about, then she will be at least in nothing else in the break-even levels.
All right. Well, Samir and Kush and our viewers, it's time for a short break, but more stock queries will be taken on the other side, so stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360,
Welcome back. You're watching Ask Profit on NDTV Profit. This is where we get all of your questions, either short-term or long-term in nature. We get all of them answered. And we have been getting some of your questions answered already. We will continue to do so. With us are Samir Dalal as well as Kush Bora. Samir, the first question I'll come to you on Zen Technologies. If you've bought at levels of, if you bought actually at, I'm not even sure if this is the accurate number. Let's pull up the very long-term charts and see if Zen Technology ever trade at 150 rupees. Very long-term charts. I'm not even talking about right now, because you've got Yash who's saying that he's bought at that level and it's trading at nearly 1800 levels. Would you book right now?
Fortunately, we don't track this stock, so impossible for me to comment.
Okay, Kush, I'm going to come to you on the charts then. He's making tremendous gains. Not a very large quantum, but he's making substantial gains, right? Would you book?
Well, it did trade at 150 and lower prices, somewhere close to 2022, somewhere thereabouts. So kudos on, holding on. More importantly, more important than identifying is holding on to such stock. So kudos on that front. If he's been invested in, this stock for such a long time, I don't think he should consider booking profits just yet. This is more of a consolidation phase after the stellar and almost an unbelievable kind of a run that, you're looking at. However, I would like to give a positional stop, which is 1550. If that is broken, then the medium-term trend, perhaps for this one, could reverse. So as long as that level is held, you might want to consider, holding on to this one. Very rarely, I think, do you find such stocks where you make such multifold returns, and holding on to them is even more difficult. This is a passing phase, 1550. As long as that is held, continue to be in this one.
Apologies, Yash. I misread the number of shares that you have, and you're sitting on quite a bit of gains right now, and kudos to you having picked up a stock at 150 and had the patience to hold on, and I think kudos to Yash for that.
Absolutely, that's 16 lakh of profits. That's quite interesting. I don't think he needs any of our advices then. But moving on, the next question is from Vaibhav, who is from Vadodara. I think a lot of people are watching me from my own city, Alex. And his question is, it's a generic one, which is that one stock to invest in for the next 5 years, and he wants to concentrated investing. So, Samir, I'll come to you for this one. 5 years is the horizon. Which stock would you pick?
So if he wants to pick only one stock, I would pick one from the banking space, and the one I would select is HDFC Bank. I'll tell you why. One, I get the safety of having one of the largest and the best managed companies within India. Two, we believe without banking, Indian economic growth is going to be very, very difficult. So banking will have to do well if you believe the Indian economy has to do well. Third, HDFC Bank's valuations have corrected significantly. So it used to historically trade at 4.5 times price to book. We're getting it about 2.2 times price to book, which is very attractive. The premiums that it used to, of course, have to some of the other players has disappeared. The fourth, I would like to say that, right now they're going through a transitional phase where they have some high cost deposits post the merger with HDFC Limited. And as they shift those high cost loans to the CASA deposits and term deposits, which are available at a cheaper rate, we will see the NIMs improve going forward. So on all parameters, we think HDFC Bank is that one single stock from a 5-year perspective. You can have growth in certain sectors, maybe slow down in some sectors, but banking will do well irrespective which sector is doing well eventually or not. So that would be my play.
Interesting. I also love the sound of the cuckoo clock behind you. So that marks the midpoint of the day. Let's talk about HDFC Bank though, because you've got Ayappan who's bought, or rather who's thinking of buying. He's identified that he wants to invest in this stock, but he's looking to invest 1 lakh of rupees for the next 3 to 5 years. And Samir says that's his pick. If there was one stock that you would pick in this market, that would be HDFC Bank. And so, Kush, at what level do you think it's the most attractive to deploy 1 lakh rupees?
So I think this is where technicals and fundamentals sort of marry, right? Not a bad idea. If I were to pick one from the banking space, HDFC Bank would be it. Not a bad idea to start accumulating around these levels. The typical congestion zone or the accumulation zone for HDFC Bank for a while has been around the 1650, 1700 mark, right? So if you do get, and right now it's trading just, within that, just below the 1700 mark. So if you do get anywhere closer to the 1650 mark, not a bad idea to start accumulating. But for a stock like HDFC Bank, you might want to put it more on an SIP mode rather than go out and buy at one go. So yeah, not a bad idea to start accumulating HDFC Bank. Typical accumulation level 1650.
So it's not a bad idea to accumulate HDFC right now at this levels. Moving on, the next question is from Devinder, who's from Hyderabad. He's having 15 shares of Bharat Dynamics at 1250. He's asking whether it can go further low. Should I sell? Should I hold in the current market conditions? And he's a long-term investor. So Samir, your view on Bharat Dynamics? He's currently at a loss of around 4,000 rupees. Your view on Bharat Dynamics?
So let's first talk about the entire defense space, right? I think the defense opportunity in India is extremely large, and it's only going to keep growing given the fact that the spends from defense are going to increase, given the fact that India is upgrading, given the fact that there has to be certain amount of components made within India, even if we are buying equipment from overseas. So all of these throw up a huge opportunity. The problem we find with a lot of the defense counters, including a Bharat Dynamics for the time being, is the fact that valuations have moved up far more than what is feasible in the near term. Now, the stock has corrected, I won't deny, but even after the correction, I think the valuations are higher than what the historicals have, of course, been. That I'm not denying. I mean, that is probably could move up, but the fact is it's still above the comfortable levels that we would attribute. So for this person, I mean, given the fact that he's a long-term investor, I think hold on to what you have, but on further corrections, I think it can correct further closer to the 850 odd levels. If that happens, I think you need to add on some more and add on a significant amount so that your average comes much lower. And over the 5-year period, I think then you will make decent returns on your money.
Okay, so many of you are posting, and this is reason to brag because, my goodness, you've got Shivangi who's bought Suzlon at a price of 1.5 rupees. We were both checking to see if the price ever hit that level, and it did in fact hit that level. Samir has already given his view on Suzlon, and he says that if you're holding for the long term, you should continue to do so, and even buying is not a bad idea. Samir, I'm just attributing to this to you, and I'm paraphrasing. I'm not repeating exactly what you've said. But Kunal, the question is whether or not you should book some, because she's got 20,000 that she bought at a price of 1.5 rupees per share. The stock is above 50 rupees even right now. What would you do with this?
Alex, missing an old friend, Kunal?
I'm so sorry, Kush.
I get it. I completely get it. I've kind of gotten used to it. I mean, if you know what I mean, I think you know exactly what I mean.
Kush, what's the view?
But you're right. This is a point to brag. And if you've bought Suzlon at 1.5 and you're holding it, even when it's 50, 60 rupees all the way up until 80, I don't see a reason why you should, perhaps book profit or exit out of it right now. Look, some of these stocks, what applies to them is harder they go, higher they go, harder they fall. It had a stellar run. In that context, it's sort of correcting, those excesses right now. So hold on to this one. A positional stop, if I were to give one, then it will be close to 47 rupees. Below that, perhaps the trend could change, from the medium to a long-term perspective. But as long as that is held, no issues. I think you should continue holding on to this one.
Right, that's the view coming in on Suzlon, I believe, because, okay, we're flashing, yeah, Suzlon. The next question is from Mamta from Chennai. She's bought IDFC First Bank, 500 shares at 88 rupees a piece. And, okay, her question is also on whether it's a good idea to average now or wait for the next few years. The stock is moving down from the last 1 year. If you can see, the stock is down around 28% in the last 1 year. Kush, I know, doesn't like averaging out, but Samir, I'll come to you for this one because, it's from a long-term perspective as well. Your view on IDFC First Bank?
So in the mid-cap banking or the smaller banking stocks, IDFC First Bank is my top pick, right? So HDFC we already discussed. Now IDFC First Bank, I'll tell you again 3-4 reasons that I really like it. One, they've been able to garner savings deposits in this situation where banking industry as an overall is struggling for savings. They've been growing their savings CASA much more than the rest of them. In fact, they also have a similar story. They merged with Capital first merged with IDFC, the erstwhile IDFC, which was a infra financing, because of which they have some high cost bonds, which will get repaid over a period of time, replaced by these low cost savings deposits. So that will lead to NIM spreads automatically. Two, they have a strong engine of growth. If you see, they're growing their loan book by 30+%. They have diversified themselves from being a pure institutional play, which IDFC erstwhile was, to now being 90% retail. And that is going to keep growing. Now, they have gone through a little bit of a tough period, given the fact that the microfinance and the credit card business has faced slightly higher NPAs. But we believe that is short-lived and that will recover. And we believe that growth, like I said, will take care of a lot of the other problems that they have. They've provided far ahead of what is required. I think they've taken on their microfinance 90% provision versus what may have been required at close to 15 or 20%. So provisions going forward will also not be very high. So I would say go ahead and average, go ahead and buy. I think this stock will give good returns over the next few years. Our 2 to 3 year target is closer to 150 rupees. So.
Wow, 2 to 3 years, more than double in 2 to 3 years is the view on IDFC First Bank. Let's talk about M&M Finance, another name in the financial pack. And this is a question coming in from Satya. He's writing about whether or not to switch from M&M Finance to something like a Manappuram Finance for a period of 1 year. He's losing ground, as he points out, in M&M Finance. Kush, on the charts, does it look like a good trade to make?
Well, rather delicately placed. It's got this support zone around the 250 mark, very close to that one. If that is broken, then, you could see a move up until 220. So I would hold up on that purchase, given the kind of market trend we are seeing, and then how the stock is very close to the support zone, there's a possibility that it could head lower. Now, Manappuram Finance, is attempting a recovery, it's attempting a revival, but I'm not sure if it will entirely be a sustainable move, because on the way down, the stock has seen quite a bit of, heavy volumes. Slightly different space, but still within the financials. Geo Finance is something that we like, we have for a while, was consolidating for a brief while. Now it seems to be, on its way up. So that is one stock that you can consider, especially if your time horizon is, 12 months or longer.
All right, so that's the view coming in on M&M Finance, and Geo Finance is something that Kush picks over M&M Finance. Moving on, the next question is on Aditya Birla Capital. Badri from Bengaluru is holding 50 shares at 190 a piece. He wants an outlook from a 2 to 3 years perspective, and he wants to know whether he can add more at the current market price or not. Sameer, your view on Aditya Birla Capital?
So it's exactly at where he bought it. I think it's around 190 as we speak. So there's no real change in the price. Now, long-term perspectives of Aditya Birla Capital are quite positive. Their loan book is growing quite well. Apart from that, they also have the insurance businesses, which eventually will come for listing. Starting off with will probably be the life insurance. They also have a listed AMC business, which is doing well. The mutual fund business overall in India is doing quite well. So that aspect is taken care of. They're facing a bit of losses at the moment in their health business. But, as they gain scale, I think that part of the business will also start turning EBITDA neutral, and probably it'll take another year and a half before it happens. But as it turns profitable, you'll see the ROEs overall on the business is increasing. So we think the opportunity for Aditya Birla Capital is quite good. If he wants to add, yes, definitely. But you're not paying any different price than he did earlier. But we believe this is a good point to add on, and I think Aditya Birla will do well. Is it the top pick in the NBFC space for me? No, it's not. But it's a good company. It's a good growth business, and it's a diversified book. So that is a good thing about it.
All right. Gentlemen, I'm going to jump into the rapid fire segment. You both know what the drill is. I'll toss as many questions as possible your way. Try to catch as many as you possibly can. Interglobe Aviation is the first one that I'm asking about. Suresh Nair from Hyderabad has bought at levels of 4,015. Would you hold, though, Sameer, for the long term?
Yes, hold on for it. Business will do well. Growth is very good.
Okay, Canara Bank, coming back to you on the fundamentals. Can it be bought at the current price, which is close to 100? Sameer, on the fundamentals?
Yes, you can buy it at this price, but again, not the top pick in the space. Bank of Baroda is the top pick in the PSU Bank.
Okay, Reliance Industries, this one's for you. Kush, bought at price of 1,418. with a time frame of 6 months, would you hold or exit?
No, continue to hold. A deepish kind of a stop loss is at 1200, 1225 zone.
Okay. Fine Organics is the name of the counter. We've got Vishwa Kumar from Hyderabad, who's bought at price of 5,246. He's looking at a time horizon of a little over a year. What's the view, Kush, on the charts?
Continue to hold. 4550 is your stop loss.
Vishakha from Bengaluru is asking about Adani Ports at this current price. Samir has given up a little bit of ground in the recent past. Would you buy?
I would wait for corrections to buy.
Standard disclaimer, Adani Ports, part of the Adani Group. I'm taking time to say this. NDTV Profit also owned by Adani. ITC, bought by, or rather, would you buy for the period of 5 years? Vaibhav Shinkar from Vadodara wants to know. Samir?
Yes, I would buy. I think business from cigarettes is good. Business from FMCG will pick up and hotel demerger will help.
JSW Holdings, is this a stock that you would consider buying? Basavraj is asking. Any view on this one? Samir?
No, I would be looking to sell. I think the holding value of all his investments is about 18,000 rupees per share. The stock is trading above that. I would take money off the table. It's a holdco company of JSW.
Okay. NMDC, bought at price of 254. This is a question from Nirakar Sahu, who's writing from Visakhapatnam. What's the view, Kush?
Hold till the time 210 is held.
All right. That brings us to the end of this particular edition of the query segment. Kush as well as Samir, thanks so much for joining in, for answering all the questions that you did. Always a pleasure having you on the program. It is now time to turn to earnings, and in fact we've got the management of Century Plyboards joining in to talk about the quarter gone by and the outlook going forward. We've got Keshav Bhajanka, who is the executive director of the company. Keshav, thanks so much for taking the time. Would you be able to tell us about the volume growth and the value growth and take us through the trends that you've been witnessing in the quarter gone by and the outlook in the remainder of the year?
Hi, good morning. I'll take this segment by segment. So, if you look at plywood, I think that we have done exceptionally well on volume growth. We have been close to 20% in terms of volume growth, which is something that we have achieved after quite some time. I think in the second half of the year, this is likely to temper a little bit, but we'll be looking at a value growth of at least 12%. And in terms of EBITDA guidance, we would still be at 12 to 14%, which is what we had guided for the entire year. As far as laminates is concerned, we have missed our growth targets in H1 and in Q2 in particular. But I think second half of the year, we'll see a rebound in the laminate segment. So I'm looking at a 10% plus value growth in laminates. And alongside that, a margin recovery to 10 to 12%, which is what we had guided for the year. When it comes to MDF, we've had a very strong quarter in terms of volume growth, but there has been price correction from the last year, and that has impacted us. Now, in Q3, with the new capacity fully functional, with volume gains, operating leverage, and a product mix that includes more premium products, aided by a price increase that we have taken in November, I'm seeing that we'll have a 40% plus value growth, and the volume growth, of course, will be higher in the MDF segment. In particle board, there is raw material pricing pressure, as similar to what is in MDF. And I think there we'll be looking at a flattish growth with 10% plus EBITDA margin for H2.
Mr. Bhajanka, good afternoon, sir, and thank you so much for joining today. It's Puneet this side as well. Now, I guess, your EBITDA margins profits have also declined, a similar trend to the previous quarter. Now, correct me if I'm wrong, this is largely due to the timber prices as well. Just wanted to understand, where does the current environment stand? I think in the previous quarter we spoke, you mentioned that in the north it's about 6.5 to 7 rupees per kg for pricing for timber current in Q1. While it was around 5.5 in the south, blended was coming around the 6.5 rupees. Is it still at that price, or have you seen any kind of reduction which will benefit you as well going forward?
We all hope that we would see some reduction, but in fact, the prices have jumped up further. So I think that in MDF, there is no sign of prices abating. It is not, a scenario where we are very hopeful that in the short to medium term, prices are going to correct substantially. But having said that, now, finally, the market has moved back into a cycle where we can pass on the price increases to the market. You'll be happy to know that we have gone in for price increase in November itself, which will be blended between north and south, close to 3% or 3% plus. And I think this is the start of perhaps more price increases in the near future. So even with elevated timber prices, I think we'll be able to maintain our guidance of 15% EBITDA on standalone basis. And even on a console basis, considering that the new investment is going to start to pay dividends and it is going to start benefiting from operating leverage, we will definitely be at 10% plus EBITDA margins.
This is for the rest of the financial year?
Yes, for H2.
H2, got it. Does that metric change heading into next year at all, or are you anticipating that the raw material prices that you've seen, and of course you can't look that far forward, but assuming that we continue to see pressure on raw materials, and also when you're saying that price increases could take place, Keshav, could you give me a sense as to how much you'll be able to pass through and what kind of price increases you're anticipating in the second half?
So, like I said, in November itself, we have taken a blended increase of more than 3%. And, it is difficult to comment on future price increases and how much that will be. But I think we will take more price increases during the course of the current financial year. Next year, I think we will see a higher EBITDA margin, but I don't want to comment too much on that at this point in time.
Mr. Bhajanka, just wanted to deep dive into this pricing part, because in Q1 you had mentioned that there was a price hike of about 2% you had taken for the plywood segment, as well as for the laminate segment about 3% in August. But MDF you weren't able to take a price hike, which was the pain point. Now you are saying that you'll be able to take some in November. Did I hear you correctly? And is that the blended 3% as you're saying? Is that also for the MDF segment?
I'm talking about only MDF right now.
Okay, so a 3% price hike, you see it for MDF specifically in the month of November. You've already taken that.
Yes, blended meaning that for north and south, for the existing as well as for the new capacity.
Now, Mr. Bhajanka, I just want to ask you on the new facility as well. Your new MDF facility was ramping up and was expected to turn EBITDA positive in Q3 of FY25. Does that guidance still stand?
Yes, very much.
And yeah, please go ahead, sir.
We're very happy to state that Q3 will definitely be EBITDA positive, and we already have the data in from October, so we are more than confident.
And just wanted to talk to you about your guidance, because in this particular quarter, like in every quarter, you do give a guidance for the particular segments. Now, laminate segment, you have cut the guidance in this particular quarter for the full fiscal year. Talk to us why this particular guidance has been cut, and about the segment as well. If you could give us some light for Century, what's the reason behind the same?
So I think we have invested in a lot of fronts in laminates, but the fruits of the same are yet to come. So while we have invested in new capacity, which has larger sizes predominantly towards exports is a market where I think we were under the impression that we would make a dent far sooner than was realistically possible. So in the second half of the year, even the new capacity for laminates will be EBITDA positive and it will aid to growth. But I think that we are being conservative in saying that H2 we should look at 10% plus growth, and the rebound or the additional growth that should come in will be next year. In terms of EBITDA guidance, for H2 we'll be at 10 to 12%, which we had said earlier as well. Across segments, plywood we are consistent. MDF for standalone we'll be at 15% EBITDA guidance with 40% value growth. And for particle board, like we had said, the margins could be slightly lower due to timber prices, but we'll be flattish overall because the new capacity is likely to come in only towards the end of Q4.
Okay. So quite a bit of capacity coming on stream in your various categories. I'm just trying to understand, would that mean that a large part of the capex that you had planned is underway and nearly done? And what is anticipated heading to next year?
So you're absolutely right. Most of the capex is practically done, and the only large capex that is yet to come on stream is the particle board plant in Chennai. That is likely to come on stream within next quarter itself. So overall, I think we're in a position where, most of the capex is done, and now we shall start seeing the benefit out of the same from the second half of this year and from the next year for particle board.
Just a question on your capacity utilization in Andhra Pradesh currently. Where does that stand as of now?
Currently, I would say that we are at a sub 50% capacity utilization. Going forward, within H2, I think we'll definitely be at 50% plus capacity utilization.
And just one on realization quickly. Your laminate, as you mentioned, the guidance has been cut. So where does the current realization stand? I think in the previous quarter, it was around about 880 odd rupees per sheet. Is that still the level that it is at?
In the current realization, due to an adverse product mix, the overall realization has fallen. But like I said, we've already taken a price increase. So like for like, the prices have actually moved up. For the second half of the year, considering that in the Andhra unit, we'll be making compact boards, which, as you know, are far higher priced items, the overall realization is likely to improve.
Keshav, thanks so much for joining in and for speaking to us. Pleasure speaking with you, and wish you all the best in the second half.
Thank you so much.
All right, let's talk about one of the stocks that has been in focus today. By the way, the benchmark Nifty 50 coming back, I believe, while we were talking to Keshav, back to pretty much a flat line, very close to that point. This is the VIX, of course, but then, okay, very close to the flat line that you're seeing there, and some recovery. Let's see the broader markets as well while we're at it, to see where they're at and whether there's some recovery in that space as well. And there you go. So just a little bit of a pop taking place for both the mid cap as well as the small cap index as well. Let's hope that pans out towards the end of the session. But one stock I'd like to talk to you about, Puneet, and we have mentioned it on the program already, but since you're here, let's talk about what exactly Eicher management said that the street took so positively.
Yeah, I mean, the Q2 results were largely flat, so it wasn't about the results, but the commentary that they gave, and it's a strategy change in terms of Royal Enfield. So they've largely said that they'll focus on sales growth instead of margins right now. While margins are very high, 25 to 26% highest among two-wheelers, the sales growth target is something that the street was betting on. It has reported lower sales in the last 12 months. So that's a fundamental change for the company. And brokerages have just lapped up that commentary going forward. So I just want to highlight on Jefferies. They have a target price of 5,500 on the brokerage. And one of the most important things that they said, according to me, that the stock is just at a 15% premium to, its peers like Bajaj and Hero. This used to be 60% earlier. So the premium has definitely fallen compared to someone like a Bajaj. And that's one of the key things for MK. It's a double upgrade. From a sell, they've changed it to a buy. They have a target price of about 5,300 now versus 3,750 per share previously. So it's a very strong upside. And going forward as well, the marriage season as well as the highest sales that they reported in October should aid well for the company, Alex.
Yeah, and there's also a 40% increase in the price of Bajaj over the course of this year. So that is also aided in that change in the premium. But good talking on Eicher Motors. In fact, that brings us to the end of this particular edition of Ask Profit. It has been an absolute pleasure bringing it to you. From the team who put the show together, thank you so much for watching. Do stay tuned. There's lots more coming up on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So happy.
Hello and welcome to Hot Money. A very good afternoon to all the viewers. I am Hiral Dadia and with me is Mahima. Clearly Mahima, from a market perspective as well, pretty stable right now. No major cuts coming in from yesterday's session. It's a day where we've seen it's earnings heavy day as well. So the absolute attention is going to be on managements that we will be speaking to. But let's quickly shift focus, bazaar style. That's the first management that we have in store today. Let's quickly look at what the numbers have been so far. A strong demand scenario that has continued. Inventory days have reduced by 17. The same-store sales growth at 41% is what we've seen. Losses have narrowed, nearly halved. That would be the right way to put it. 65% growth in terms of top line as well, and margins have improved. To discuss more on this, Shreyans Surana, the Managing Director at Bazaar Style Retail, joins in. Shreyans, welcome to the show.
Thank you so much.
Shreyans, my first question coming to you is, losses are narrowing. Operationally, we are becoming pretty strong. From here on, what's the trajectory looking like, and is this year going to be back in the black?
Yeah, I think we have seen a good, as you said, rightly said, witnessing a strong demand from tier 2, tier 3 cities, and it is showing in our September numbers also, quarter also. And the same momentum has been carried from September to October. And the second half has always been good for us in terms of profitability. Last year also we did 31 crores in PAT in the second half, and looking for a stronger second half this year also.
Mr. Surana, for this particular quarter, I want to understand what is the volume versus value growth been like, because a lot of retailers are seeing pressure in terms of demand, but you've managed to see a strong demand. So overall, I want to understand whether it was on account of price hikes or your volumes have actually gone up. And secondly, I want to understand that when retailers are actually facing pressure, how have you managed to see demand and uptake? Is it the rural play that is playing out for you?
Yeah, so rural play is a very important part for us because we are majorly in tier 2, tier 3 cities, and it's a festive driven economy, you can say that way. And as you rightly said, the major part of growth for us has been through volume growth. So we are able to increase the basket size for every consumer that we are working on. And in terms of tier 2, tier 3, the festive weddings play a very important role, and the prices are very important for us. And that has been a key reason for our success or the growth that we are achieving, because we are seeing a lot of traction coming from unorganized to the organized market. Everywhere in the rural India also, people want to shop under one roof where they can get an experience, they can get an AC environment. So we are giving all the factors, price, product and ambience to the consumers. And that is why we are able to rope in lots of footfall from unorganized to the organized in our stores.
Okay. One question I have, Shreyans, for you is, between urban and rural, what's your revenue divide looking like? Because clearly, across managements, we've seen a common commentary that has come in that urban markets have been facing a challenge. Probably rural could come to the rescue. How is it looking like for yours?
So for us, if I say urban is the metro cities and tier 1, tier 2, there is the rural cities. So rural will be more than 90% in our scenario in terms of revenue contribution.
Right. Mr. Surana, you talked about the ambience and the feel of, coming to a shop and shopping. But, the trend, the way the urban is consuming is shifting towards e-commerce and quick commerce more now. And I believe that right now, I don't know if you're doing online sales or not, but I want to understand that with respect to strategy, is there any shift towards the online presence moving from stores going forward?
So right now we are developing the entire ecosystem around online because the online is doing good, but in our scenario, because the price is very attractive and we are just dealing in 33-34% margin. So at that price point with the logistic cost, even the onlines are not able to compete with the value fashion retailers. To be very specific, what we are trying to do is that we are also creating an ecosystem around the online, and for as of now we have created an omni-channel model in our stores where any person, if he wants to deliver the things at their store, their home or any office address, so they can ask the manager to deliver it to their places. But as of now the model is purely the offline model, and we are working on the online front.
Shreyans, if you're working to develop an online channel from here on, what's the trajectory expected to look like, say in the next 3 years? how much of your revenues will come from online, how much of it will come from offline, and overall from a margin perspective, how will it impact? What are you projecting?
So see, in terms of online, the major contribution will be from the offline stores only, because we want to build a profitable online model. We don't want to burn on online model, to be specific. So whatever we are trying to do is that we are trying to give the customer an experience of an online, but without killing our margins. So as a result, I think more 95 to 98% of the revenue in next 3 years is going to come from the offline model only. So maybe 1 to 2% will be the target for the online front. Maybe in, as you said, in 3 years, next 3 years.
Rana, just one more question on this particular aspect. You know, you said that you're building your online presence. Will it be through your own website, or are you planning to distribute your brands towards the already established e-commerce and quick commerce players?
So it will be largely through our own website that we are going to develop in coming years, and then as a marketing we will be present over all other marketplaces also, but the major sales drive target will be from our own website.
All right. Mr. Surana, one more thing in terms of the sales per square feet. You know, for this quarter, it was up around 38% for you. But I want to understand that, is this because of, you know, overall reduction in per square feet area, or something else is playing out? Is it because of the demand scenario?
So both the factors have played in this particular quarter for us. One of the major reasons is the shift of one of the festives from October to September. So 10 days shift in the festive has played a bigger role in increasing the sales per square feet. Apart from that, if you see the entire half yearly also, so we have grown in the older stores, L2S stores, at a rate of 21%, like-to-like growth in the same stores. So I think both the factors have played a important role in increasing the sales per square feet for us.
Okay. So from here on, you know, if you're talking about same store sales growth as well, and if you have to look at the third quarter, you have the wedding season which is ongoing, right? If the second quarter has been so good so far, do you think the third will be stronger than this? And if so, what is your FY25 expected to close with?
So for the first half, we have done a growth of around 21% like-to-like growth, and the guidance for the entire will be between 9 to 10%.
Right. Mr. Surana, any kind of geographical expansion plans on cards? Because right now you're concentrated mostly in the west side of India. So going forward, do you plan to expand further in India?
So we are mainly considering the eastern part of the country, where the concentration is on the Bengal, Odisha, Bihar and Jharkhand. UP and Uttar Pradesh is will be and Jharkhand will be the focus states for us. So going forward, we are exploring these states, UP and Jharkhand.
Shreyans, apart from that, if you see from a private label perspective as well, 45% comes from there. Others is 55. So are you seeing a shift happening in terms of the contribution from the both sides, or does it remain at this?
So basically, we are working a lot on our private label strategy, and we want to work a lot on designing part. That's why we have, from last year, we have grown substantially on the private label side. For the entire year, our target is to build around 50% of the revenue from the private label. So our target for this year will be to have a 50% revenue coming from the private labels.
All right. Mrs. Rana, in terms of, you know, how things are shaping up for the company, I just want to understand that going forward, in terms of the supply chain side of things, you know, you are adopting and investing in the supply chain side of things. Do you expect margins to continue to get better going forward? And if yes, can you quantify that amount for us, that how much will margins get better by?
So typically the range for the EBITDA will be around 14 to 15% for this entire year. And one of the biggest advantage that we get as a value regional player is that our concentration is like a cluster based model that we have got. So whenever we are opening a store in a particular geography where we have a larger presence, it helps us to optimize cost in all the fronts, not only on the supply chain, but all the other costs like marketing cost or the manpower cost everywhere. So we will be able to maintain this 14 to 15% of EBITDA growth in spite of growing at a rate of 25% that we have grown in past 6 years. And this year also the guidance is around to grow at 25%.
Okay. And with regards to store expansion as well, what is the strategy in terms of funding the store expansion, and how are you looking at that side of it?
So in the first half, we opened around 25 stores and we have shut down 3 stores. And the guidance for the second half will be also to open around 20 to 25 stores. For the entire year, we will be opening around 45 to 50 stores. And all the stores opening will be funded from the internal accrual itself.
Okay, so store expansion is expected to be from internal accruals. Apart from this, any shift in strategy that you're seeing so far, taking into consideration, how the markets are panning out, any shift from what you had actually planned?
So we are sticking to our strategy because in terms of numbers, that the way that we are targeting, they are getting that results. So we will be shifting to the original plans only to open stores in the core geographies that where we are present and to explore the nearby territories only. For example, as I said, the core geography for this is Orissa, Assam, Bengal, and Bihar. So we will be opening around 70 stores, 70% stores of the total store that we have targeted in this geography only, and 30% will be open in the focus geographies like Uttar Pradesh and Jharkhand. So strategy will be similar.
Right, so strategy continues to remain the same going ahead as well. And interestingly, 14 to 15% is the kind of margin that continues to remain as a guidance for FY25. 10% growth is what the company is targeting as well. Thank you, Shreyan, so much for joining us on the show and sharing the views. So that's the management of Bazaar Style. But moving on, let's look at Eicher Motors, an interesting one to watch out for in today's session with the kind of gains that we are seeing on the counter. 7.5% to 8% is the kind of up move on the back of the earnings that have been reported. Puneet joins us to get us more in terms of what has worked this time around, Puneet.
Well, thanks for that. So, the results were largely flat, a 3% revenue growth and an 8% growth in profits. But the commentary by the management is what's enthused the stock today. They have mentioned that there is a serious change in strategy for the company. Growth is the key focus area going forward in terms of sales. And that's a very change compared to the previous quarter as well as the year as well, where they preferred to have higher EBITDA margins for the company. Now, with higher, growth in sales, it will, of course, increase the absolute EBITDA margins. But the margin itself, the absolute EBITDA will be increased with higher sales, but the EBITDA margin might, get lower to around the 25% range. It'll still be the highest in the two-wheeler industry, and that's the strategy that the management has taken. Street has been worried about the sales growth because it's been the lowest, around 7 to 8% in the last year, while the likes of, TVS and Bajaj have been higher by roughly around 12 to 13%. So that's a big differential coming in for most players, and going forward as well with the change in strategy, it should work. In October, they reported roughly 1 lakh sales in a particular month, the highest ever since listing. They have also said that the marriage season in November will also be very positive for the company, as inventory is around 2.5 to 3 weeks only, and brokerages have also upgraded the stock. I just want to talk about a couple of them. Jefferies has a buy with a target price of 5,500. It's a 20% upside, and the most important line from the brokerage, I thought that the stock is at a 15% premium to players like Bajaj as well as Hero because of the premium aspect, but this used to be 60% over the last 8 years. So definitely the premium has reduced, and a better value, it's a better value for investors going forward as well. The other ones, of course, Nomura, they've upgraded to a neutral from a reduced earlier. Target price is 4,300, a little lower than the current market price, but they mentioned that the new strategy addresses the long-term concern of sales growth. So overall, we have seen multiple upgrades. MK has also upgraded from a sell to a buy. They have a target price of 5,300 versus 3,750 earlier, and most have taken up this new strategy very positively.
Right. The current strategy seems to be positive. Thank you, Puneet, for getting us the numbers. Puneet, I'm going to come back to you as well with a Bharat Forge, but let's quickly pull up that stock on the screen. The company has just reported numbers. If you see the margins, 17.5 versus a 16.5, 100 basis point improvement on a year-on-year basis. With regards to the revenue as well, a mild growth, so a mild downtick coming in there, so a pretty flattish number in terms of where the revenues are concerned. And in terms of profitability, a 13 to 13.5% kind of up move is what we've seen in terms of Bharat Forge as we speak. A slight uptick coming in from the day's low. 1300 was the day's low. As of now, the stock is trading at around 1327. 0.5% up move coming in terms of Bharat Forge. Puneet, if you have looked at the numbers, I know I'm just putting you on the spot right now, but from the numbers that I have told you so far, I'll just repeat it for you: 17.5% on the margin front, a 3,689 crore revenue number, and a profit number of 243 versus what the street was estimating. What would you have to say about it?
Definitely, the revenue number is something that's a little bit of a worry because analysts had estimated it to be somewhere around the 4,000 to 4,100 crore range. Now it's coming around 36 to 3,700 odd crores, so that's clearly a concern. We will deep dive into the numbers, but it looks like the foreign subsidiary is something where they might have reported lower growth. So we'll deep dive into what led to this revenue fall. But that's definitely one of the concerns. On EBITDA as well, is reported around 647 odd crores. It was expected to have about 748 crores. So it's roughly about 100 crore miss on its EBITDA as well. Margins were expected to come in at roughly about 18.2%. They've come in at roughly 17.5%. So not too big of a miss, but a 70 basis point miss on that as well. While profits were expected to be around 3,378 crores, while it's come in at 337 odd crores, while it's come in at roughly about as you rightly mentioned, 243 crores. So a slight miss. Actually, it's a very big miss on the margins as well. But we'll deep dive into the numbers. It seems like the profits might be impacted because the foreign subsidiaries, they had been undertaking operations to reduce the losses in the foreign subsidiaries as well. It could have been one of the major reasons for, because the domestic business has been growing very steadily as well. It'll be interesting to see what happens with the foreign subsidiaries and also North American truck orders. They have been stagnating, but a slightly better outcome in H2 versus H1 is what the analysts had expected. Overall, in the long term, we know that by 2027 we are expecting new norms to come in the US, which will trigger a pre-buy in FY26. So some commentary in that will be one of the key things to watch out for. But overall, results look like slightly of a miss.
Absolutely. In fact, the investments and the subsidiaries that you're talking about as well, Bharat Forge Global Holding, Bharat Forge America, as well as Kanyali Powertrain, they've approved an investment of almost 1,122 odd crores. That's equity investment in the three group entities. We will get Puneet once again later on during the day to get us more details. But moving on, Adishman Carbogen, a spectacular set of numbers that have been reported. The stock has been on a high since the day today. 16% up move coming in there. Varsha joins in with more. Varsha, what's worked?
Well, yes, Hiral. So pretty good numbers actually, and CRAMS segment is the only reason that we are seeing good numbers. Now, CRAMS is Contract Research and Management Organization, wherein an entity research about a drug, develops a drug and manufactures it for innovator company. So over here, if you see, CRAMS revenue increased almost 52%, primarily due to higher commercial sales and also rollover of certain shipments which got pushed to Q2 from Q1. If you see that APIs and intermediaries revenue was increased almost 37% due to increase in the commercial sales, but the generics revenue decreased by almost 21% due to slowdown in the agrochemical sector that we are seeing. EBITDA margin increase is due to, of course, CRAMS segment because it's a high margin segment from 12.2% to 19% due to higher volume of commercial sales, and company did almost capex of $15.9 million in H1 FY25. Going ahead, company has a strong basket of about 16 APIs, which are the main salt which we use in a drug in phase 3 development, and the company is focused in improving its capacity utilization and has set up a small scale manufacturing facilities in Switzerland and injectable manufacturing facility in France for future growth.
All right, Varsha, thank you so much for breaking that down for us. Moving on, another company that is in focus is Uflex on the back of its Q2 earnings. In terms of how the quarter has gone by, it's a mixed quarter. There has been some pressure on the profitability side of things. There has been a double-digit revenue growth, but margins have contracted. And to discuss as to how the quarter has gone by and how things are shaping up for FY25, we're joined by Mr. Rajesh Bhatia, the Group President of Finance and Accounts and Chief Financial Officer at Uflex, who joins us now. Welcome to the show, Mr. Bhatia. My first question to you is that overall, how have things shaped up for Uflex in this quarter? I understand that there is some pressure on margins and losses. Net losses overall have also widened, and this is on account of an exceptional loss, I believe. Give us some more details as to how you are interpreting this quarter and how are things shaping up in second half.
So interpretation of this quarter, I think we take it as a continuance of the strong growth, that we had in the Q1. Revival in the packaging films market, which continues its momentum in the Q2 as well. So just to give you, while the revenue and the EBITDA numbers are all before you, I think we have to take it at we have to look at it at normalized revenue because, that is what is without any exceptional items and all that. Yes, the packaging films prices in India in the PET segment rose by more than 200% in Q2 versus Q1. And in the BOPP film segment, they rose by about 36% as compared to Q1. So, and the same momentum in the BOPET prices continue even in the current quarter. So that's been the strong story since the Q1, which has, sort of multiplied in Q2, and the same momentum continues in the current quarter as well. So the margins are a little bit impacted on an overall basis from a 12% to about 11.4% on a normalized EBITDA basis, simply because of one thing that, when there is such a sharp increase in the raw material prices, the packaging segment, the flexible packaging segment has to bear the burn because there is always a lag impact in that. And I'm happy to state that, the current quarter, when these prices with the lag impact is removed, so their performance will also show up along with the packaging films production, the business showing up in Q2. And we should look at a healthy about 13% EBITDA margins in H2 on that basis.
Okay, so you're saying a 30% EBITDA margin in H2. Does that mean that the second half, 13, right? Okay, so 13% EBITDA margin. And when do you see the company back in the black? Because last couple of quarters, we have been seeing losses. I'm sure it's because of exceptional items, but when do you see the company back in the black?
I think we more or less now done with the exchange losses. Current quarter, we've not seen any much impact of any exchange losses. So it should normalize from here on now, and the dollar interest rates are already starting to lower. So that should impact the currencies in those, emerging markets, especially Nigeria and Egypt. So hopefully, that event is behind us. But we have to understand that in greater detail because there we do the business in the local currencies, which is Naira and Egyptian pound. And when you transact in those currencies and those currencies, reporting currency is rupee currency, so there are bound to be translation losses impact due to when you consolidate that into an INR currency. So, but largely I'll say that while they impact the face of your P&L as an exceptional item, they don't impact any operational matters or for that matter any your financial strength or your outflows, cash impact. So there's none of those impacts, on because of that on the business.
Mr. Bhatia, I want to understand that the raw material prices are inching up and they are kind of putting pressures on your margins. I mean, if I see the margin trajectory also, it has been in the range of 11 to 10% in the past few quarters. But there was a point of time when margins had, risen to even 14 to 15% as well. Do you see going back to those margins, or do you expect margins to remain in the same levels?
So I think as we go into FY26, where FY25 H2, we going to commission our PET chips project in Egypt. We are going to commission our 5 billion extra capacity in aseptic business. So these two are going to help us improve our margins. I think if we expect the margins what we had in the period of FY22 and 23, I don't think so that that would be the right measure to look at the margins. But with the profile, with the aseptic packaging business, volumes going up with the increased capacity in India, and then later next year, the aseptic packaging of 12 billion packs coming on stream in Egypt, which has a higher margin profile as compared to your packaging films or packaging business. I think we can look at, on a full operational scale for those projects, we will surely target overall blended margin of about 15% for sure.
If you have to look at domestic versus international, your domestic business contribution has risen to 45 versus 41 earlier. Where do you look at where do you see that settling? Is it going to be where domestic is expected to increase from here on and you're going to reduce international, or the reverse?
So I think as we go in the years FY26 and beyond, we will see our international operations, becoming more dominant. They are already dominant as compared to the Indian balance sheet. Because the extra new capacities, whether it is PET chips or aseptic, they are coming in the offshore markets, and we had only till date only one product, which was the packaging films, which we had taken from India to the global markets, and we are there and present in about 9 countries in that particular business segment. So the endeavor is now, riding on the success of our aseptic packaging story in India. We are confident that, we'll replicate that success in the overseas markets as well, the same way what we did in a packaging films business. Our packaging business per se, because of the conflict with our customers who buy the packaging film from us, I think that will remain largely domestic business for us. But these two businesses, while India will have also its due share in the growth of these, but if you look at the international markets, I think the horizon is much, much bigger. And over the years, when we took our packaging film business overseas and we see what are the capacities in India versus the capacities in the global consolidated level, we get our answers, and we are much bigger in the overseas markets in that particular business segment as compared to what we had in India, though we started in India. So we have the same vision for aseptic business as well. And, the next few years will, we sure that, we'll be able to do much better in that particular business segment in the global markets as well.
Right. So thank you, Rajesh, so much for joining us on the show and sharing the views. So that's with regards to where UFlex goes. Interesting times that are ahead. The second half, Mahima, is something that we will be watching out for. But completely out of time. With that, it's a wrap from Mahima and me on this edition of Hot Money. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Benchmarks trade flat at noon, pair early gains as consumption giants like HUL and ITC weigh on the indices. The Nifty is above 23,500, whereas Sensex is above 77,500. Broader markets outperform. Sectoral action mixed with sharp gains from realty and media, whereas FMCG drags, banks recover. Niva Bupa debuts with muted gains, lists at 6% premium over the issue price. Prime Minister Modi will hold a rally in Mumbai's Shivaji Park as a part of the Mahayuti Alliance's campaign ahead of assembly elections in Maharashtra. Chief Minister Eknath Shinde and Deputy CM Devendra Fadnavis and others to be among the attendees. Hello and welcome. You're watching Market IQ. Good afternoon, and this is Malika Mishra. Let's take a quick look at the markets first. The benchmarks, both NSE Nifty 50 and BSE Sensex at this point of the day are around 0.8% low, where Nifty 50 is trading around 23,500 levels, and the Sensex, on the other hand, is around 73,500 levels, around 0.06% less. Speaking of the broader markets, we'll pull up that as well. Nifty Mid Cap 150 is over 0.7% up, and Nifty Small Cap 250 is over 1% up, clearly outperforming the benchmarks. Now remember, the day at present does not look as volatile as yesterday, because the last two trading sessions were extremely volatile, totally bearish, but right now the market seems to be more on a muted note, but with a bias towards the negative zone. Now let's take a quick look at the Nifty 50 contributors. Stocks like ITC, HUL, L&T, Bharti and NTPC are significantly dragging down the street. These are, remember, heavyweight consumption stocks. On the other hand, there are also stocks like HSBC Bank, RIL, Eicher, Kotak Mahindra, which are providing some relief to the market at this given point of time. Then let's quickly also pull up the advanced decline ratio and take a look at what that looks like, and you will see that it is not as bad as yesterday. There are around 1,340 stocks in favor of advances and 789 stocks declining at this given point of time. Well, also let's take a look at the sectoral indices quite quickly. You will see Nifty FMCG is the biggest drag on the index, followed by pharma, IT, oil and gas. On the other hand, there are media and realty, which is providing some relief again and rallying in trade. We'll move on with the show now. PI Industries is in focus after the company slashed FY25 revenue growth guidance. Varsha joins in to give more details.
So yes, company is in focus. If you see, the stock is down almost 7%. Now, because they've reduced their FY25 guidance to high single-digit growth. Now, they were expecting 15% growth for FY25, but now that has been reduced. Now, this is on the back of weak pharma performance. Previous revenue guidance was around 15%. Now, but let's look at the numbers. So, numbers were actually in line, or pretty good set of numbers that beat estimates, wherein the acceleration in Q2 FY25 numbers on the back of exports. Their CSM exports, that is custom synthesis, saw double-digit growth with new products up 42% year-on-year. Domestic revenues though declined due to reduced supply to institutional customers and due to ongoing pricing pressure that we are seeing in the chemical segment. The pharma segment, so basically they've reduced their guidance because of this pharma segment. The profitability remained drag. Flat revenues were seen sequentially, but management is expecting H2 FY25 good based on the order book that they have. EBIT loss narrowed for pharma segment to 50 crore versus 70 crore in Q1. Margin increase that we are seeing, that EBITDA margin increase is due to the better product mix and operating leverage. While if you see, the net profit would have grown much, but it's just grown 5% because of the tax rate, which was 23% versus 6% last year. Lastly, if you see, Jefferies has a buy rating with target price of 5,100, upside potential of 12%. Now, according to them, the overall revenue met expectation. Domestic business was in line and pharma was slightly above. FY25 guidance have been taken into consideration while they have given this buy call. While pricing pressure, according to them, is expected to persist in upcoming quarters, and management is expecting improvement in H2 FY25 as per Jefferies also.
Right, Varsha, thanks for that update. Now let's shift focus to Eicher Motors. The stock is buzzing on the back of Q2 earnings and a series of brokerages offering a positive outlook. The stock is also about 7.5% up in trade. Puneet joins in to tell us more.
Well, thanks for that. The Q2 results was largely flat, just about 3% growth in revenue, 8% growth in profits. But the management commentary in the earnings con call yesterday was driving the positive outcome on the street today. They have changed their strategy dramatically to a growth over EBITDA margins going forward as well. This essentially means that they'll be focusing more on sales growth rather than the EBITDA margins of about 25 to 26% that they do. What this will do is that the revenue as well as the EBITDA, absolute EBITDA, will increase going forward as well, and that will be beneficial for the street as well as the stock going forward, because the sales volume has been really disappointing over the last 10 to 12 months, while peers have outgrown the industry as well. Apart from that, a very strong festive season in the month of October. They crossed the 1 lakh sales mark in the month of October for the first time in its history. They have also mentioned that this will continue in November as well because of the marriage season. So a lot of planned purchases around the auspicious period. That's another key positive for the stock as well. And because of that, the inventory level has reduced dramatically to about 2.5 to 3 weeks itself. So replenishment of the same over the next 6 weeks will benefit the wholesale volumes of the company. Apart from that, that's the basic on the Eicher Motors. They have also this has been taken by brokerages in a very positive way. Jefferies maintains a buy at 5,500 as the target, which was a 20% upside from the previous close, roughly about 12 to 13% now. They mentioned that the last 12 months volumes have been subdued, but one of the main things that they've said is the toughest phase in the competitive intensity is over, and they now see that the stock is trading at a 15% premium to Bajaj Auto versus 60% that it did over the last 8 years. So definitely valuation is also better for the company. Nomura has upgraded it from a reduced rating to a neutral now. They have a target price of 4,391, and they mentioned that the company's new strategy addresses one of the key concerns of lower sales volume in this particular quarter. Last one, I just want to talk about Nuvama. They've upgraded to a buy from a hold earlier. They have a target price of 5,500 again, and they mentioned that this should aid sales growth of about 12 to 13% over the next 5 months for the company, and that should benefit their earnings estimate of about 9 to 11% that they're estimating over the next 2 to 3 years. So overall, a big thumbs up on the management commentary and the new strategy going forward. Stock is rewarding what the management has thought about.
Right, Puneet, thank you so much for that update. Now, Nalco reported a multi-fold rise in its profit, while Torrent Power's shares cracked after its profit declined by over 8%. Let's go across to Mihika for more on both the results. Mihika, over to you.
Good afternoon. I'll start off with Nalco. The Q2 results were a great set of numbers. The stock hit an intraday high of around 5%. It's paid some of those gains, but revenue was up 31%. EBITDA was up 290%. Margins growth stands out. They expanded 2,500 basis points to 38% versus 13% previously, and net profit was up, saw an uptick of 458%. Now, when you talk about why revenue growth was higher, because higher average aluminium prices during the quarter, and the aluminium EBIT was 4.2 times higher on a year-on-year basis. Margins were also aided by a 32% and a 22% decrease in raw material and power and fuel costs, and the company has noted positive domestic business environment, and that can be seen in its volumes. H1 FY25 reported higher accumulated domestic sales of 2.21 lakh MT. We also had Motilal Oswal come up with a note. It's maintained its neutral rating but hiked the target price to 420. Q2 results were broadly a beat on favorable pricing, and they've raised their FY25 revenue, EBIT and net profit estimates by 9%, 27% and 32%. They also expect the second half of FY25 to be better. EBITDA and net profit could grow in the range of 24 to 30% on a year-on-year basis as per Motilal Oswal. The brokerage also highlighted the exploration and lithium mining deal, which will help diversify Nalco's product portfolio and enhance supply chain, and they expect the next growth of phase only to come in after the 1 million ton aluminium Alumina refinery capacity does get added by May of 2025. Then we have Torrent Power, not a very good quarter. Revenue was up 3%, but EBITDA margins and net profits did see a decline. The muted revenue growth was because of lower renewables and generation segment revenues, which fell 20 and 6% respectively. Now, thermal contribution during the quarter took a hit because of lower merchant sales, and this was because of low electricity demand. While on the renewables side, there was lower plant load factor, which is basically a capacity utilization on account of weather conditions and partial commissioning of solar projects that hadn't stabilized yet. Margins were impacted by the muted top line, like I mentioned right now, and a 7% higher electrical energy purchases, and net profit was impacted by higher deferred tax charge of 165 crores. Lastly, when you talk about capacity, installed capacity currently stands at 4.8 gigawatts with 2.9 gigawatts capacity in the pipeline, and the company aims to grow its renewable portfolio to 4.4 gigawatt, and they've also have pumped hydro storage sites and projects of 8.4 gigawatts currently under planning stages in the states of Maharashtra as well as Uttar Pradesh.
Right, Mihika, thank you so much for that update. Now, Thermax stock declined by 4% even after reporting stellar Q2 results. The company's earnings surpassed market expectations across several key metrics. We spoke to Ashish Bhandari, who is the CEO and MD of Thermax, about the key drivers of growth. Listen in to what he had to say.
I would want to take 2 points out. One, on the order side, when we started this year, we had talked about how this year, we do expect some bigger orders to start coming back, because all of last year we were working with work that was going on, but we really didn't see too many big orders coming in. This year, that trend should reverse, and Q2 is a good example of that. Even as we look at the next 3-4 quarters, we have got other bigger opportunities also in play. If I take that big opportunity out, we have been growing steadily in a lot of the rest of our business. Industrial products has been growing double digit now for multiple years, and we see that trend continuing at least in the near future as well. On the margin side, there was one exceptional item in Q2, which was not unexpected. This relates to a PSI, a production-linked benefit that we got from the Maharashtra government, which is a scheme that one of our new plants was part of for some time. But now that the assurance of the benefit coming through is certain, we started to show this. This will continue in smaller amounts for a period of time, but this was a one-time, relatively bigger number that we showed in Q2. If I take this number out, actually our profitability was slightly below what we would have expected, and that is driven by continued challenges that we have on the execution front on bigger projects.
Let's now take a look at the listing of the day. Niva Bupa Healthcare shares debuted on the bourses with muted gains, driven by a robust demand from retail investors. The IPO of Niva Bupa Healthcare sailed through on the last day of bidding. Listen in to what the management had to say about the company's growth prospects.
Insurance is a long-term business, and our parent shareholder Bupa has been around for 80 years. So timing, to be honest, really doesn't matter. What matters is we're solving for the capital structure of the company, we're solving for permanency, and we are a long-term player, so I'm not worried about timing.
From markets to macro data, the wholesale price inflation for October has jumped to a 4-month high. The core inflation came in at 0.3% versus 0.1% in September. Speaking of subsections, manufactured products inflation at 1.5% versus 1% in September. Fuel and power inflation came in lower at 5.79% versus 4.05% fall in September. Food articles, a major basket, was up to 13.5% in October versus 11.5% in September, whereas wholesale prices rose to 2.36% versus 1.84% in September. Enforcement Directorate is reportedly investigating a money laundering case involving a Milligan-based trader. Now, this trader allegedly conducted transactions worth over 100 crore rupees using unauthorized bank accounts. ED has raised 23 locations in Maharashtra and Gujarat where large number of bank accounts were allegedly opened through fake documents. Now, these raids have taken place in Malegaon, Nashik, Mumbai, Ahmedabad and Surat. The investigation originated from a recent Malgaon police FIR against a person, which brought to light the issue of unauthorized use of the person's bank account for illegal transactions. This raised concerns over possible election fund routing. This comes days ahead of the Maharashtra Assembly elections. Now, thousands of Uttar Pradesh Public Service Commission UPSC aspirants staged a protest outside the headquarters of the commission in Prayagraj on Monday against the decision to conduct the preview officer and assistant review officer RO and ARO examination and the provincial civil service PCS preliminary examination on different dates and in multiple shifts. The protesters, who were demanding that the exams be conducted in a single shift on the same day, clashed with the police after they were prevented from holding a scheduled sit-in at gate number 2 and 3 of the commission. The police resorted to lathi charge to disperse the agitators who gathered at a nearby intersection. And with Maharashtra elections around the corner, Prime Minister Narendra Modi is all set to address a rally in Mumbai. The rally is a part of the ruling Mahayuti Alliance's final push ahead of the Assembly election on November 20th. PM Narendra Modi's rally in Dadar is expected to draw a massive crowd and will also be attended by Maharashtra Chief Minister Eknath Shinde, Deputy CMs Devendra Fadnavis and several other top Bharatiya Janata Party leaders from the state. In fact, major traffic changes have also been accounted for in order to prevent congestion and ensure a smooth road show. My colleague Jui Jadhav brings in more details on this.
Prime Minister Narendra Modi is all set to address a rally today in Mumbai at Dadar's Chhatrapati Shivaji Maharaj Park, and as you can see right behind me, the preparations for this rally is almost complete. And today evening at 6 o'clock, Prime Minister Narendra Modi will address Mumbaikars, will address the entire Maharashtra today through this rally for the upcoming Assembly elections 2024. The Mumbai Traffic Police has issued an advisory for the day amid this tight security. Also, the rally is part of ruling Mahayuti Alliance's final push ahead of the Assembly election on November 20th. Prime Minister Narendra Modi's rally in Dadar is expected to draw a massive crowd and will also be attended by Maharashtra's Chief Minister Mr. Eknath Shinde and Deputy Chief Minister Mr. Devendra Fadnavis and several other top BJP leaders and other alliances leaders. Also, the 36 candidates who will be constituting from Mumbai will be a part of this rally, and Prime Minister Narendra Modi will be addressing this rally especially for these 36 candidates. So definitely this rally is drawing attentions because this rally is the last rally for Mahayuti and for Prime Minister Narendra Modi in Maharashtra. After this, on 20th, when the election dates are due, when the people will vote, at that time we will see the result that who the people have trusted, and will Narendra Modi's speech that he'll give and his presence today will influence Mumbaikars and Maharashtrians.
Right, Joey, thank you so much for that update. Delhi's air quality remained in the severe category for a second day today. Low wind speed contributed to a thick fog layer across the city. Let's go across to Ishika Verma for more. Over 300 flights were delayed at the Delhi airport. Ishika Verma is here to tell us the details.
Well, Divya, as you rightly mentioned, we are seeing that, in fact, for the second day straight, the air quality index here in the national capital has been recorded in the severe category. As per now, if we talk about the AQI index, stands at 423. Now, if you talk about places, if you talk about, in fact, Ashok Vihar, Anand Vihar, Chandni Chowk, Central Delhi, everywhere, in fact, most of the areas here in the national capital, 400, has been crossed in terms of the AQI. But certainly yesterday, a meeting of CAQM was held where, in fact, it was termed as an episodic event. The CAQM, in fact, also said that from today onwards, there will be a declining trend in the air quality as the wind will, be stronger. But till now, that certainly doesn't seem to be the case. So we are expecting that another meeting of the CAQM will be held soon. And after that, the decision whether or not to implement or invoke the Graded Response Action Plan Stage 3 will be decided. But right now we are standing outside the Delhi Secretariat, and inside a very crucial meeting of the Environment Minister Gopal Rai is underway. In fact, he is holding meeting with all the departments which in fact are involved in steps that are being taken to curb pollution. But as of now, the big question remains that currently the review meeting that is going on, so far we have seen that the top court also has questioned the implementations of all the restrictions that are already in place. So that is also the concern that is being raised by the residents, because after all, they are not seeing any impact and they are not getting any relief till now. Over to you.
Right, thank you for that update. Now, viewers, Ipca Lab has reported Q2 results, and I'm going to quickly read out the key numbers for you. Net profit is at 58%, around 229 crore versus 145 crore year on year. Then we go to revenue, 15.8% at 2,355 crore versus 2,034 crore. So that's up again. Consolidated. These are all consolidated numbers year on year. Then we go to EBITDA, that's at 22.8%, around 442 crore versus 360 crore, so again up. And finally, we have margin at 18.8%, quite healthy, around 19%, that is, versus 17.7% year-on-year consolidated numbers. Moving on with the show, we'll go to the next story, and what we have in line for you is HAL earnings. Even HAL has come out with its numbers. HAL is reporting a net profit of 22% at 1,510 crore versus 1,237 crore. That's again up. These are again consolidated numbers YOY, and as you can see, HAL is down in trade today. Revenue again 6% at 5,976 crore versus 5,636 crore. EBITDA at 7.4% at 1,640 crore versus 1,528 crore, and margin is at 27.4% versus 27.1%. So margin from all the numbers for HAL has the least difference. Now we'll move on with the show. Speaking of earnings, Dishman Carbogen is the stock in focus today. The company has reported profit in Q2 versus loss in Q1. Varsha joins in with details.
So pretty good set of numbers. Now this is on the back of CRAMS, that is contract research and or management organizations. Now this what CRAMS means is that you research about a product, you develop a product, and then you manufacture it. So over here, CRAMS is the segment which has led to this growth for the business. CRAMS has increased 52% for the company, primarily due to higher commercial sales, and also rollover of certain shipment got pushed into Q2 from Q1. If you see that API and intermediates revenue increased almost 37% year on year due to increase in the commercial sales, and the generics revenue actually decreased 20% due to slowdown in the agrochemical sector that we are seeing. The EBITDA margin increase is due to increase in the CRAM segment from 12% to 19% due to higher volume of commercial sales. Now if you see the capital expenditure in H1 FY25 was around $15.9 million, and the company has a strong basket of 16 APIs, that is the main salt that is used in a medicine. So they've got 16 APIs in late phase 3 development, and the company has set up a small scale manufacturing facilities in Switzerland and new injectable manufacturing plant in France for future growth.
Right, Varsha, thank you for that update. Now with that, viewers, it's a wrap on this edition of Market IQ. Sorry that I fumbled, but as we do that, we leave you with some market opinion from Parag Thakur of Fort Capital, who's betting big on stocks like ICICI Bank and Emcure Pharma. Listen into why.
So first of all, see, I'll start with the fact that the starting point valuations were high. That was the one reason. Trump trade has begun, so dollar index and US 10-year bond yields are rising, so FIs have been selling. Right now, in this entire negative macro setup, I would like to highlight the positives, right? Positive. For example, if you see the results, or even I would highlight first in the large cap bucket and then in the mid cap and small cap bucket, the results which were good which were completely ignored by the market because of FII selling, right? So first of all, let us come to large cap. Large cap, HDFC Bank did what it was required to do. They brought the CD ratio down by 5%. Their ROE is still sustaining at 1.7, 1.8%, correct? And their asset quality is best. Credit cost is 50 bips, right? 50 bips on a lower loan book growth, which is just 6% loan book growth, because they are forced to bring down their loan book growth because to bring their CD ratio down. Their deposit franchise continues to be strong. They did 1,20,000 crore of deposits this quarter, so that was a good quarter. ICICI Bank, fantastic results. PPOP growth of 15%, which completely beat the market estimates, because now they have a new shot in the arm, which is OPEX. Now OPEX to asset ratio for ICICI Bank is coming down, right? So I think ICICI Bank continues to consistently surprise market on the positive side, and rightfully so. Now it is trading at a significant premium to other banks, and they are sustaining their ROA about 2.2%. SBI, such a large bank and a proxy to Indian economy, credit cost only 50 bips. What more you want?
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. Now, this show gets you actionable insight on everything mutual fund related. And by the way, if you've got questions for us, you can send them on that number that you see flashing on your screen. Before we get to the topic that I've chosen for today, I would like to talk about some data that has emerged from the portfolios of mutual funds at the end of last month. We've actually managed to compile them. Most of them come around the time of 13th or the 14th of the month. And there's some interesting talking points that have emerged there. The aggregate cash that has been held by actively managed equity schemes has fallen for the first time in this financial year in the month of October, but that needs to be put into a little bit of context. We've discussed in the past, and I would actually want you to pull the next slide up because that talks about October and the more recent data. We've actually seen an unprecedented amount of selling by foreign institutional investors in the past month and a half to 2 months, but that's more or less been matched by domestic institutions. That's been led, of course, by mutual funds. And the feeling was that mutual funds are using the significant cash holdings that they've accumulated from retail investors to buy at these levels. The thing is, the reduction, if you look at the value, 1.49, you won't even see the difference because the decimal points are the same. The difference is about 500 crore between September and October, less in October than September. And so you will think, where is the deployment taking place? The difference is only 0.3% lower on a sequential basis. Now, you have to understand that in the month of October, there was an inflow into equity mutual fund schemes of over 40,000 crore, close to 42,000 crore rupees. So mutual funds have deployed all of that and perhaps a little bit more. But the interesting part is this, they still have a significant amount of cash, or had at the end of October, because with the assets falling, the equity market itself falling, as a percentage of assets under management, that 1.49 lakh crore now stands at close to 5%, which is still the highest level in this year. So all of this does not mean that mutual funds have not deployed. What it means is that they've actually deployed quite a significant amount. And what is also interesting, what I found interesting is, you see those NFO flows. The flows at 13,000 odd crore rupees were actually a bit of a peak in this year. They have dwindled somewhat. They've come down a little bit in the month of October. And so therefore what you can interpret from that is that a large amount of flows into the mutual fund industry have been in the form of lump sum investments, with a lot of people trying to buy the dip. And you've had mutual funds that have tried to assist you in buying the dip. So you will likely see a lot of funds that had cash positions. We've spoken to a few of them over the last few weeks where they've started deploying, and let's see how that pans out in the month of November. It's going to be very crucial to watch that. We'll get into some more metrics on the portfolio side in just a bit, but I'd like to move now to the conversation that I've lined up for today, and that is in a fund category that you've probably been focusing on in the recent past. It is the multi-asset fund category. Particularly in the current context, it's a great idea to have a diversified approach to your investment strategy. So if you have, for example, had a large allocation towards small cap, you would likely have seen your portfolio drop more than maybe your neighbor who had an equal split between large, mid and small. But here we're actually talking about a multi-asset investment in one fund. But if you were to think of multi-asset as a category and think that all strategies are the same, it would be as problematic or as wrong as it would be if you were to think that all flexi caps are the same or all mid caps are the same. That certainly isn't the case, and that's because of the way that mutual funds have interpreted the rules set by the regulator to define their strategies. To talk about how this is constructed, I've got Manoj Jain, who is the product head of White Oak Capital AMC, in studio with me today. Manoj, thanks so much for taking the time. Pleasure having you in the studio. Thanks so much for coming by. Let's talk about how this is constructed, because you get into the brass tacks of it, the way that you constructed this in the making of this mutual fund. You had some thinking behind it. So first, let's define the broad tenets as defined by the regulator, and then find out how mutual funds have interpreted this differently.
Sure. So first of all, thank you so much, Alex, for inviting me. So like you know that the regulator has said that if you are launching a multi-asset allocation fund, So minimum 10% has to be invested in 3 different asset classes. So let's say usually it is 10% equity, 10% minimum 10% debt, and minimum 10% commodity. Largely it is gold, but it can be silver also or any other commodity. So this is the guideline given by regulator, which means equity can be 10 to 80%. Gold can be 10 to 80%, debt can also be 10 to 80%. Within that, you have the flexibility of buying 0 to 10% REIT in it also.
Yes.
So that flexibility also with all the asset management companies to pick and choose. And you also know, Alex, that as per the current taxation laws, if a mutual fund manager investing more than 65% in equity and equity related instrument, this scheme will be qualified as a equities oriented scheme, which means after 1 year of holding period, you will get
long-term capital
gain tax.
Yeah.
But if you are allocating, let's say, more than 35% but less than 65%, then again you will get taxation benefit. You are still eligible for long-term capital gain tax, but after 2 years. So many combination can be created depending on what is your objective.
Okay, so let's talk about some of those objectives. And while we're at it, and I know that you're not going to specifically speak about your competition, but I want to pull that graphic up if we have it. I'd asked for us to pull this up because the way that, for example, an ICICI Pru multi-asset fund operates is that at the end of last month, they had equity allocation of over 70%. They didn't have gold and silver, and they actually had debt of about 13%. Let's see how that pans out for SBI multi-asset fund as well. They had 53.36% in equity, and they actually had about 37% in debt. Edelweiss had 28%, much lower and much more towards debt. In fact, that last value is how Manoj's product is also defined. So let's talk about why that is. You've got a much lower equity allocation than quite a few of your peers. What is the thinking behind that?
So see, as I said, it all depends what is your objective and what kind of investor class you are targeting. So we have a view that if somebody is investing in hybrid category and not equity, that means that person is looking for slightly lower volatility. Otherwise, you know that over the long term, equity is a fantastic asset class, should generate better return, but it is very volatile. So you are dealing with an investor who is not okay with pure equity volatility. But then why that investor is not investing in debt? Because debt is more stable, but debt can generate only very moderate return. So our understanding is that if somebody is looking for hybrid category, those investors are basically worried about too much volatility. At the same time, they want a reasonable return, and obviously they want tax efficiency. Everybody likes tax efficient return. So this is our approach. Our approach is that we are targeting a certain level of volatility, that it should be closer to gilt, okay, over the 1 year period.
Government bonds.
Government bond over the 1 year period. Within that volatility range, within that targeted volatility range, what best we can do, how we can optimize return in most tax efficient manner. So basically, we strongly believe that various asset classes have a various degree of correlation with each other. Like, you know, gold has negative correlation with most of the asset classes. Debt and equity has low correlation. Within equity, domestic equity versus US equity has positive correlation but low correlation. So we can use this correlation to achieve this objective of minimizing asset allocation. Now, if we start with this precondition that our fund should have equity taxation, which means we are saying that at all point of time, come what may, whether it is recession or boom or whatever it is, we will invest minimum 65% in equity because that is what we have promised. Then in such case, let's say you are investing 67% in equity, another 2-3% in cash to manage redemption. Minimum 10% has to be gold or commodity, minimum 10% has to be debt. So you are left with only 10% to take benefit of varying or dynamic market condition, which we believe may not be the right way, because the right way should be you first decide what should be the best asset allocation basis on various parameters and then try to optimize for taxation.
Okay, so help me understand the objective of your multi-asset fund as you've defined it. It's not maximizing capital gains, right? It is, in fact, to a larger extent, it would be protecting against capital loss or erosion while also trying to give you the benefit of investing in an equity. Is that the right way to look at it?
Yeah, let me add one more point, but you are absolutely right. So like, as we speak right now, we have about about 28-29% invested in equity. Obviously, we have invested another 8-9% in arbitrage, so that our total equity allocation, including unhedged and hedged, will be more than 35% to get the taxation benefit.
Right.
So let's say 28% equity, domestic equity plus foreign equity. Another 20% is gold. Now, both these asset classes over the long period of time should generate reasonable return. Like if I have to give you some number, over the last 13-14 years, both equity and gold has generated double-digit return, solid double-digit. So both of these asset classes are growth asset classes, and both these asset classes have negative correlation with each other. So first, by having almost 50% allocation to growth asset, you are giving some growth participation. So it is not that we are only focusing on reducing volatility. You have 50% assets which are growth asset, and another, let's say 45% assets are basically debt arbitrage, which is giving you stability and reasonable accrual income. So this combination, yes, you are right, will give you reasonable return, may not give you the highest possible return. I am of the strong opinion over the long term, equity is one of the best asset class, should give the highest possible return, but with lot of volatility, like the kind of volatility we are seeing from the last 20 years.
So therefore, to drive home the point, your multi-asset fund should not be compared to an equity mutual fund. In fact, if anything, it should be looked at not as an alternative necessarily, but a lot of people have moved away from the traditional fixed income.
Correct.
And so therefore you're more tilted towards fixed income than equity.
Correct.
Okay. So, but let's talk about that fixed income component of the multi-asset fund that you operate as well. And in fact, what I've noticed is that the duration of the paper that you hold is actually on the lower end of the tenure. And so as a result of which, the potential for capital gains is not as significant as it would be if you were on the longer end of the spectrum. Why is that?
Sure. So the debt portion, how we designed our product, we want to keep duration between 1 to 5 years, which means we want to run it as a short to medium term bond fund at most point of time. To your question, why not, let's say 10 years duration? Because again, it will add to volatility. As I said, our preference of between volatility, return and taxation is that first we want to target the volatility. Because our preference is volatility first, that we want to reduce volatility, hence we will keep duration under check. Because yes, sometimes we will take right call, sometimes we will take wrong call in duration. Let's say over the time we will take more right call and less wrong call. It will add to alpha, it will add to some return, maybe 0.25% higher return, but there will be years it will add to a lot of volatility. So again, because our objective is to reduce volatility, so we will keep it short duration, 2 to 3 years most of the time, sometimes 4 to 5 years, but definitely not 10 years. Lastly, within the credit quality also, we want to target very high end of the credit quality, which means sovereign bonds, government bonds, AAA, very, very high quality AA papers only. Again, because the objective is first reduce volatility, then see how best you can optimize return, and obviously in tax efficient manner.
Okay, and one of the final points that I want to raise is how is it envisaged, or how is it planned for this type of fund to react to a change in the interest rate cycle, if at all?
Yes, so it is not straightforward, because again we are using the chemistry of investing, which means we are using the chemistry of these asset classes, how they react to each other. Like take example of last 3 months. In the month of July, when government decided to cut import duty, so we have seen a drawdown of about 8% in gold prices.
Yes.
And then in the month of October, as we know, that we have seen about 8 to 9% drop in various equity market indices, but gold did well. In both this period, I mean, at least till now, this product of White Oak Capital Multi-Asset Location Fund did very well. In both the month, we have given very decent experience, because while one asset class was not doing well, so we have to see while debt doing well, what will be the result for subsequent classes, asset classes. So usually it has been seen that in falling interest rate scenario, typically you will find equity not doing well, because why would you cut interest rate? Because there will be some challenges, you are trying to address those challenges, and gold will be doing well. Take example of March 2020. So in March 2020, last 1 year return of equity was about minus 22%, but gold was up by 30%. Debt was also up because there was an expectation that there will be rate cuts.
Yes.
So yeah, I mean, it is not very clear that how this product will react, but I can tell you that different asset classes will react differently, and we are using those correlations to ensure that we can keep volatility under check.
Fantastic. Last question has to do with the international equity that you hold. I saw in your presentation there's an asterisk that says that there's not going to be incrementally more investments. Is that a conscious call, and why is that being done?
Because currently RBI doesn't allow us to.
Sure.
But as and when they allow us, we can buy up to 10% foreign equity. In foreign equity, we want to buy US equity because again, Indian equity being a developed market and US equity, which is a developed market, has a low correlation, and we want to buy assets which are growth asset, but at the same time have low correlation because that is how you can reduce risk.
Understood. Manoj, thank you so much for joining in and for giving us that perspective. I think it sets the context perfectly for the second half of this conversation, where we're going to talk about multi-asset funds and where it fits in an individual's portfolio. Thank you so much for joining.
Thank you so much, Alex.
All right. Himanshu Kohli, co-founder of Client Associates, joining in right now. Himanshu, I've chosen in the recent past to talk about multi-asset funds more than I would normally have, because I think it's an interesting space and it's growing quite significantly. Is this a conversation that you're having more with your clients? Are you telling them about it, and what is the kind of response that they have, and where, according to you, does it fit in somebody's portfolio? We were talking to Manoj from White Oak Capital, and he was explaining that his fund house has a slightly different interpretation than certain others, which have more of an equity orientation.
Right. So, Alex, I am a great believer of asset allocation. And what asset allocation does is it just brings in a discipline which increases the probability of success of any investor. Now, today, HNIs, UHNIs, they have the benefit of having an advisor, which is the space which we are in. But still within our universe also, we recommend 15 to 30% into hybrid funds, and multi-asset class funds actually get positioned over there. So we recommend even to HNIs and UHNIs to look at some hybrid funds, a part of which is into asset allocation funds or into multi-asset classes funds. But for a retail investor, if you ask me, who do not have the advantage of hiring an advisor, it's one of the best things which could have happened, because they get the exposure to different asset classes. And a fund manager is basically changing between fixed income to equities to gold, depending on what's the view they have on these asset classes. And when the fund managers takes more rational decisions, there are also advantages which comes of the taxation, also the operational efficiencies which comes through this process. So I am a great believer of multi-asset class funds, especially for the retail investors, and a part of the portfolio for HNIs and a smaller portion of that towards ultra high net worth segment. It brings in huge amount of efficiency in any client's portfolios.
Now, Himanshu, what I wanted to achieve in the first half of this conversation is to kind of lay out how the treatment of these schemes can be very different. And so therefore, the return expectations also should be different. And so not necessarily right to compare the return of one particular scheme in the category to another. And I don't know how a normal retail investor will be able to understand. So let's try and break that down so that they understand, right? When they're approaching this investment, should it be from the objective of trying to protect their capital, as White Oak Capital seems to be trying to, or White Oak AMC seems to be trying to achieve? Or should it be from the perspective of somebody like an ICICI Pru, which has a much more aggressive equity orientation and will likely use the other asset classes tactically to move from one to the other? Do you need to identify what your objective is at the start?
Right. So it also depends on the profile of the investor. Alex, two individuals, similar age profile, can behave very differently to the same situation. Also, maybe someone's goal could be next 3 years, someone's goal could be next 10 years. Now, the difference in the time horizon and the risk appetite helps people to decide which product to go from which manager over there. So if someone is slightly more risk averse and has a shorter term time horizon, can go for White Oak. But someone who is comfortable taking slight volatility in the portfolio and want to basically get into equities, but they just want some tactical allocation to happen in case the market is overvalued and is becoming slightly more volatile, so that gold or fixed income can come and give a cushion over there. They can go for ICICI Prudential over there. So I am generally believe, Alex, investors have a long-term money. They don't think it that long-term. But if they start thinking with the right time horizon, they can actually go more towards equity-oriented products over there, where gold and fixed income or arbitrage is coming to build the cushion over there and really compound their money at a better rate over a long-term period.
Final question on this particular topic, and I have a couple more in something else that we were speaking about at the start of the show, which is how mutual funds have utilized cash. And I'm curious what you think about some aspects there. But Himanshu, where would this therefore fit in somebody's portfolio? And I know you kind of answered this, but what kind of allocation would you give to something like a multi-asset fund?
So let's say if I talk about HNI, which has a 10 crores kind of a portfolio, I would say if the profile is moderate, maybe 20% goes towards hybrid kind of schemes, which is, let's say, roughly about 2 crore rupees. Now, out of 2 crores, multi-asset class could be 1/3 of that, which means roughly about 67 lakhs. Suppose someone is not a HNI and has only a 1 crore portfolio, and they do not have the advisor to themselves. Maybe they can have 50% towards hybrid, and out of 50%, they can have 1/3 towards multi-asset class over there. So which could be roughly about 1 crore, 50 lakhs is hybrid, and 1/3 of that, which is 16-17 lakhs. So 16% of their overall asset allocation is multi-asset class. That's the way I define it. Similarly, for UHNIs, it will be a smaller percentage, but it will certainly be a part of the UHNI also.
Thanks so much for laying that out. Now, what I was curious about is I've broken down the latest portfolio holdings for mutual funds based on the data that we pulled yesterday, and it turns out that the cash holdings on an aggregate level for actively managed equity schemes has fallen by just about 500 crore, and it's fallen for the first time, Himanshu, in this current financial year. And more than 40,000 crore coming into actively managed equity schemes seems like a large chunk of that, all of that in fact, has gotten deployed. So what is interesting to me is that you saw significant inflows across the board in the last month. There are murmurs that perhaps some people are starting to redeem small cap. Is that something that you've heard? Are people dialing you up on the phone to say, what do we do in this kind of a scenario?
Right. So first of all, Alex, if you see last month, $13 billion was sold by FPIs in India, but $12.8 billion was bought by domestic institutions. So whatever money is coming in, domestic market is actually very, very active, and whatever FIs are selling, domestic market is buying through mutual funds. And that's the reason we have seen for the first time cash allocation has come down, because markets fell between 5 to 7% last month. Similarly, this month, FPIs are selling and domestic institutions are coming and buying it. Yes, on the second part, small cap is relatively overvalued compared to large cap today. And people have made phenomenally good returns in small caps in last 5 years. And today, since it's overvalued and it has gone up quite a bit, it does make sense to maybe reallocate a part of your small cap portfolio towards large caps. Or if your fresh money is coming in, do not invest into small caps. Maybe look at investing more towards large cap, or maybe right now going through hybrid funds, maybe some of this asset allocation funds or multi-asset class funds also, because still market is overvalued, more towards the small cap, and also it's becoming quite volatile. So I would say, yes, it makes sense to rebalance your portfolio, not within different asset classes, but within an asset class also. Maybe reallocate from small cap to large cap, or fresh inflows can go towards large cap today.
Himanshu, I do want to take a couple of questions with you. We have a couple of minutes left. Devamita Banerjee, who's 23 years old, has asked a very interesting question, I think. What is the ideal fund that can capture India's long-term consumption story?
So I would say you can create a portfolio of 3 to 5 managers. 3 to 5 managers. Don't go with one particular fund. Try and build this through a systematic plan. You can also say, if I'm building up 5 funds, maybe 3 can come, 1 from large cap, 1 from multi cap, 1 from mid or small cap, and 2 could be from thematic. And right now, I would say technology and financial services or banking financial services could be added as a part of your satellite portfolio. Do long-term systematic investment plans in mid cap, medium term in large cap and multi cap, but in financial services or technology, maybe do a short-term 3 to 6 month systematic investment plan to build up these portfolios. But try and be more with diversified funds, and maybe a bit of satellite you can capture through sectoral funds like technology or financial services at this point in time.
One quick...
So I would not like to name any one particular fund. Yeah. It's always a combination of funds. That is what is important. And maybe you can go through the ratings of some of the schemes, or you can write to us specifically and we can send you our ratings, client associate ratings on different funds. Yeah.
Okay, but one quick follow-up then. Zunera Dongre was asking, banking and pharma fund as part of a satellite portfolio. Can you suggest some names here, Himanshu?
So Nippon runs a fairly decent banking fund. You can also go through a index fund also over here, because the idea of a satellite is just to get overexposure towards that particular asset class for the time being, because they are right now satellite in nature. So I would say in a mutual fund, Nippon is fairly decent. And in a pharma space, maybe go through a index fund. That is what I would recommend.
Okay. Himanshu, thanks so much for joining in. Pleasure having you on the show. Insightful conversation as always. Yeah.
Thank you. Thank you so much, Alex.
All right. That brings us to the end of this particular edition of the Mutual Fund Show. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome. You're watching Large Trades. I am Agam Vakil. In this show, we take you through all the stocks which are buzzing in trade on account of big moves in volumes. A lot of that could potentially be because of block deals and bulk deals. We're looking at what potentially started off as a day where we were heaving a sigh of relief, and it does seem like we were looking at selling into that very brief moment of strength when it comes to the benchmark. So it's turning out to be yet another very disappointing day of trade for the Indian markets, where we once again have moved below at least the exponential 200 daily moving average. We've not moved below that. We're exactly at that point, and it does seem like there's consolidation around that. But the real question is, if we do in fact see a close below that, do we expect more weakness in the Nifty? And it's mostly the same for the banking index too. It's been wilting under pressure. We don't have too much to go for, even though it's marginally in the green right now. It's once again flirting with that all-important 200 daily moving exponential moving average, of course. But let's take a look at the market, specifically the stocks contributing to the Nifty, where there's a pull and push, and what has led to its eventual marginal red right now. So we have advance for HDFC Bank, Reliance, and Eicher Motors. To a certain extent, Kotak Mahindra Bank as well. We're trying to keep the Nifty's fall in check. But what's weighing down is consumption stocks like ITC and HUL, along with L&T and NTPC, among many others. We also take a look at the broader markets. Are we looking at an underperformance there? Actually, it's the opposite. We're looking at an outperformance because we've seen the mid-cap index turn with the green. And the small-cap index is up around 0.9%. So reversal of sorts here. And again, it's a wait and watch as to how things pan out. But, we don't have a very encouraging market breadth. So let's pull up advances and declines and see how things are faring there as well on the NSE. And fair enough, it's not a bad number when it comes to advances. The market breadth has certainly improved with respect to what we have been used to of late. Currently, nearly 2 advances for 1 decline. But from there on, let's talk about some of the stocks that we actually want to address in trade today. And the first one on our list is Dishman Carbogen. We have earnings coming through, but there's a lot more going on here. Let's get in my colleague Varsha to tell us more about this one. Varsha, good afternoon.
Good afternoon, Agam. So thanks for that. So actually pretty good set of numbers. If you see, Dishman is up almost 14-15% in trade today. Now, the revenue growth is due to increase in commercial sales in CRAMS segment. Now, when I say CRAMS, that means contract research and management and operations. So basically, what does this mean is that this company research a drug, develop it, and then manufactures it for the innovator company. So this segment has increased 52% year on year due to high commercial sales and also roll-off of certain shipment which got pushed to Q2 from Q1. So the CRAMS segment is the reason behind for this company. Now, their cholesterol and vitamin D analogs revenue decreased 35% due to lower sales, and their APIs and intermediates revenue increased almost 37% in Q2 due to increase in commercial sales. Now, the generics revenue though decreased 21% due to the slowdown in the agrochemical sector that we are seeing, and the EBITDA margin expansion is because of the CRAMS segment, because it's a high margin segment for them. So there, if you see, the EBITDA margin in CRAMS was 12.2% last year, which increased to almost 20% due to, of course, higher commercial sales there. The capital expenditure, that is CAPEX, for H1 FY25 stands at around $15.9 million. Now, what company is doing when it comes to growth is they have a strong basket of about 16 APIs. Now, when I say APIs, this is the main product or the main salt which is used in the medicine. So they have got 16 APIs in late phase 3 development. The company is focused to improving its capacity utilization, and they're also setting up a small scale manufacturing facility in Switzerland and new injectable manufacturing plant in France, Agam, which will actually aid growth for the company. So overall, good set of numbers, and this is the reason the stock is buzzing.
Absolutely, point taken. One of the relatively smaller names in the healthcare space, but something which also has marquee names attached to it. Varsha, thank you so much for joining us and taking us through that particular quarter, as well as several other insights into this one. But we move on and talk about yet another very interesting company from the small cap universe, that's Banco Products. We now have Anushi telling us about why this one is locked in an upper circuit of 20%. Anushi, over to you.
Right, Agam. So if you are seeing Banco products, it's locked in upper circuit as you've mentioned, and the volumes are particularly high on this counter, about 18 times the volumes compared to its 30-day average. But before we talk about what the company is doing and what has led to this kind of outperformance that we're seeing in trade, just let's understand what the company does. It manufactures and supplies engine cooling modules and system, and this pertains for specifically automotive and industrial applications. What the company came out was with its Q2 FY25 numbers yesterday, wherein it reported 23% of a revenue growth at 895 crore. EBITDA saw about a 67% of growth, and margins moved to 23% as compared to 17% last year. So we're seeing about a 604 basis point of improvement. Net profit also saw about 109% of an increase. But what led to this higher profitability? The number that we're looking is change in inventories was one of the major factors why we are looking at such a big jump in the EBITDA margins. More on the company, if you look at its revenue breakup, about OEMs contribute about 55 to 60%. As the aftermarkets, it generates about 15% revenues for the company, and it sees about 30% of its revenues coming from the export side of the business. Coming to the stock performance, in this 1 week, it's seen about 11% of gains. Again, today being one of the largest contributors to this increase in price that we are looking at. In 1 month, it has clocked in about 19% of gains, and in year to date, we've seen about 33% returns for Banco products. So Q2 strong quarter 2 numbers. That is why we are seeing this up move in trade today.
So there you have it. That's Banco products for you. Again, it's not had a bad 12 months either. It's for about 43%, but of course, a lot of that will be attributed to the simple 20% up move in today's day of trade. And then we talk about Mishra Dhatu Nigam. This one has also posted a strong set of numbers coming in, advancing by around 4.5% now. Mihika now tells us about what else has worked in favor of this company. Mihika.
Yeah, thank you, Agam. Mishra Dhatu Nigam, it's paired off some of its gains, but the intraday high of the stock was 15% today, and volumes are over 14 times its 30-day average. And why has the stock been buzzing is because of a strong Q2 numbers. But a little bit about the company, it manufactures super alloys, titanium, and special purpose steel and other kinds of metals. And it's been set up by the government to improve India's self-reliance in terms of production, and it mainly caters to the defense sector, but also other sectors like energy, aerospace and more. But in talking to its Q2 numbers, revenues up 15% to over 262 crores. EBITDA has seen a 34.8% growth to over 48 crores versus 36 crores a year ago, and margins have seen a significant 272 basis point expansion to 18.68%. And with all of this, net profit has grown almost 53 times on a year-on-year basis. A little bit about health margins. One was a 22% drop in the cost of materials for the company on a year-on-year basis, and margins were also aided by an 8% drop in other expenses. And when you look at the order book, well, it's up almost 7% on a sequential quarter-on-quarter basis. It stands at 1,800 currently versus around 1,700 to 1,740 crores just in Q1 itself.
Okay, Mihika, thanks for getting us those updates on Mishra Dhatu Nigam, and yet another company in focus on account of, several updates coming in, but from the chemical space specifically, we have PI Industries, which is also buzzing in trade, but this is perhaps the first one on our list, which is actually wilting under pressure today. We have Mahima joining us to tell us why. Mahima, over to you.
Right, Agam, so a couple of reasons why the stock is seeing pressure in trade today. It has reduced its FY25 growth guidance to high single digits as per the recent management commentary. The guidance is reduced due to weak pharma performance overall, and previous revenue guidance was around 15%. So a drop from 15% to high single digits is what the management has guided. Now, in terms of Q2 numbers, revenue was up 5%, EBITDA was up 14%, margins have improved a tad bit from 26% to 28%, and net profit was up around 6%. So overall numbers in Q2 saw a decentish growth. In terms of key takeaways, acceleration in exports is driving growth for Q2 FY25 overall. The CSM export, that is the AgChem, saw a double-digit growth with new products up over 42% year-on-year. And domestic revenues, however, did take a hit, which is why the management has probably cut the guidance. They've declined due to reduced supply in institutional customer and due to ongoing pricing pressure in the pharma space. Now, in terms of the pharma segment performance, the pharma segment profitability remained a drag drag. Flat revenues sequentially were observed, and management expects strong second half of FY25 based on the order book. Now, EBIT loss narrowed to 50 crore from 70 crore in Q1. So that's on the positive side of things, but margins have increased due to a better product mix as well as a good operating leverage. The tax rate stood at 23% versus that of 6% last year. Lastly, Jefferies has come out with a note on PI Industries. They've rated buy with a target price of 5,100, which is an upside potential of 12% from its yesterday's closing, but the stock has tanked quite a bit in trade today, so the upside now becomes more than that 12%. But overall, revenue meet expectations. Domestic was in line with the pharma and slightly above is what Jefferies is saying, and FY25 revenue growth guidance reduced as per the management, and what they're saying is that pricing pressure is expected to persist in the coming quarters, and management has also expected improvement in pharma in second half based on the current book as per Jefferies. So this is the overall view on the stock and why it's in pressure today.
Mahima, thank you so much for getting us all those updates with respect to PI Industries. Pardon me. But let's talk about Eicher Motors then. Of course, clearly the biggest gainer on the Nifty 50 today, and for good reason. Again, this one has also given up some of its gains on an intraday basis, but it's still up around 6% right now. We have Puneet joining us to tell us why and what's the reason behind this sharp up move today. Puneet.
Q2 results was largely flat, just about 3% growth in revenue, 8% growth in profits. But the management commentary in the earnings con call yesterday was driving the positive outcome on the street today. They have changed their strategy dramatically to a growth over EBITDA margins going forward as well. This essentially means that they'll be focusing more on sales growth rather than the EBITDA margins of about 25 to 26% that they do. What this will do is that the revenue as well as the EBITDA, absolute EBITDA, will increase going forward as well, and that'll be beneficial for the street as well as the stock going forward, because the sales volume has been really disappointing over the last 10 to 12 months, while peers have outgrown the industry as well. Apart from that, a very strong festive season in the month of October. They crossed the 1 lakh sales mark in the month of October for the first time in its history. They have also mentioned that this will continue in November as well because of the marriage season. So a lot of planned purchases around the auspicious period. That's another key positive for the stock as well. And because of that, the inventory level has reduced dramatically to about 2.5 to 3 weeks itself. So replenishment of the same over the next 6 weeks will benefit the wholesale volumes of the company. Apart from that, that's the basic on the Eicher Motors. They have also this has been taken by brokerages in a very positive way. Jefferies maintains a buy at 5,500 as the target, which was a 20% upside from the previous close, roughly about 12 to 13% now. They mentioned that the last 12 months volumes has been subdued, but one of the main things that they've said is the toughest phase in the competitive intensity is over, and they now see that the stock is trading at a 15% premium to Bajaj Auto versus 60% that it did over the last 8 years. So definitely valuation is also better for the company. Nomura has upgraded it from a reduced rating to a neutral now. They have a target price of 4,391, and they mentioned that the company's new strategy addresses one of the key concerns of lower sales volume in this particular quarter. Last one, I just want to talk about Nuvama. They've upgraded to a buy from a hold earlier. They have a target price of 5,500 again, and they mentioned that this should aid sales growth of about 12 to 13% over the next 5 months for the company, and that should benefit their earnings estimate of about 9 to 11% that they're estimating over the next 2 to 3 years. So overall, a big thumbs up on the management commentary and the new strategy going forward. Stock is rewarding what the management has thought about.
Okay, Puneet, thank you for getting us all those updates with respect to Eicher Motors. But from there on, we talk about the IT sector, specifically Happiest Minds Technologies, which has posted a 3% sequential fall in its net profit to 50 crores in the second quarter. And we spoke to Venkatraman Narayan, MD and CFO, and Joseph Anant Raju. He's the Executive Vice Chairman and CEO of Happiest Minds Technologies, about the quarter gone by, as well as their outlook going forward. Listen in.
If you look at the results, I think it was another quarter of strong performance, building on top of the performance we had in Q1. Our revenues, if you look at it, constant currency was at $64.33 million. And as you mentioned, we did a growth of 12.7% at constant currency. And the EBITDA margin, which is what we track, we had given a guidance of 20 to 22%, and we've been able to stay ahead of that guidance at 22.7%. And this is in spite of couple of, I would say, steps that we took, which had an impact on margin. First is, unlike many of the other companies, we've gone ahead and given good increments to our people, especially at the junior to mid level, and we'll do the rest in October, which has had an impact of around 2.3% or so on our margin. And at this same time, as we had mentioned earlier, we had created a new generative AI business unit, and this is a unit that is still in an investment stage because we started the unit just a year back, and we've invested around $2 million so far in the first 6 months. So both of these have had an impact on our EBITDA, but in spite of that, we've been able to maintain our EBITDA ahead of the guidance we had given of 20 to 22%.
Right, thanks for that. But to you, Mr. Narayanan, what kind of margin impact would happen in the second half of FY25 because of the wage hikes that you have given, number one? And also, do you aim to sustain such kind of margin levels or to increase? I reckon that you have reported numbers almost in line with the guidance. So from here on, do you seek to upgrade these guidance or, maintain at the current levels?
So talking about margins, I think Joseph did refer that we did 22.7% for the half year. And just to put that in perspective, if you take 16 crores impact on account of investments into generative AI, about 13 crores on account of wage increase. And we have also got a new sales engine because we have hired a very senior gentleman as our Chief Growth Officer. And he's setting up a team, and a part of that cost is also baked in. Despite all of those, we have done this margins of 22.7%, and which is ahead of the 20 to 22% that we have given for the year. So from here onwards, the investments that we have made will start paying dividends or should start paying dividends. You will see contribution coming in from generative AI. That business is currently running at a utilization of anywhere between 20 to 25%. So that will start picking up, and that will the active conversations which are at the POC stage, once they become real revenues, you will start seeing improvement in margins. And the similar thing with the wage increase, I gave you the impact of the last quarter and the half year, which is 2.3%. We'll have a slight small impact on account of seniors, the senior happiest minds that we have. That will also happen in Q3 or Q4 of this year. So with that, I think you will see the margins in the same range where it is 22.7%, and then we'll have to build on that and improve it from there on. So yeah, 20 to 22%. Right now we are beating it, and the idea is to continue doing that for the rest of the year as well.
Right. Okay. But you seem to have done 2 acquisitions, and the 12% kind of revenue growth, isn't that on a totality basis? And can you just give us the breakup in terms of revenue growth and inorganic organic revenue growth and inorganic revenue growth as well, please?
So the 2 acquisitions that we did was reported in the last quarter. This was the 2 companies of Pure Software and Aureus. They were part of our research in the last quarter, and what we don't do, because it's kind of does not give you the right picture, is to split the growth between organic and inorganic, because that assumes that we continue to run as independent, separate outfits or units, which is not the case. From the word go, we are integrating our business, delivery, sales, support, and all of the functions. So today we have 281 active customers, out of which about 40-45 coming from these 2 new companies. And if you look at it, that's what has led to the significant growth in BFSI and healthcare, percentage of revenues this quarter and last quarter over the last year. So we have these customers. They have a great selling proposition in Artha Banking, the SaaS-ready banking platform. It's an award-winning platform. They're taking it to our customers, and it's a multifunctional. It has got a lot of functionalities which can be taken even outside of pure play BFSI customers. So we are taking that to our customers. We are taking our services of generative AI and other capabilities and analytics and the like into their customers. The split of ours and theirs does not really exist, but it's right now a collation of 280 customers into which we are trying to upsell and cross-sell. But that said, the base numbers are there. We have disclosed it. We've closed last year with about $193, $194 million. Pure Software did about $42.4 million, and RES was about roughly about $8 million. So you that, and then the growth is from there on.
Right, got that. But on to you, Mr. Anand Raju. You mentioned last time that clients are largely facing challenges because of the global, economic environment, and some sort of restructuring and reorganization also is what you had called out. So can you give us some update on how clients are looking forward to discretionary spends, and how has the environment improved, if it has?
Sure. I think what we're seeing in the last couple of months is an overall improvement in sentiment, and it's being driven by 2-3 factors. One, I think the overall economic situation continues to be well in US. If you look at the unemployment numbers, growth, second, the third quarter growth, again, GDP was at around 2.7, 2.8%, quite impressive. And inflation is ticking down. So that is one. Second is the interest rate having come down, that the Fed announced, has improved overall sentiment and ability to invest. And the most important factor that we're seeing is that the election is over now. There's certainty in terms of result, and it's a pretty decisive victory. So there's no quibbling out there. I think all of this is adding to a sense of optimism. In some of the verticals, we're already seeing customers beginning to discuss new initiatives. If you look at BFSI, capital intensive vertical like manufacturing, we're hearing new initiatives being formed, and I think that's getting extended to some of the other verticals. And so we are quite encouraged by how the overall spend environment and the demand outlook is improving. Now that we're getting into the budgeting cycle, you have to transform the initiatives into budgets and get approvals for it, which is what customers are going through. We'll get a better sense in the first half of December, and we should start seeing orders and SOWs start flowing in early January. And so when we meet next time, I'd have a better idea and maybe more specific numbers to share with you in terms of demand environment.
Let's move on and talk about Thermax. The stock declined by 4% earlier today, even after reporting a solid Q2 results. The company's earnings surpassed market expectations across several key metrics, and we spoke to Ashish Bhandari, CEO and MD of Thermax, about the key drivers for growth. Listen in as to what he had to say.
I would want to take 2 points out. One, on the order side, when we started this year, we had talked about how this year we do expect some bigger orders to start coming back, because all of last year we were working with work that was going on, but we really didn't see too many big orders coming in. This year, that trend should reverse, and Q2 is a good example of that. Even as we look at the next 3-4 quarters, we have got other bigger opportunities also in play. If I take that big opportunity out, we have been growing steadily in a lot of the rest of our business. Industrial products has been growing double-digit now for multiple years, and we see that trend continuing at least in the near future as well. On the margin side, there was one exceptional item in Q2, which was not unexpected. This relates to a PSI, a production-linked benefit that we got from the Maharashtra government, which is a scheme that one of our new plants was part of for some time. But now that the assurance of the benefit coming through is certain, we started to show this. This will continue in smaller amounts for a period of time, but this was a one-time, relatively bigger number that we showed in Q2. If I take this number out, actually our profitability was slightly below what we would have expected, and that is driven by continued challenges that we have on the execution front on bigger projects.
But that is a wrap on this edition of Last Trades. Up next is India Market Close. Stay tuned in.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options.
Good afternoon, and thanks so much for tuning into India Market Close. It's a different last 1 hour of trade, in that we're not seeing carnage on the street or correction on the street or red on the screen. Yes, there is red, but precious little. I mean, banks marginal India green, and if you look at the small cap index, it's about 0.7 or 0.8%, the small cap 250. So therefore, it is a lot better than what the last 1 hours have been in the last few days, which is actually a good thing. Wonder what the breadth is. Just pull up that breadth before we get to the heat map for the Nifty 50. The market breadth has been in positive throughout the day. Yes, it is narrowing right now. You can argue that, but that's okay, because largely there has been optimism, which is actually a really good sign. Bring up the heat map up on the screen, and Aisha still dominates. Not as much as 8%, but not bad. There is strength in Hero MotoCorp. Reliance is giving a bit of support, and life insurance. So Reliance and HDFC holding the markets higher, along with some support from select auto names. What is countering that? FMCG throughout the day today. Tata Consumer, HUL, and some of these FMCG heavyweights have looked wobbly. BPCL is the top loser, of course, but it is these which are actually putting the maximum pressure on the index. There is weakness in Power Grid, Shriram Finance, Adani Ports, and IndusInd Bank. But look at FMCG, and that tells you a story that there is something around consumption with ITC, Britannia, HUL, Tata Consumer, all of them looking weak. But if that's the large cap arena, mid caps and small caps, Tamanna, have, at least the small caps have had a really good run today relative to what they have in the recent past.
Oh, absolutely, Neeraj. And you know, that's relief, because you don't want people's portfolios beyond a point to get hammered. Retail investors have shown great faith in the Indian markets, and you know, that needs to continue. So yes, the Nifty mid cap doing pretty decently. I want to pull up the micro cap actually. The micro cap index I found very interesting, and we'll pull up the intraday of it as well. Also about 1% up. The small cap even higher. Let's pull up the intraday for the small cap if we can very quickly before we go to the advanced decline ratio for the day to give you a sense of the market breadth. So it's been in this range, actually off its highs, which it hit in the morning. Let's show you the market breadth just for a second to give you a sense of what the mood is. And the good thing is that the gap is narrowing, but the bulls are still dominating as of now. Not a massive gap. So I wouldn't say that this is a very buoyant market, but less bearish than it has been for the last two trading sessions. In a range, and wait and watch mode definitely continues. Let's pull up the sectoral indices if we can and give you a sense of what's happening there. The last I saw, Realty had recovered, and yes, absolutely. Nifty Media up. That's because of the TV18 stock. Nifty Realty up about 1%. That's doing fairly well. And then, of course, you have the small cap index, which is 0.85% up. On the losing side, India VIX down is a good sign. So India VIX down shows you that the underlying sentiment is maybe not that bearish, but there's some pockets of concern. And one pocket of concern definitely is FMCG stocks, as Neeraj also pointed out. Continue that with public sector companies and PSU banks also feeling a bit of heat. Let's pull up the top gainers and losers on the broader markets and look at what's happening on the BSE 500. And you see a lot of impact as per results, as we have been seeing all of these days. PI Industries, because of what they had, the changes they've made for their guidance outlook, is down about 5.5%. AstraZeneca feeling the heat as well. Torrent Power, on the basis of their numbers, is down. Kalyan Jewellers, the numbers actually looked okay, not that bad, but stock is about 3% down. We spoke to the management as well. On the other hand, look at Deepak Nitrite today, about 5% up. Eicher Motors, of course, is the hero of the day because of strong management commentary, but Suzlon doing fairly well, and Network 18 down, up about 8%. DCM Shriram, remember, had a strong set of numbers, but a couple of weeks before, stock is reacting positively today, 6% up. So no big, very clear trend, I would say. But definitely the mood not as bad as the last couple of days, Neeraj, before the long weekend. I think people don't want to take a clear call with 3 days of a holiday ahead of them.
Maybe because it's not the global 3-day holiday only for India. Let's see if that is playing in as well. But Kush Bora joins in, and wonder if the charts are telling you something different, Kush, because it does seem that the pressure is abated a little bit. How do you read the charts this afternoon?
Hi, Neeraj. Very good afternoon. Well, I think, today is a day of consolidation, after hitting that 200-day moving average that we did yesterday, today also, pretty much there. I think that there is, a long trade to be made. Maybe not from these levels. Maybe we might slip a little further, below the 200-day moving average. Break any kind of hope that the long traders, might have. There will be a lot of stop losses around the 200-day moving average mark. Perhaps there's a 23,300 mark. But I think from here on, rather than a short trade, I would look for a long trade, a rebound trade rather, for levels of 24,000 and 24,400. Very difficult to pinpoint from which level exactly that would come about. But 23,300 is perhaps a level from where you can consider a rather favorable position or rather favorable risk reward ratio to go long on. So I think if I do get a dip closer to the 23,300 mark, and the Nifty does continue to consolidate around those levels, I will look for a long trade on the Nifty with a stop loss around 23,000.
A stop loss of 23. Okay, so that's the Nifty call. Is there a trade in the bank Nifty, Kush, or would you skip directly to stocks?
Oh no, there is fairly similar. I mean, despite the kind of minor gains that the bank Nifty is seeing, still there is optimism, at least as compared to the Nifty. My only concern is that we've been talking about this broad range, if you'll recall, of 50,300 and 52,300, that 2,000 point range. Even in today's recovery, the bank Nifty has not really been able to get into that range. So once it crosses the 50,300 mark, is when you again do that range play. And in any case, right now, the short trade on bank Nifty is not really warranted. The 200-day moving average on this one comes in at 49,800. So the risk reward ratio is not at all favorable. So here too, I'm looking for a long trade, but on the way up. So once you've got a closing above the 50,300 mark, you play for 51 and 51,500. But mind you, these would perhaps be rebound trades and not any kind of reversals. I mean, we'll see as we get to those levels. But right now, they would seem like a rebound trade.
Okay, so rebound trade not quite in place, complete consolidation there. What would be your buys at this point, Kush? I mean, before you give me your top picks, what about Eicher Motors? Are you seeing more steam there?
Well, I think there is definitely consolidation, and the stock is actually trading in a broad band of 46,000 on the downside and 5,100 on the upside, bang in the middle of that range. So if I were to have a view from a 3 to 6 month perspective, yes, I would consider buying Eicher Motors. For me, range plays are quite interesting. People kind of don't completely do justice to what a range play can do. It's more of trending, long or short plays that people really play with. For me, Eicher Motors with a stop loss of 5,600 and in the first target of 5,100. And once that is taken out, I think the momentum will take it to 5,300 levels as well. So yes, there is steam on in Eicher Motors, and as long as I have that clear range to play with, why not? I mean, a long trade on Eicher Motors is still very much on.
A long trade on Eicher Motors is very much on, but what are the top picks?
A long and a short, still going with that mix. Mastek, has had a good run. You're seeing some profit taking in the last 3 sessions from the highs of the day. Same is the case today as well. But a strength like this in a market like this, I would take it. Momentum will pick up once the 3,050 mark is taken out. But even then, if you see, on the back of good volumes, the stock is trending higher. So from a near-term perspective, 3150, 3,300 are your targets. 2850 is where you place that stop loss. On the short side, I've put IndiaMart Intermesh. Again, the stock's got nothing going for it. It's been reeling under the 200-day moving average for some time now, almost over a month now, and making new lows practically every day. So this trend could very well continue for targets of 2250 and 2200, and your stop loss comes in at 2340.
Okay, time to talk about the stock of the day, and that's Eicher. It's in focus on the back of very strong earnings off the highs of the day, but doing well. And Puneet, we've dissected what the numbers were like, but you've already spoken about the commentary, and that seems to be the key thing for Eicher.
Well, definitely, it's the Royal Enfield division that's driving the growth in this particular quarter. It's actually the commentary of the same, and what the company is going to do is something which is positive, and the street has taken it with both hands. So revenue was about 3% growth, profits was about 8% growth in Q2, but the commentary and a very big strategy change with the company, which is essentially growth at all costs and the key focus going forward as well. It's different from the previous focus on EBITDA margins as well, and that used to be around 26 to 27%. So management has maintained that they are okay to let go of the margin a bit profit in the near term and medium term as well, but growth is the key focus. If you look at, apart from that, the 2 to 3 other factors that they mentioned, as you mentioned, growth is the focus now going forward. It also reported the best ever sales in the particular month of October, about crossing the 1 lakh mark. And what's encouraging is that they're expecting this to continue as well. With that, the last 2 months has been really strong on the sales side. The inventory is now down to about 2 to 3 weeks only. So inventory replenishment will also show sales growth in the next couple of months. Marriage season, another big trigger for, for most people planning their purchase around the auspicious period as well. So another trigger as well. And finally, we have seen 4 launches in this particular quarter. That's expected to drive the growth. We're expecting another launch in the last week at the Motorverse in Goa as well. So another launch would just be very, timely for the company as well. So when you look at the brokerages as well, what they've been saying at this particular point of time has been very positive. So Jefferies has a buy of 5,500, and while they have been mentioning that, it is a very serious strategy change for the company, the one thing which I wanted to highlight about the company was that they said that the stock is trading at just about a 15% premium versus a 60% premium that it used to trade at versus peers like Bajaj and Hero. That's another positive. Apart from that, I want to move on to the next brokerage as well. MK, a big upgrade from sell to buy. Target price has been raised to roughly about 5,500 now. They have 5,300 now, and they mentioned that the renewed focus strategy about the company is a key positive as well. They have mentioned that going forward, the post-festive demand momentum will sustain, and this new strategy is very, very uplifted. Now, just want to talk about the next brokerage as well quickly. We have Nuvama as well. They have a target price of 5,500. Nomura at upgrading from a neutral right now. Upgrading from a downgrade to a neutral right now, target price of 4,391. But overall, just like valuations have now consolidated as well. It's around 26 times FY26 versus Bajaj at 24 times. So the differential is surely there. And going forward, they're expecting to have roughly about a capacity of 14 lakhs as well. Another key pivot, they sold about 9 lakh 50. So going forward, a big thumbs up. So overall, a very good quarter for the company, and it sets them for the next 4 to 6 quarters with already the new launches as well.
All right, so Aisha, though the numbers on the face of it not great, but the commentary is what has got the stock up and going. Sudeep Bandyopadhyay also with us, Group Chairman at IndiTrade Capital. Sudeep, great to have you on the show, and hopefully the mood is turning. But since we've been talking about Aisha, let's get your view on Aisha as well as Hero. Hero doing fairly well ahead of its numbers. Do you think, at least for autos in select pockets, tide is turning?
Well, I won't, say auto, Tamanna. I will say two-wheelers. Festive season has been reasonably good, and the Hero numbers which came for the last month were impressive. So yes, expectations are that the commentary of Hero also should be robust. We understand that the festival season as well as the forthcoming marriage season should be good for them. We know Hero has a much larger market share in rural India, and we know the rural consumption has picked up. There are challenges in the urban and semi-urban part, but rural is doing good. So Hero should have a good time going forward. As far as Eicher is concerned, the numbers were not at all impressive, but the commentary has been pretty robust, and the pipeline which they are talking about should take them forward. The change in strategy as far as margin vis-a-vis numbers, I think market likes that, and there has been all these brokerage upgrades, which I think is working its wonder in the market as far as today's trading is concerned. The other point I will say that the valuation of Eicher at this stage is reasonable vis-a-vis its peers. So that also is another added factor. And at this stage, if somebody has a slightly longish view, both Hero as well as Eicher is okay.
Okay, so another stock in focus is Vodafone. Numbers out today, and we should just look at how the stock is doing, down about less than 0.5% now, so pretty much flat. But let's listen in to what the management is saying in their conference call post earnings.
Digital solutions including payment solutions, customized offers engine, buy now pay later options, and seamless WhatsApp integration are offered. We also entered into a partnership with US-based Genesis to transform contact center operations and strengthen customer engagement and services. This collaboration marks We Business's entry into contact center as a service, that is the CCaaS sector. We have built a strategic partnership with Infinity Labs Limited to introduce a Make in India SD-WAN solution as part of hybrid SD-WAN portfolio. The collaboration enhances the existing SD-WAN portfolio by integrating advanced AI-based security features, offering Indian enterprises a robust defense against the growing threat of cyber attacks, and demonstrating our commitment to offer indigenous technology and nurture. On the IoT front, all our enterprise IoT customers have been migrated to IoT Smart Central, a comprehensive connectivity management platform that manages SIM life cycles, diagnostics, and billing needs, all from a single interface addressing the evolving demands of the IoT market. Additionally, our IoT labs, which serves as an ecosystem orchestrator aimed at creating an interoperable and standard IoT environment in the country, saw a lot of traction in the market with around 20 certificates issued to various IoT partners. We Business is also at the forefront of building cybersecurity, empowering organizations to thrive with confidence. This service gives access to robust threat detection measures like proactive monitoring and rapid response capabilities to identify and mitigate risks before they escalate. End-to-end protection through a holistic approach that secures infrastructure applications and user data access across platforms. Expert guidance by a team of cybersecurity specialists who tailor solutions that meet unique demands, ensuring compliance and resilience. The next strategic initiative is driving partnerships and digital revenue streams. We aim to be a truly integrated digital services provider with a very clear objective of driving higher digital engagement with our consumers and driving monetization through specific streams or by participating in select digital categories. Our stated strategy around this has been to build this through strategic partnerships and bring out most of these offerings on the V app. V app is a multi-utility app that offers not just end-to-end telco account management, but also allows consumers to play over 100 games, participate in esports tournaments, pay utility bills, shop across categories like entertainment, food, shopping and travel, or buy almost any OTT subscription, watch over 350 channels and more.
All right, that's Vodafone, of course, and you know, the loss of customers has been hurting, and which is why, independent of whatever they would have done in the numbers, the stock under a bit of a cloud today. Sudeep, is telecom worth a shot at all, or would you just stay away now?
Well, Vodafone, I think I'm worried.
What about the others too, Sudeep? I mean, considering that Starlink or Elon Musk is on his way to India.
Well, I don't think there will be a major challenge as far as both Reliance Jio platforms as well as Bharti. I think both are on a solid ground. They're gaining customers. The ARPU has been going up and expected to go up even further. Vodafone's global operations have also stabilized. So I'm not too worried because of Starlink's and the Amazon, terrestrial satellite-linked communication coming into India. So these two companies, Reliance Jio platforms as well as Bharti Airtel, is absolutely fine. Vodafone, of course, there are many question marks.
Okay. Sudeep, you're about to talk to Bharat Forge. Their numbers, I mean, revenues fell a little bit because of the European automotive market's performance, but margins have improved because of multiple factors. What do you think of some of these auto anchors which are, global in nature, have some other businesses too? Because there are a few of them now.
I'm extremely positive. In fact, if you ask me between auto and I think I will vote for auto ancillaries. I think these are some of these, as you rightly said, have become global companies with global businesses. So when you may be having challenges in Europe, but US is doing well, India is doing well, some other geographies are doing well. So they have a hedging mechanism of one business not doing well, one geography not doing well, other geographies doing well. Bharat Forge in particular has also defense related capabilities, and they're expanding that rapidly. So let's see how far they can scale up defense, with defense make in India becoming the buzzword and defense companies getting significant higher valuation. We'll wait and watch how far and how fast Bharat Forge can scale up their defense capabilities in India. Of course, US large trucks, class 4 trucks, that determines Bharat Forge's performance to a great extent. And we'll have to see what their comments are on that. Overall, I'm positive on Bharat Forge. I think there is, for a medium to long term, there's nothing to worry. These kind of challenges come in some geography or the other intermittently, but that's nothing to get worried about as far as Bharat Forge is concerned.
Okay, well, let's ask Amit Kalyani about what went in the quarter, because it was a flat quarter on the revenue front. EBITDA was down about 4%, but margins improved from 16.4 to 18.6%. Amit, good having you. Thanks for joining in. From that quarter wherein there was this small warning given, Amit, things have changed a bit, but I would love to understand how you thought about the business momentum in the quarter, because for almost the entire part of this quarter, thus far, we've heard management cite challenges in the environment, except for the last 2 days when people have said that now the government is starting to spend a little bit and things seem to be turning around.
Yeah, Neeraj, it's you're completely right. With the overhang of the central elections, there was, let's say, slowdown in capex spending and payments in many of the infrastructure sectors, which had its cascading effect on the CV sector and overall capital formation in India. Hopefully, we expect that now that all that is behind us, and hopefully in less than a month, Maharashtra elections will also be done. A large part of the electoral stuff is behind us, and we can get back to business at hand. The good news is that in spite of the overall weakness, or let's say uncertainty in many parts of the world, due to our diversity and new businesses, both defense, castings, and also our forging business have performed well. We have won more than 2,200 crores of new orders in the first half, out of which defense is about almost 1,400 crores, and then aerospace is a large amount. Then in the casting and forging,
we see
business momentum will keep growing.
We lost your audio just for a bit there, Amit.
Sure. Yeah. So what I was saying is that we have won almost 2,200 crores of business in the first half, out of which about 1,400 crores is defense, and about 300 crores is aerospace, and then the rest is between our casting and forging business. Translate into larger business opportunities for us in India. We're gearing up for that. We're already seeing larger opportunities, more customer conversations and traction starting. And also with the election of President Trump, there's a huge demand shift from China to India, where people are getting prepared for a potential tariff barriers coming.
On that point, those potential tariff barriers would apply to Indian companies and Indian exports as well, isn't it? Can you just quantify that vis-a-vis China? What is the advantage you see, not just for India, but of course for Bharat Forge as well?
See, we don't know what the tariffs are going to be, but definitely there will be a significant tariff differential between us and China. And Indian companies are competitive. Indian companies are part of the global value chain and supply chain. And, with this whole migration from Europe to outside of Europe, plus, migration out of China into other places. I mean, look at our defense business, okay? Last year we did 240 crores, and just the order wins in this first half are 293 crores. So that should tell you what kind of momentum we are seeing with the China plus one in these high technology and strategic areas.
This is coming from India, and how much from the US, just to give us a perspective?
This is all exports.
So all exports, and how much from US?
So a large part of the aerospace is all to the US.
Okay. Okay.
So I would say 75-80% is to the US.
And you expect that to grow to what extent? I mean, obviously you can't quantify, we don't know, tariffs, a lot up in the air, but just since you're sounding so optimistic about US, what is the outlook there?
You know, we expect that if you look at the aerospace business, we expect to be able to multiply our business in this space in the next 3 years. So more than double it in the next 3 years. I would say double, even triple it in the next 3 years. And these are all high value, high technology products that we make.
So suffice to say that defense, both in terms of, for lack of better terms, the top line or the revenue front, as well as the operational metrics, because it's high quality products that you're giving, will only grow and grow to 2x, what have you, over the next 3 years. Defense at large can do that?
Yes, absolutely. And please remember that we don't need any capex for this. So this will have a large flow down into bottom line and improve our ROCs and cash flows.
What numbers are you looking at, Amit, when you think of it? I mean, it's tough
our
times currently
ROC
globally.
target internally is to be in excess of 24%.
From a current, sorry, excuse me for not knowing that number right now.
So currently we're at about 18%.
Okay, 18 to 24. Okay. Amit, the other thing is this international subsidiaries. In your presentation as well on the exchange, you've spoken about how you hope that in the second half, you look to improving that. It's been in the works for a while. Can it improve in a scenario which is as volatile as the globe is currently in the second half?
So look, when we started our restructuring to downsize and reduce cost, that started about 6 months ago. We made a pretty drastic, let's say, planning that we should be even at 60% or so of their previous volume. We should be at a break even. But if we need to increase that, we will. We definitely are aiming that our European business has to break even at a PBT level this year. And we will do whatever it takes to make that happen.
What will you do, Amit? I mean, I just wanted to come to you on Europe. Your PBT is minus 527 crores. You're saying you will break even this year. Where do you see that impetus coming from?
So look, there are three things that we are doing. One is we're going to reduce our overheads and our operating cost. Second is we're going to increase our revenue, and we are also going to reduce our interest and other costs.
Okay.
I don't know where you got this 527 number. I'm sorry, that is incorrect.
Okay.
You know, the number for Europe is 527 million. That's 52 crores.
Okay. Okay. 52 million.
Yeah, 52 crores.
Okay.
Yeah, 527 million.
Okay.
Yeah. I was wondering where you got that figure from otherwise.
No problem. Amit, one quick update on forgings business as well. After 3 very strong years, again, as your presentation said, there's a bit of a cool off there. But I'm just trying to correlate this with how North America Class 8 truck sales impact would be, because there the recent numbers that came out were very strong too. So would you expect some optimism from that geography?
Yeah, I'm not, I think the forging business is very strong, continue to get stronger. We are increasing market share. We have lots of new programs that are on the anvil, in the pipeline. And, we are now supplying our forgings into new sectors, which we had never even considered were possible for us. So I would expect the forging business to also continue growing at a double digit, in spite of the weakness. Look, 1 quarter or so, we may have, some inventory corrections, etc., which you can't do anything about. But otherwise, I expect to see, continuous quarter-on-quarter improvements and growth. And some of our other sectors, such as e-mobility, such as aerospace, will start contributing a larger share of our, both top line and bottom line in the years to come.
Okay. No, I'm just trying to differentiate that Indian auto or Indian CV may be under a cloud, but global, you think ex-Europe things will look okay on the automotive
absolutely.
front.
Absolutely.
Okay. One last question from my end, Amit. Any kind of capital raise that you would need to do for any of the global acquisition / capex plans that you may have in the next 6 to 12 months or 6 months maybe?
So, we have an enabling resolution for a fundraise of up to 2,000 crores. And this, this had certain assumptions in place. We will, we have the enabling resolution. We have our, AGM or shareholders approval. We are considering it, and we will see what we need to do for this. But even if we do it, it's not going to be a large fundraise, and it could be a combination of various instruments.
Okay. Okay. So maybe we talk about what the capital raise is meant for and what instruments once it's formally announced, maybe in a couple of months' time. But okay. Well, wishing you all the best for a strong second half, Amit Kalyani. Thank you so much for taking the time and speaking to us. That's Bharat. Thank you. That's Bharat Forge, and very constructive on defense, of course. Automotive India may see a bit of a lackluster thing. Ex-Europe, global may look okay. Just didn't get that exact clarity on whether the government spend has come back in India and whether they are seeing that. A couple of companies have said that. Didn't get that clarity from Amit Kalyani.
So I suppose defense spends also come in fits and spurts.
Yeah.
That might be one of the reasons.
Yeah, but for automotive as well.
Not really.
Not really
yet. And that we'll have to wait and see. But I thought what was important was how bullish he is on
defense.
what Trump means for India.
Yeah.
And aerospace, he's saying up to 3x, on a conservative amount 2x, the business that they're doing in the next 3 years. So that was good. Bharat Forge, I think now in positive territory, about 1% up, as we've been speaking to Amit Kalyani. Very quick break. On the other side, we get the technical view, not just on Bharat Forge, but also your top buy today, sell tomorrow ideas. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
right, welcome back. You're watching India Market Close, and all right, maybe we'll be headed for a better close than could be expected. We're still completely range bound. The Nifty IT now actually in the red. The Bank Nifty has given up all of its gains. Coach, I just want to quickly come to you on Bharat Forge, if you have a view, and what would be your BTST call, if any?
Sure. So Bharat Forge is actually shaping up quite interestingly. I mean, the downward journey started somewhere in the mid of June, but now it's close to its medium-term averages of, or rather medium-term support zones of 1300. On the daily setup, there's a positive divergence as well, which is, certainly a strong indicator. So I would not hesitate, maybe, not a bad idea to start accumulating Bharat Forge at the current level. The risk-reward ratio certainly seems favorable on the way up. You're looking at a 1400 as the first target, 1420 if I'm being precise, and then once that is taken out, perhaps even a 1490 as well. So from a risk-reward setup perspective, and as I said, a positive divergence perspective, Bharat Forge looks interesting, on the chart. Now I have two ideas today. Similar is the theme, which is a long and a short. Thyrocare is a stock that we've discussed, last week as well. Was doing well. It was just yesterday that it saw a bit of a crack, but it regained most of the lost territory from yesterday. So Thyrocare can be considered not only from a BTST perspective, but from a medium-term buy as well. 1020, 1070 are your targets. 950 is where you place that stop loss. On the short side, I've got SBI Life. Again, seen quite a bit of downturn, still under the 200-day moving average. I know it's about 1% up today, but I would take this bounce as an opportunity to sell into 1540, 1520 are my targets, and 1590 is where you place that stop loss.
Okay, just before we go to Zaggle Prepaid, Sudeep Bandyopadhyay, you heard Bharat Forgings. We were speaking to RK Forgings in the morning, and RK Forgings was saying that the October, November, December results will be much better than what the street fears as well. Now you've heard Bharat Forge too. You mentioned your constructive auto anchs, understood that. Anything else within this manufacturing space, railways, defense, etc., that might seem constructive?
Well, I think, what I've been bullish on is the defense piece. And for Bharat Forge also, I mentioned that defense is going to drive this company's, earnings momentum going forward. Forging business will be, some geographies will do well, some won't do well. And this will continue the way I look at it in the foreseeable future. But defense pickup is what will define Bharat Forge. That may not be applicable for other auto companies, where I think their components, what they are manufacturing, will be the key determinant. And if I look at that aspect, I think some of these companies, including Samvardhana Motherson, looks good. As far as overall manufacturing space, we do like, I don't know whether we want to call it manufacturing or not, the power generation companies. I think that's one space where we believe there's a structural change which has happened in India, and power generating companies, whether it's an NTPC or NTPC Green Energy, Tata Power, all these we like for long term. Apart from that, some of the the power related manufacturing activities, particularly the boiler, we were very pessimistic on BHEL because of its performance. They have been disappointing the market every quarter, but current results which came for the last quarter, for a change, I think that was much better than even what was expected. So from a long-term perspective, again, BHEL does look good. After the correction, it is becoming even more attractive.
All right, so BHEL is something that Sudeep Bandyopadhyay likes. We're talking right now about Zaggle Prepaid. Their numbers for the quarter look pretty solid. Revenues up 64%, earning from operations up 82%. Margins have also improved to the 9% range from 8.1%, and profit after tax is up 165% from 7.6 crores to 20.2 crores. So that really has seen the big boost. Avinash Godkhindi is with us. He's Managing Director and CEO of Zaggle Prepaid. Avinash, great to speak with you, and thank you for giving us time here on NDTV Profit. Let's start by talking about what has perhaps worked for this quarter. We've seen a lot of announcements of new tie-ups. Has that, actually contributed to the increase in profits we've seen up 165%?
Thank you so much for having me on the show, Tamanna. I appreciate it. Look, I think it's a momentum that we've been building for the last few quarters for us, and we are really capturing market share every single day. As a listed profitable company, profitable for the last 5 years, which is rare in the fintech space, we stand to gain a lot in terms of credibility, in terms of trust from corporates and partner banks, and that's really propelled our growth. Not to mention the quality of our software and the solution set that's expanding. Our Zoyer product is doing very well. We've now started seeing traction on our fleet program. We're very bullish of what we're doing with ONDC. So a lot of these programs, are seeing the light of the day, and those are contributing to the momentum as well.
Okay, give us a sense of where the margins look like they will settle. Avinash, are you looking at 9% as the standard for the rest of the year as well? What is your FY25 margin guidance?
So this year we would be in this range of about 10%, give or take a little bit here, there, Tamanna.
So you're expecting second half to be as eventful as the first half?
Oh yeah, second half is always best for us. We have always seen our second half to be a much stronger second half than first half. That's the nature of the business. There is cyclicality in the business, so we see that already. And overall, in the medium to long term, we've given a very clear guidance that about in the next 4 odd years, we should be in the range of 15-16% in terms of EBITDA margins, right? So 3 to 4 years, we should be there.
So your 11 to 13% outlook comes in the next 3 years, you're saying? Right now, this year, you're saying
I'm saying about 3 to 4 years time from FY25, we should be in the range of 15 to 16%.
15 to 16%. Okay.
Yes.
Okay. What are the kind of clients you're looking at now? You've had a lot of financial clients coming in as well in the first half. Are you widening that base? What is the kind of client pipeline that you're seeing?
So we are looking at large enterprise accounts. We are seeing a lot of use cases emerge around petty cash. So these are companies which are retail stores. It could be, your NBFCs. It could be AMCs. We are seeing tremendous traction there because petty cash is a problem that's almost universal. Anybody who has stores or has branches, their petty cash never reconciles, right? So that's one case. BBPS, which is the Bharat Bill payment system, is something that goes very well with the petty cash solution, because if you have a distributed workforce sitting across multiple locations, and if you have a petty cash problem, you definitely are likely to have a utility bill payment problem. So those are kind of solutions which we are easily able to execute through Zoyer, which is our accounts payable platform. It's working beautifully for our customers.
Avinash, good afternoon, and congrats on a good quarter. I was looking at the statements that have come in your earnings release, and your chairman has said that you are upping your guidance to 55% growth for FY25 and doubling FY24 revenues in next 2 years, which means that in FY26 you would reach from what, 776 to 1500 odd crores by FY26?
Yeah. Definitely.
1500 crores. And
1550 crores.
1550 crores.
Easily,
and if that is accompanied by an expansion of margins from 9% to what? Did you say 16%?
Not so soon, Neeraj.
Not in FY25. Not in FY20. Okay, in 4 years. Okay.
I wish your words are true, but we need to be realistic as well.
But so,
right?
But so till FY26, what number do you reach? Because then I'm thinking that you're not only doubling your top line, but you're doing even more on the bottom line, right? Because you are also benefiting with the margin expansion.
Yeah. So, the way we see is, first of all, our guidance was 45 to 55% for the beginning of the year. We've upped it to 50 to 55% because we're clearly seeing the tailwinds for the growth. Margin expansion typically, in our experience, follows top line expansion and then gross margin expansion, because there's a lot of operating leverage in this business. Once you got entry into a corporate, you're able to cross-sell, upsell, you're able to get more usage, more spends from corporates. So that's the nature of fintech, a tech business. So I wouldn't want to really place a finger and put a certain number on the margin on 26, how that pans out between 26, 27, 28 and beyond. 29 is something that we'll have to see, but we are fairly confident that in the next 3 to 4 years, we will be in that range of 15 to 16% EBITDA.
It's a fundraise. You just came out with an issue, isn't it? So, too soon to do a fundraise, or is it business looking that strong? It's and what quantum of dilution would this mean? 900 crores that you're planning to raise?
So, Neeraj, this is an enabling resolution. We've got the board approval for up to 950 crores. Shareholder approval is yet to come through, which is likely or supposed to come in whatever the result by 2nd or 3rd of December. And that enabling provision then is valid for a year, assuming the shareholder approval comes in, right? So, the opportunities are there to grow organically, opportunities are there to grow inorganically. And we are always on the lookout for good quality, high quality businesses. One of the things that's happened over time is, a lot of interesting companies in the SaaS fintech space have gone through a little bit of a funding winter and challenges. And those could be good opportunities for us to look at.
Okay. Avinash, we wish you all the best for that and more. Thanks so much for taking the time out and being with us, and congrats on a good quarter.
Thank you so much for having me. Appreciate it.
That's Zaggle, and well, good quarter indeed. It's a differentiated model, Sudeep. Have you had the chance to look at this one? Did you like what they've said? They're doubling, they're 55, upping the guidance and talking of doubling revenues from 24 to 26. Margins nearly doubling over 4 years.
Absolutely, Neeraj, I do like the model. It's a differentiated model. And what I more like is what they're now saying. They're taking the enabling resolution for fundraise. And this very clearly, when he was talking, it was coming out that this is going to be used for acquisitions. These opportunistic acquisitions which they're looking at will fill up a lot of product gaps and make their product suite complete. And this is a perfect time. This is absolutely right that there are a lot of funding challenges in the entire ecosystem. And if appropriate products, companies with appropriate products are acquired at this stage, that will take Zaggle forward pretty faster. And his goal of doubling the margin over a period of 4 or 5 years, instead of that, he probably will be able to do it much, much faster. So I will keep watching this company as to what they do going forward.
Sudeep, we had a guest today in the morning who spoke about having spoken to cement companies who are saying that there is some bit of spend happening and therefore the volume growth numbers might start looking a bit better. The industry has largely been bombed out in the quarter 2. Can there be a change happen in quarter 3 itself? And are you constructive stroke bullish, or would you look for better areas, better sectors?
No, Neeraj, I definitely believe that Q3, Q4 will be much better compared to Q2. Q2 normally, historically, the rainy season, monsoon and things like that. So the cement consumption definitely shrinks in Q2. And this year we had the elections and a whole lot of other things which led to a lot of challenges as far as cement consumption, construction activity is concerned. But Q3 should be better and Q4 should be even better. I think the season of elections is getting over very soon. And the projects will start getting implemented, and private construction is also happening. Real estate has picked up momentum. Monsoon is behind us. So yes, cement consumption will definitely improve, and that should reflect in the financial numbers for Q3 as well as Q4. As far as my view on cement is concerned, if you're a long-term investor, I think cement is a good sector to invest in. But either you take a strategy of staying with the leaders, let's say you buy an Ultratech and sit there, or you become a little bit of aggressive and opportunistic investor and look for acquisition targets. A lot of acquisitions, a lot of M&A is happening in this sector, and we believe that that is likely to continue in the near future as well. So pick up some potential target and sit there for corporate action.
Okay, the other question really, Sudeep, is now that we will have the whole result season behind us, what are the next big triggers that you are seeing? And we've been talking about government spending coming in, maybe an improvement in Q3 in some consumption-led companies. But till that works out, what do you think are going to be the sort of safe bets right now? And would large banks be on that list?
Large banks can always be on that list, Tamanna. I think BFSI valuation never skyrocketed like many other sectors, and they are performing commendably well. Look at ICICI Bank, look at the numbers quarter on quarter they are producing. I think there's absolutely nothing to complain. So somebody picking up ICICI Bank and deciding to hold it for a couple of years, I think they will do well. I have no doubts in that. But beyond that, I think a couple of sectors I believe should continue to do well and will probably do even better going forward. One is technology. I think apart from the challenges in visa with the new administration, as far as their work is concerned, the opportunity is concerned, will definitely increase. And a lot of Indian companies have significant presence, onshore presence in US, which is being encouraged by the new incoming administration. So IT is one sector where I'm definitely positive. And this is going to be positive to my mind for the next 3-4 years. And one can look at that. Of course, valuation is a challenge in some of the mid-cap IT names. So one has to pick up stocks selectively. The other space where I am positive, and it's again a kind of a bombed out space, is FMCG, particularly today. I think FMCG taken a big hit. While the rural consumption has picked up a bit, urban consumption is lagging, and there are lots of challenges which is coming out. But I believe that a country with the kind of population India has, the kind of opportunity India has, FMCG and the well-managed FMCG companies will eventually bounce back and do well. Urban consumption has some challenges, but I'm reasonably confident that that will get addressed. Festive season is on, then the winter and the fourth quarter is generally good for Indian businesses. So Q3, Q4 should be much better for FMCG companies, and strategic position can be taken in FMCG companies, taking the opportunity of this dip.
Okay. So Q3, Q4 should be much better. That is, of course, if FIIs come back. Let's talk about the elephant in the room, which is foreign investors. They've remained net sellers for 33 consecutive sessions. I'm not sure if that is a record, but I'm sure it is of some kind or the other. Will they continue to sell, or will the tide change? Why are they selling? What is the view out there on when the tide could change? Mihika has put together this report. Yes, Mihika.
Thank you, Tamanna. Something that's been adding pressure to our markets amid a very weak Q2 season across many sectors has been foreign portfolio investors, and they have remained net sellers, like you said, for 33 consecutive sessions. Now, this has led to a total outflow of 1.5 lakh crores from Indian equity markets. Now, 2 months of consecutive selling, when we see November 2024, we've seen 21,000 crores worth of outflows so far, and in October, we saw 94,000 crores of outflows from foreign portfolio investors. Now, why are FPIs selling? Well, 2 reasons. First is the China stimulus package, which triggered a tactical outflow from India, according to experts. And now, because of a fund reallocation, these funds are now being allocated to China from India. The second factor is the impact of the US elections. Now, the Republican win has led to rising US bond yields and the dollar, and better US market performance have been leading to emerging markets outflow. Now, investors are switching from Indian equities to US equities in anticipation of higher interest rates, and Trump's potential fiscal stimulus could drive up long-term interest rates as per experts. Now, when will FPIs continue to sell? Well, experts say that foreign investors are far from hitting the brakes from the selling spree and are unlikely to return to India in November. So we could see this sell-off continue till November, and India will continue to face continued capital outflows as the global sentiment around emerging markets continues to fluctuate. But fear not, the Indian growth story from a long-term view is still intact. According to Neelkant Mishra, the current price to earnings premium of 15 to 17% after the correction when you compare to global peers is now reasonable, and there is room for expansion. And optimism of experts comes around because of the 7% economic growth rate, despite the market volatility, and this optimism is led by factors like declining inflation and higher local investor participation, as retail investors are now realizing that the markets are from a long-term view.
Okay. Hopefully retail investors will continue to be our, the hope for the markets, and at some point the tide turns as far as foreign investors are concerned as well. Thank you for that, Mihika. Now, on that note, Kush, as we're winding down, what would be sort of the top call that you would look at coming Monday? We have 3 days ahead of it. Would you pick up anything in the auto space? Because you're going to hear from Hero over the next 3 days. Hyundai's numbers will be out as well. Auto Anks, anything looking interesting there?
So from the manufacturers, I think Mahindra and Mahindra still looks interesting. I mean, you cannot not have this one in your portfolio. With the kind of correction, it's come closer to the support zones. The meaningful ones come in close to 2650 levels. So I think the risk reward ratio fairly favorable. So any kind of dip further will only make it more attractive from my perspective. So Mahindra and Mahindra for sure. One other company that
Mahindra at the current levels. Kush, Mahindra current levels, and what would be your target stop
even
loss?
At the current level.
What would be the target stop loss?
In fact, if you're buying at the current level, then this 2650 will act as your positional stop loss. On the upside, you're looking at 3000 as the first target, and once that is taken out, 3200, the recent high, as the other target. Now, one more company that has been on our radar, Auto Ank, posted, I think, fairly decent numbers and now is showing signs of recovery, is Lumax Tech. Has been in a bit of a near-term downtrend, but from the 200-day moving average, once it's breached that, now the stock is starting to show signs of revival. So on the way up, I think this makes a good trade, a positional trade at that. The 480, 490 zones, those support zones act as your stop loss. From a 6-month perspective, I think you're looking at targets, as high as perhaps 575 and 620 as well. So Mahindra and Mahindra from the manufacturer space and Lumax Autotech from the from the ancillary space are something that we've got on our radar.
Okay, Sudeep, one last question from my end, and Kush, thanks for the ideas, of course. But Sudeep, one last question. Anything in the results commentary that you've liked particularly? There have not been too many instances, I guess. Maybe some jewelry companies, maybe a couple of others, but anything that you really liked?
Well, I think today's Eicher Motor commentary was quite interesting. If their commentary hadn't come, the stock wouldn't have reacted the way it reacted. So that, I think, is a very, very positive commentary. Others, I can't really recall, something very exciting which is going to be there. I think I talked about Bharat BHEL. That's what was a pleasant surprise. After many, many years of disappointment on a continuous basis, order wins were there, but the performance was terrible. I think it was a very pleasant surprise as far as the numbers are concerned.
Okay, Sudeep, thanks for that. Kush, thanks for that as well. And viewers, I don't know if we can pull it off, but in the morning, we had given an MK note on Eicher Motors, which laid out what Eicher had said, and I don't know if we can pull this up, but if we can, it'll be great, because what Eicher had said, viewers, and there are very few companies who are saying this, that not only was their festive season looking strong, but the post-festive demand is even stronger than the festive season. I think that is something that hardly companies have said, and therefore no wonder that Eicher is doing what it has done.
If you recall,
right here on the screen.
Excellent. If you recall our conversation with Rakesh Sharma of Bajaj Auto, he did echo something similar, that the last 2 weeks, and especially because festive demand kind of festive period spilled over between end of October and November, he said the last 2 weeks have been completely rocking. Yeah. So, yeah, maybe you are going to be seeing some kind of turnaround. Eicher, definitely the champion of the day.
Yep, most certainly. And just very quickly, let's put the heat map up before we talk about the broader end of the spectrum, because the large caps there's not too much there. But yeah, thank you for pulling this up about Eicher. But yeah, this is what it is. FMCG has sulked big time today with HUL, Britannia, Tata Consumer, Nestle. That bucket really putting pressure. On the flip side, yes, Eicher and Hero, some bit of life insurance, and HDFC Bank not sulking with 0.5% uptick. That's good. A brief interlude for Reliance as well. Let's see if this continues next week.
Yeah, so more than the key indices, it was the broader indices which were having a better day, and you're ending completely flat, which all things said is not too bad. Looking at the kind of week we've had, Nifty Mid-Cap 100 up about 0.5%. Your small cap, micro cap stocks also doing fairly well. In fact, small cap 250, nearly 1% up. Bank Nifty lost steam. IT struggling to keep its head above water. So what you should look at truly is the key indices, your sectoral indices, and then let's look at the breadth of the market as well. And nothing really moving there. It's all about FMCG. I found Realty's resurgence quite interesting, Neeraj. And if we can pull up the constituents of the Nifty Realty just for a second to see what was working. Because remember, Brigade seeing a bit of pressure in the morning and then recovered as well, ending 2.5% up, not bad. Overall, Realty also doing fairly well. Let's just look at the broader markets and then what the week has looked at before we wrap up for this afternoon. Broader markets, this has shrunk a fair bit. So pressure coming in at the broader end of the spectrum, no doubt about that. 1226 versus 908. Top gainers and losers on the BSE 500 very quickly before we look at the weekly charts. Nothing changing rapidly or radically there from the last 1 hour. I would say maybe a Maharashtra scooters and Mishra Dhatu.
And this is a surprise, Tamanna. Deepak and I tried to. The numbers were fairly ho-hum, but to do a 5% is very strong.
Yeah. So this week has been a tough one. Nifty down about 2%. Let's look at the Bank Nifty, about 2.5%, and the mid cap and small cap indices at the end of it have actually been hit worse. Portfolios have been hurt this week. Look at the Nifty small cap 250, down over 4%. So here's where the pain has been. Nifty IT, the outlier, about 1.5%, but you know, there's just so far that Donald Trump can take you. Not everything is crypto. So at the end of the day, you have to pull up your socks, and that really is the lesson over the long weekend for market participants.
Yeah, well, some investors would be hoping they rather have been in crypto than elsewhere. But on that note, yes, indeed. On that note, though, from Tamanna and me and the team that has put this show together, thanks so much for watching. And to all of us celebrating Guru Nanak Ji Jayanti tomorrow, happy Gurpurab.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles.
From Nasik town are massive sprawling fields of grapes. Nashik, remember, is called the grapes capital of India. It's almost like the grape city. But this entire region of North Maharashtra is known for grapes, onions and also sugarcane. Let's try and speak to some farmers who are involved in the grapes cultivation. So, आपके क्या-क्या issues हैं इस चुनाव में?
इस चुनाव में ग्रेप्स के लिए जो जैसे अभी गन्ने के लिए जो कारखानदार है वो उनका यूनिटी रहता है और उनके मिनिस्टर भी रहते वो पॉलिटिकल में मतलब सरकार में, तो उनके जो क्वेश्चन है वो इमीडिएट सॉल्व हो जाते हैं, लेकिन शुगर केन वाले का, लेकिन ग्रेप्स के लिए इतना तकलीफ है 4 साल से, लेकिन अभी तक उसको कोई भी जैसे होना चाहिए था, वैसा कोई भी अभी तक मदद सरकार से मिली नहीं है। 4 साल से अनइवन रेन आने से किसान मतलब अभी जो ग्रेप्स के गार्डन है वो कट कर रहा है, खेती बेचने को आया है, लोन बहुत हो गया उसके ऊपर, ऐसी परिस्थिति है। तो गवर्नमेंट को हमने दिया है अभी हमारा जो डिटेल कि क्रॉप कवर का कितना खर्चा आता है, कौन सा पेपर है, कैसा होना चाहिए, उसमें तुम 50% सब्सिडी दो। अभी गवर्नमेंट ने अभी ट्रायल बेसिस पे 100 हेक्टर पे उसका ये मंजूर किया है।
तो चुनाव में इस बार क्या होने वाला है?
चुनाव के अंदर है ना, कोई भी आए उसको शेतकरी जो फार्मर है उसके लिए कोई चिंता नहीं रहती। अभी देखो ये ग्रेप्स का जो रीजन है वो इधर अभी अनइवन सीजनल रेन अभी गिरा है, तो उसकी वजह से बहुत सारी दिक्कतें आ गई। जो प्लॉट प्रूनिंग हुए थे सितंबर के अंदर में, वो प्लॉट के अंदर बहुत सारे नुकसान है। समझ लो कि मेरे हिसाब से 80 to 90% जो सितंबर में प्रूनिंग है उसका नुकसान हो गया है। अभी अक्टूबर में भी जो प्रूनिंग हो रहा है अंगूर का, उसमें के अंदर है ना थोड़े कम ज़्यादा माल है, और ज़्यादा माल अभी वो दऊ की वजह से बहुत माल की गलकुज हो रही है। तो समझो कि इतना बड़ा नुकसान होके भी अभी इलेक्शन का माहौल चल रहा है, तो इलेक्शन के माहौल में खेती वालों के या शेतकरी के लिए सरकार का कोई लेना देना नहीं है। अभी
जो गारंटीज है उसमें तो काफी किसानों के लिए अनाउंस किया है दोनों तरफ से, महाविकास आघाड़ी ने भी किया और महायुति ने भी किया है।
मैडम ये सिर्फ अभी क्या है, चुनाव के बारे में सब लोगों को गाजर दिखाया जा रहा है। चुनाव होने के बाद कुछ भी ये लोग करने वाले नहीं है। किसान को तो क्या चाहिए, उसको हमी भाव चाहिए। सपोज हमी भाव तो कोई भी सरकार आएगी, सेंट्रल गवर्नमेंट में कोई मोदी सरकार आए या सेंट्रल अभी इधर स्टेट गवर्नमेंट में कोई भी अपनी पावर की सरकार आए, शिंदे के आए, ठाकरे को, उसके वो सिर्फ अभी चुनाव के बुलबुले चल रहे। वो फार्मर के लिए उनका कोई लेना देना नहीं, सिर्फ वो घोषणा चल रही है अभी। बाकी का शेतकरी के लोग जो भी बाकी के कमोडिटीज़ वाले जो भी है, सपोज ओनियन है, अंगूर है, शुगर केन है, शुगर केन के लिए तो मिनिस्ट्री सब ऊपर बैठी है, तो उनके लिए तो सुना जाता है। लेकिन अंगूर ऐसा है हमारा, तो अंगूर का कोई ऊपर उधर सुनता नहीं। लेकिन हमारी जो MRDBS नासिक के अंदर या पूरे महाराष्ट्र के अंदर जो यूनियन है हमारी, महाराष्ट्र द्राक्ष ग्रेप्स ग्रोअर एसोसिएशन, तो उनकी तरफ से बहुत सारे क्वेश्चन उठाए जाते हैं, सेंट्रल गवर्नमेंट भी और स्टेट गवर्नमेंट में भी। तो उसके ऊपर तो कोई वो ध्यान भी नहीं देते हमारे ऊपर।
Though the growers like Balirao and Gadak may be concerned, there are those like Jagdish Holkar who ventured into wine production in 1998 and are looking at expanding their wineries. You are one of the, initial people who started this business. How is it going for you, and what are the concerns for businessmen like you?
Actually, wine is very passionate business. It's not a business, it's a passion. In 1997, few farmers, we were there for the study of wine in France, as France is very famous for its wine and all European region. So we were there. We were into grapes earlier, but we were producing table grapes. The entire Nashik Valley, most of the grapes are the table grapes. But we have started the story making wine out of the grapes, and these are the wine grapes varieties called Shiraz. We have Shiraz, Chenin Blanc, Cabernet Sauvignon.
And what are the concerns for someone like you whenever there is an election?
This is an agro-based story. It is very much concerned about the elections because, see, as we are a farmer, we are thinking how we can go for the value addition of our agriculture produce. That is very vital. And so that's how to convert into perishable into non-perishable. We have thought of making wine out of the grapes. But we can produce as much as wine we want. But the doors are not open yet.
Okay. So is the present Chief Minister friendly for your business?
Yes. Each and every government, they are thinking how their state can progress. Maharashtra is of all-time progressive state. So everyone has to consider how they can give a justice to the agriculture produce.
Nashik is part of northern Maharashtra. This largely agrarian and tribal region of the state has 47 seats in the 288-member state assembly. After the massive electoral loss in Lok Sabha polls earlier this year, Mahayuti faces a litmus test to regain its control in this region. Mahavikas Aghadi had won 6 of the 8 Lok Sabha seats in northern Maharashtra. This region has been a bastion of Shiv Sena for over a decade. Chhagan Bhujbal, once a prominent OBC leader within the Shiv Sena, switched to the Congress and then to the NCP. He remains popular here. मतदान किस पर होगा?
मतदान वो घड़ियाल देने का है, छगन भुजबल।
क्यों?
वो बहुत अच्छा आदमी है, वो गरीब आदमी को उसने काम किया है, वो खेती वाले जिन्हें ना उसको मदद करता है।
आप तो वोट देंगे ना जाके?
हाँ देंगे।
मन बना लिए किसको?
भुजबल देंगे अभी।
भुजबल देंगे, क्यों?
वो अच्छा आदमी है।
This election has 2 from the family in frame. While Bhujbal Senior is contesting from Yola constituency for the 5th time, his nephew Sameer is an independent candidate from Nandgaon seat. Chhagan Bhujbal's son Pankaj had won the assembly polls from Nandgaon in 2009 and 2014 from the undivided NCP. He also secured victory in the 2009 Lok Sabha polls. In Maharashtra, we see a lot of politics which is about uncles and nephews. So dynastic politics, we are seeing a lot of it at play in these elections.
So there might be this kind of instances happen in other constituencies also, but here I have come specifically because of public demand. From last 1 year, all people from this constituency are persuading me that I should come and stand for the election, just because the harassment of this person here, not only for the leaders but all in general people also. They could not even get the ration card also. That kind of terror he has been doing here.
But why are you contesting as an independent?
See, because we were in alliance with BJP, Shiv Sena, Eknath Shindeghat and NCP. So when we were in alliance, he's the sitting MLA from the Shindeghat. So, but naturally the preference was given to him. We, our people and everybody had asked for the ticket. Then unfortunately the ticket went to the Shindeghat. And then from all the people said that now we don't have any option but to contest as an independent. There was an option that I could have joined another party, but I didn't do that because my aim and motto was very clear that I want that this should be free from all the disturbance, and whatever happening here, that should not be happening again. So that's why I have come here.
But as a rebel, don't you think you're damaging Mahayuti more?
No, I don't think so. Otherwise, I would have been also got a lot of pressure from the party that I should withdraw. But everybody knows this candidate, how he is. And he has not only troubled the public at large, but also the officers of government, revenue officers or department, or everybody has been threatened by him. When I resigned, and that day only I gave that this should be a Bhaimukta Nandgaon, and we will take this Nandgaon in the way of development. After 2 days when I was filing my nomination, and one of my colleagues was speaking on the stage. Just after he finishes his speech, he comes and sits next to me, and the MLA directly calls him on his phone and thrashes him and abuses him. And the same thing I did a speaker call, on the speaker and placed in front of the mic, and everybody will listen to him that how he was abusing him.
So are you banking on your uncle's goodwill?
No. See, my goodwill as an MP, I had done a lot of work like airport and all, lot of development I did. Then in Yeola is next door only here. There also I have done a lot of work too. So since he was an MLA minister there also, here also I have done a lot of work. As an MP also I have done a lot of work, and my brother was MLA here. So whatever big infrastructure, architectural work, ideas was given by me. So the strong base I was having here. So
हम किसी के साथ नहीं है, लेकिन किसान के हित में जो सरकार निर्णय लेंगी उसके साथ हम लोग है। लेकिन आज तक बीजेपी ने किसान के लिए जो कुछ डिसीजन लिया है सबसे गलत लिया है। आज भी निर्यात, प्याज का जो निर्यात है वो दिखाने को चालू है, लेकिन उसके ऊपर 20% ड्यूटी लगा है। मतलब 1 किलो प्याज बाहर देश भेजना है तो उसको 9 रुपया केंद्र सरकार के कस्टम डिपार्टमेंट को भर के वो पैच बाहर भेजना पड़ता है। किसान रात दिन मेहनत करता है और उसके जो प्रोडक्ट है उसके ऊपर गवर्नमेंट टैक्स लगाती है, मतलब हमारे पैसे से गवर्नमेंट चलाती है, ऐसे हमको बोलना पड़ेगा। तो हमारा क्या है, कोई सरकार आए तो हमारा कोई लेना देना नहीं है, लेकिन ये जो सरकार आए इसने ज़्यादा किसान के बारे में गलत नीति बना के रखा है। क्योंकि जो किसान को प्रोडक्ट लगता है, फर्टिलाइज़र लगता है, दवा लगता है, इसके ऊपर इतना प्राइस है तो उसको कोई बचाने को कोई आता नहीं सरकार। क्योंकि जो कंपनी है उनके मन माने जो रेट है वो तय करती है और किसान से उतना वसूल करता है। उसके ऊपर 18 से 28% तक GST है। तो हमारा किसान का कोई सरकार देखने वाला नहीं है। और ये बीजेपी को, मतलब कांग्रेस को हमने वोट क्यों नहीं दिया था कि बीजेपी अच्छा किसान का काम करेगी, किसान के हित में काम करेगी, लेकिन आज तक बीजेपी से हमको कोई राहत नहीं मिली।
तकरीबन वही बात है मैम। अभी आज जो बात चल रही है तो किसान तकरीबन भाजपा से नाराज ही है और उसके बहुत से मुद्दे, जिसमें प्याज का भी मुद्दा बहुत है। किसान के पास पैसा आने के टाइम पे ही ऐसा हो जाता है।
किसान का ये का जो फर्टिलाइज़र का 50 किलो की जो बैग है वो पहले 1000 रुपये में मिलती थी, अब वो उसका रेट 1700-1800 रुपये हो गए। इसलिए बहुत फर्टिलाइज़र्स और पेस्टिसाइड में बहुत महंगाई हो गई।
आपने सुना किसान नाराज हैं, तो क्या ट्रेडर्स भी नाराज हैं?
मैम, ट्रेडर स्पेशली इसलिए नाराज़ है क्योंकि आने वाले दिनों में अगर देखा जाए तो गवर्नमेंट जिस तरह से 20% ड्यूटी लगा के रखा है अभी, एक्चुअली आने वाले कुछ दिनों में 3 से 4 स्टेट में काफ़ी मात्रा में, बड़ी मात्रा में प्याज आने वाला है। जैसे गुजरात में आएगा, आंध्रा में अभी प्याज चालू है, आप राजस्थान में देखा जाओगे तो अभी फ़िलहाल 1 लाख क्विंटल की आमदनी है। तो अगर आने वाले समय में अगर रेट बहुत ज़्यादा डाउन नहीं करनी है तो ये ज़रूरी है कि किसानों से, सरकार से हमारी ये विनती कि उन्होंने जो 20% ड्यूटी हटाया जो अभी है वो ड्यूटी हटा दे, ताकि ट्रेड जो है ना वो काफ़ी आसानी से हो सके। और स्पेशली नासिक का जो यहाँ पे जो प्याज है, ये ग्राफिकल इंडेक्स जो दिया हुआ है गवर्नमेंट ने, उसके लिए इसका एक्सपोर्ट में जो कुछ डिमांड है वो बहुत अच्छा है नासिक के स्पेशली। तो अगर ये समय पे अगर हमें ड्यूटी अगर हटा के पूरी तरह से ट्रेड अगर सीधा कर देती है ना, तो इसमें गवर्नमेंट का भी है कि आने वाले इसमें डॉलर अवेलेबल हो जाएंगे, हमारे इसमें डॉलर ही आने वाले हैं। तो और ट्रेड भी बहुत आसान हो, और बहुत ज़्यादा रेट में जो है वो नीचे नहीं आएगा। तो इसलिए सरकार से हमारी यही विनती है कि उन्होंने ना 20% ड्यूटी आने वाले दिनों में हटा देनी चाहिए।
फर्टिलाइज़र हो, जो दवा हो, इसका प्राइस इतना बड़ा है कि 50-60% तक बढ़ गया है। और किसान का जो प्रोडक्शन है वो 20% बढ़ा है। मतलब ये जो तफावत है ना, तो इसलिए किसान का उत्पादन खर्चा है वो भी निकालना मुश्किल हो गया है। और 2000-1500 ये जो बांटते हैं ना, तो इससे कुछ होता नहीं। मकान बनाना, कोई शादी बनाना, इतना पैसा लगता है। और जो ग्राहक भी होटल में जाते हैं, कोई मार्केटिंग करते हैं, तो कितना पैसा लगता है। और प्याज को कितना लगता है। जब सब्जी बिब्जी का भाव क्यों बढ़ता है, नैसर्गिक आपत्ति आने के बाद में उसका मार्केट में उसका आमदनी कम आता है, इसलिए भाव बढ़ता है। और वो खुद लोग, समझो कोई ग्राहक है, वो मार्केट में जाते हैं, उसका कपड़ा रहो, जो लगने वाला जो चीज़ है, इतना भाव बढ़ता है, उसका कोई नहीं। और 1 किलो प्याज हफ्ता भर चलता है, उसके लिए इतना डांगोरा पीटते हैं लोग, ऐसा तबला बजाते हैं, ये गलत बात है।
ये प्याज ही है। और यहाँ का जो किसान है ये एक ही क्रॉप पूरे साल भर में ले पाता है, बाकी तो वो महीने उसको आराम ही करना पड़ता है। क्योंकि यहाँ की जो जिस तरह खेती जो है, इसकी उपज जो है वो प्याज के लिए बिल्कुल अनुकूल है। तो प्याज के लिए कभी भी यहाँ का किसान जो है उसका पूरा जो साल भर का जो बजट है वो पूरा प्याज के रेट पे ही डिपेंड है। तो इसलिए मेरी गवर्नमेंट से फिर से यही रिक्वेस्ट है कि जो आप आने वाले दिनों में जो प्याज की जो कुछ बढ़ने वाली आमदनी, उसके लिए आप 20% जो आपकी ड्यूटी वो हटा के ट्रेड बिल्कुल सिंपल कर देवे, ताकि किसानों को भी बहुत ज़्यादा प्याज में जो कुछ रेट में कम ज़्यादा होने वाला है उसका ज़्यादा उसको उनके इफेक्ट नहीं आएगा।
Santosh Jadhav owns 1 acre of land. His crop is onions largely. He has a message for all consumers.
तुम लोग 140 रुपए में दाल तड़का, होटल में 140 रुपए में दाल का तड़का खाते हो, लेकिन 140 रुपए किलो की दाल लेने को क्यों शर्माते हो? एक दाल तड़के में कितना दाल आता है? 10 ग्राम, 20 ग्राम, या ज़्यादा से ज़्यादा 30 ग्राम। 30 ग्राम का तुम उधर 140 रुपये देते, लेकिन किसान ने अगर 140 रुपये लिया तो तुमको क्या 140 रुपये किलो किसान के पास से लिया तो तुमको क्या परेशानी होती है? होटल वाले को देने को तुमको अच्छा लगता है, और किसान को देने को तुमको क्या तकलीफ होती है, उतना बताओ।
Every 12 years, Nashik hosts the majestic Kumbh Mela. It is one of the 4 cities hosting the spiritual gathering. Next to the Godavari River at Ramkund, we meet Chetna, an accountant, Sunita, a journalist, and Meera, a former teacher. इस बार महिलाओं के लिए सबसे बड़ा इशू क्या है? क्योंकि कहीं पर भी हम जाते हैं तो वहाँ पर सब लोग चर्चा कर रहा है लाड़की बहन की। तो क्या लाड़की बहन आपका वोट डिसाइड करेगा?
नहीं करेगा, क्योंकि कैसा हो गया है कि जैसे एक तरफ लड़की बहन के 1500 रुपये अकाउंट में आ रहे हैं, जिसके आ रहे हैं उनके, बट सेकंड थिंग उन्होंने क्या कर दिया है कि जैसे महंगाई बहुत बढ़ रही है, जैसे जो रेगुलर किचन की जो चीज़ें हैं उनमें उन्होंने बहुत बढ़ोतरी कर दी है। अगर लड़की बहन के बजाय किसी ने बोला है कि 1500 देंगे, किसी ने 2100 बोल दिया है, अगर कैलकुलेशन के हिसाब से देखो तो 1500 रुपये से ज़्यादा की बढ़ोतरी उन्होंने करके रखी है। अगर वो 2100 वाले अगर चुन के आए, अगर उन्होंने 2100 के इसमें और भी बढ़ोतरी कर दी तो वो कोई फ़ायदे वाला चीज़ नहीं है।
तो महिलाएं अपना किचन का बिल देख रही हैं?
जी हाँ, बिल्कुल महिलाएं किचन का बिल भी देख रही हैं, पर साथ में ऐसा है कि नॉट ओनली किचन का बिल जो आमतौर लोगों के साथ बातचीत करने में हो रहा है कि बस किचन का बिल नहीं, पर देश की प्रगति भी देख रहे हैं। देश को एक स्ट्रॉन्ग लीडर चाहिए, वो भी देख रहे हैं कि आम जनता अभी पहले जैसा नहीं रहा, किचन और चूल्हे तक ही सीमित रही। तो ऐसी भी चर्चाएं हैं और जो बातचीत होती है, हम लोग लोगों में भी जाते हैं एज ए एंकर, तो मैं भी जर्नलिस्ट हूँ, तो बातें करते हैं तो लोगों से ये भी पता चलता है कि हमें एक स्ट्रॉन्ग लीडर चाहिए जो अपने देश को बचा सके। हाँ, महंगाई वगैरह है या कोई चीज़।
सुनीता, ये तो स्टेट का इलेक्शन है, महाराष्ट्र का चुनाव है, मोदी जी का तो चुनाव हो चुका।
हाँ जी, पर हो भी गया तो स्टेट में भी होएगा, तो एक स्ट्रॉन्ग लीडर चाहिए ना उन लोगों को कि जो उनको भी सपोर्टिव हो सके और उनकी वजह से और काम भी यहाँ पे हो सके, डेवलपमेंट हो सके।
विमेन का रिप्रेजेंटेशन कितना इम्पोर्टेंट है, विमेन्स रिप्रेजेंटेशन इन पॉलिटिक्स, कि पॉलिटिकल पार्टीज औरतों को चुनाव भी लड़ाएं?
जी बिल्कुल, एक्चुअली होना भी चाहिए कि एक औरतों का रिप्रेजेंटेटिव चाहिए। देखा जाए तो पहले की जनरेशन में ऐसे था, पीढ़ी दर पीढ़ी लीडर्स तैयार होते थे और उनके बेटियां भी बहुत अच्छे से जाती थी, पर आजकल देखने को मिल रहा है बेटियां या लेडीज़ आगे आ नहीं रही है, और वो हिसाब से भी सशक्त महिला एक लीडर होनी चाहिए। वो हिसाब से लीडर उसको घड़ाने के लिए भी एक प्रॉपर इन्वायरमेंट होना चाहिए, वो हिसाब से कि लेडीज़ के लिए भी कोई लड़े, उनका भी कोई रिप्रेजेंटेटिव हो। वो बहुत कम देखने को मिल रहा है, वो एक कमी सी बहुत खलती है।
तो क्या महिलाओं के लिए ये भी है इम्पोर्टेंट कि कैंडिडेट कैसा है? एक तो वो होता है कि कोई पार्टी के लिए आप वोट करें, कैंडिडेट कितना अहम रखता है कि जिस कैंडिडेट से आपको डेली बेसिस पे डील करना पड़ सकता है।
यस, पक्ष तो कैसा है कि हर कैंडिडेट आज ना कल कोई भी पक्ष में जा सकता है, आ सकता है, लेकिन जो वो आदमी है वो कितना हमारे लिए काम करता है, ये हमें अहमियत रखना बहुत ज़रूरी होता है। जब हम वोट करेंगे तो पक्ष को मत देखो, हम आदमी को देखो कि इन फ्यूचर वो अपने कितना काम आएगा।
मुझे मेरा कहना तो ऐसा है कि जो हमें यहाँ पर समझे, जैसे हम लोगों की यहाँ दुकानें वगैरह है, हम सब की जो यहाँ पे जितनी भी महिला आई है उनकी जो हमें समझ सके, हम उनको ही देना चाहेंगे। और मुझे तो ऐसा लगता है कि मतलब मैं किसी पक्ष के लिए नहीं बोल रही हूँ, मैं इसलिए बोल रही हूँ कि जो अपने देश के लिए इतना कर रहे हैं, मेरा वोट तो मोदी जी के लिए ही खास है।
हाँ, लेकिन मोदी जी का चुनाव तो लोकसभा का चुनाव था।
लोकसभा का चुनाव है, पर हमें ऐसा लगता है यहाँ पर भी जो खड़े हैं वो उनको ही वोट देना चाहिए, क्योंकि वो मोदी जी तक मतलब आगे के लिए ये रहेगा।
अभी भाजपा ने एक नारा शुरू किया, एक है तो सेफ है। ये बांटने की राजनीति है या जोड़ने की राजनीति है?
ये तो जोड़ने वाले सब पूरे हम ये सब एक है तो एक ही रहेंगे, आखिर तक एक ही रहेंगे हम सब। मतलब सब जन मिल के, मतलब उनका कहना ऐसा है कि सब जन मिल के रहे, उसको एक है और सेफ है, ऐसा जो बोल रहे हैं वो।
हाँ, लेकिन कांग्रेस वाले बोलते हैं कि ये बांटने की राजनीति है।
अब देखा जाए तो हिंदुस्तान एक इतनी अच्छी कंट्री है कि जहाँ पे आपकी कोई चीज़ नहीं है उस पर भी आप हक जमा के वो चीज़ छीन ले सकते हैं। इतनी अच्छी हिंदुस्तान की लोकशाही है, इतनी अच्छी कंट्री जो सबको साथ में लेके चल रही। अब ऐसी कंट्री में लोग जोड़ तोड़ करना चाह रहे हैं तो मोदी जी को नारा देना ही पड़ रहा है ना कि भाई आपको सबको एक रहना है, तो फिर एकजुट से रहिए। कटेंगे तो बटेंगे, ये तो पहले से ही हम लोग हिंदुस्तान में देखते आए हैं, तो फिर जात जमात की ये सवाल नहीं है। मेंटालिटी लोगों की सुधरनी चाहिए। अपना देश है, अगर आप अपना देश समझते हो तो कायदे कानून अलग है, सोच अलग है। छीनने झपटने की बातें हो रही है तो क्यों हो रही है? अपना देश समझ के रहो। तो साधारण आदमी भी यही चाहता है कि अपना कंट्री है तो अपना देश एकजुटी से रहे, अच्छे से रहे।
एक है तो सेफ है, भले ही कास्ट कोई भी रहो, अपना धर्म कोई भी रहो, लेकिन कैसे रहता है कि इंसानियत अगर एक हो तो सब एकजुट हो जाएंगे। और बोलते हैं ना कि एक उंगली में जितनी ताकत नहीं रहती उतनी एक मुट्ठी में रहती है। तो सब एक साथ हो जाओ, एक मुट्ठी करो तो सब अच्छा होगा।
Of the 47 seats in northern Maharashtra, BJP and Undivided Sena had swept, winning 32 in 2019. Given the electoral setback the Mahayuti faced in the Lok Sabha polls, this region will be watched out for the course correction the Mahayuti may have done in the last 5 months.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downward,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
Nifty records longest losing streak in over a month. Benchmarks end lower for a second week in a row. Metal emerges as top losing sector this week. India's trade deficit stands at $27.14 billion in October. Country sees highest ever non-petroleum exports from April to October. Wholesale price inflation for October jumps to a 4-month high of 2.36%, driven by spike in food prices that are at the highest level since June 2023. In a bid to address security breaches at foreign missions, Ministry of Home Affairs sets new framework for hiring consultants engaged in sensitive policy work. This is an NDTV Profit exclusive. Indigo's first flight with its new business class Indigo Stretch takes off on the busy Delhi-Mumbai route. Indigo Stretch in direct competition with Air India. Uber aims to alleviate drivers' anxiety over online payments, introduces instant payments that drivers can now cash out every day. Move could deter cab cancellations. Delhi's air quality remains in the severe category for a second day today. Low wind speed contributes to a thick fog layer across the city. As campaigning intensifies for the Maharashtra Assembly polls, PM Modi is to address a massive rally in Mumbai's Shivaji Park. Tulsi Gabbard, a former Democratic representative, is appointed the next director of national intelligence by US President-elect Donald Trump. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. Now first, Nifty records our longest losing streak in over a month. Benchmarks have ended lower for a second week in a row. Metal and PSU Bank emerge as top losing sectors this week, dipping over 5%. Neeraj joins in with more details on this.
TGIT, literally. And if you're wondering what TGIT is, thank God it's Thursday. And literally and otherwise too, because for two reasons. One, that the markets haven't done as bad as they have the recent past. And the week is ending. It's been a painful, brutal week, but for the last day, which is Thursday, because remember, it's a truncated week. But all in all, not a bad show, really. The broader markets actually did much better because the mid caps and the small caps ended well and truly in the green. 0.5% for the mid caps, small caps even better actually. So not a bad show. Off the highs of the day, but no complaints whatsoever. The large cap space was dominated against two autos, predominantly Eicher Motors, but some others participated too. So on the back of very strong commentary in the call, Eicher Motors up 6.5%. Following it was Hero MotoCorp. Not bad going. Some strength that came in from life insurance names like HDFC Life and SBI Life, sandwiched between those two, Reliance Industries and HDFC Bank and ICICI Bank. So heavies did okay and masked the pressure in FMCG. Look at what's happened here. HUL, Britannia, Tata Consumer, Nestle, staples are being taken to the cleaners. If not cleaners, they are certainly getting sold into. Broader markets saw revival of real estate, slowdown in VIX, some media names doing well. And if I can pull the BSE 500 winners and losers, the winners, Network 18, DCM, Shriram, and then Mishra Dhatu, and between that, likes of PB Fintech, Paytm, Zomato, all of them had a really good move. Deepak Nitrite and Heikel from the chemical space did okay. What didn't do well, PI Industries on the guidance pullback is correcting. SKF on weak numbers corrected a bit. Sheela Foam also has some issues. Uflex also bad numbers, but predominantly viewers, it was a day which was marked by some gains to the small cap end of the market, which was a respite.
Thanks, Neeraj, for that. Now, some market opinion from Parag Thakkar of Fort Capital is betting big on stocks like ICICI Bank and Emcure Pharma. Here's why.
So first of all, see, I'll start with the fact that the starting point valuations were high. That was the one reason. Trump trade has begun, so dollar index and US 10-year bond yields are rising, so FIs have been selling. Right now, in this entire negative macro setup, I would like to highlight the positives, right? Positive. For example, if you see the results, or even I would highlight the first in the large cap bucket and then in the mid cap and small cap bucket, the results which were good, which were completely ignored by the market because of FII selling, right? So first of all, let us come to large cap. Large cap, HDFC Bank did what it was required to do. They brought the CD ratio down by 5%. Their ROE is still sustaining at 1.7, 1.8%, correct? And their asset quality is best. Credit cost is 50 bips, right? 50 bips on a lower loan book growth, which is just 6% loan book growth, because they are forced to bring down their loan book growth because to bring their CD ratio down. Their deposit franchise continues to be strong. They did 1,20,000 crore of deposits this quarter, so that was a good quarter. ICICI Bank, fantastic results. PPOP growth of 15%, which completely beat the market estimates, because now they have a new shot in the arm, which is OPEX. Now OPEX to asset ratio for ICICI Bank is coming down. Right, so I think ICICI Bank continues to consistently surprise market on the positive side, and rightfully so. Now it is trading at a significant premium to other banks, and they are sustaining their ROA about 2.2%. SBI, such a large bank and a proxy to Indian economy, credit cost only 50 bips. What more you want?
Foreign investors remain net sellers for 33 consecutive sessions, but will the FPIs continue to sell? My colleague Mihika is here with more details on this.
You know, something that's been adding pressure to our markets amid a very weak Q2 season across many sectors has been foreign portfolio investors, and they have remained net sellers, like you said, for 33 consecutive sessions. Now, this has led to a total outflow of 1.5 lakh crores from Indian equity markets. Now, 2 months of consecutive selling, when we see November 2024, we've seen 21,000 crores worth of outflows so far, and in October, we saw 94,000 crores of outflows from foreign portfolio investors. Now, why are FPIs selling? Well, 2 reasons. First is the China stimulus package, which triggered a tactical outflow from India, according to experts. And now, because of a fund reallocation, these funds are now being allocated to China from India. The second factor is the impact of the US elections. Now, the Republican win has led to rising US bond yields and the dollar, and better US market performance have been leading to emerging markets outflow. Now, investors are switching from Indian equities to US equities in anticipation of higher interest rates, and Trump's potential fiscal stimulus could drive up long-term interest rates as per experts. Now, to when will FPIs continue to sell? Well, experts say that foreign investors are far from hitting the brakes from the selling spree and are unlikely to return to India in November. So we could see this sell-off continue till November, and India will continue to face continued capital outflows as the global sentiment around emerging markets continues to fluctuate. But fear not, the Indian growth story from a long-term view is still intact. According to Neelkant Mishra, the current price to earnings premium of 15 to 17% after the correction when you compare to global peers is now reasonable, and there is room for expansion, and optimism of experts comes around because of the 7% economic growth rate despite the market volatility, and this optimism is led by factors like declining inflation and higher local investor participation, as retail investors are now realizing that the markets are from a long-term view.
Now, Hindustan Aeronautics posted its second quarter earnings. All the major financials performed well for the company. The net profit is up 22% at 1,500 crore rupees against 1,200 crore. Despite the growth, the net profit did not meet the street estimates. The revenue of the company is up 6% at 5,900 crore rupees versus 5,600 crore rupees. Now, if we talk about the EBITDA, which is a metric used to evaluate the company's operating performance, so that is up by 7.4% at 1,600 rupees versus 1,500 rupees. The margin of the company is up 30 basis points at 27.4% versus 27.1%. Now, let's take a look at some primary market action. Niva Bupa Healthcare shares debuted on the bosses with muted gains. Driven by a robust demand from retail investors, the IPO of Niva Bupa Healthcare sailed through on the last day of bidding. Listen in to what the management had to say about the company's growth prospects.
Insurance is a long-term business, and our parent shareholder Bupa has been around for 80 years. So timing, to be honest, really doesn't matter. What matters is we're solving for the capital structure of the company, we're solving for permanency, and we are a long-term player, so I'm not worried about timing.
In an NDTV Profit exclusive, sources tell us that the Ministry of Home Affairs is cracking down on security lapses involving consultants working on sensitive government policy, particularly at foreign missions. The Ministry of Home Affairs has flagged serious concerns over unauthorized access to senior officials, digital devices and breaches in protocol during recent missions. My colleague Shrimi is joining us with more details on this.
Ministry of Home Affairs in its recent communique to all secretaries of central ministries and departments said that you are supposed to vet the credential of all the consultants who are being hired for sensitive policy matters, including foreign mission. In fact, they put out the SOP for stricter compliance. They said that all the ministry themselves should vet these credentials of consultant, and in fact, those details needs to be shared with Ministry of Home Affairs beforehand. In fact, they said that if a retired government official going to be the part of such a mission or such policy matters should obtain the vigilance report of his or her respective department or ministries. They're also saying that there should be a 2-year cooling off period in case somebody has already worked with foreign mission. There has to be non-disclosure agreement should be there, needs to be signed by the consultant where they are mentioning all the terms and conditions. In fact, there has to be one proper security related briefing to all these consultants, and this is going to be mandatory for them, and there has to be do's and don'ts from the national security perspective. In fact, they are saying there has to be a clear, strict access control and need to know norms to be adhered by all the ministries and departments while giving access to all the internal documents, digital devices, even the internal deliberation to all these consultants. And in all these matters, MHA supposed to be in loop while engaging with these consultants.
Thanks, Shrimi. That's indeed a great move by the Ministry of Home Affairs. Now, from markets to macro data, the wholesale price inflation for October has jumped to a 4-month high. The core inflation came in at 0.3% versus 0.1% in September. Speaking of subsections, manufactured products inflation ticked to 1.50% versus 1% in September, which is close to 2%. So the fuel and power inflation came in lower at 5.79% versus 4.05% fall in September. Now, if you talk about the food articles, a major basket was up to 13.5% in October versus 11.5% in September, whereas wholesale prices rose to 2.36% versus 1.84% in September. Now, after the WPI numbers, now let's move to the India's trade deficit that has stood at $27.14 billion in October from $20.78 billion in the preceding month, according to data from the Ministry of Commerce and Industry. The ministry also considered the April-October period as the best period with the highest ever non-petroleum exports from India. My colleague Rishabh Bhatnagar joins in with more details.
We have the latest trade data coming in for October. We've seen that the trade deficit has widened. Now this is month on month. It has widened to about $27.14 billion from about $20.78 billion in the previous month. This is also more than the expected $22 billion. That's according to Bloomberg estimates. Now the trade deficit has widened despite this being a record period of exports for India in terms of non-petroleum goods. We've seen exports actually climb about 17% year on year to $39.2 billion. This has also been a very, very good month. Trade Secretary Sunil Bartwal told reporters here that October has been a good month, and that has been partially because in the West, October is seen as the period for stocking up for Christmas, and Christmas in the West is a period of heightened demand and consumption. So this is probably a reason why, and this is also why India will probably do better in terms of exports this festive season in the West. He also added that despite a period of high volatility, tensions in the Middle East, recessionary trends in the West, exporters have been able to focus and they have been able to deliver, and exports for this year could be on track to breach about $800 billion worth this year. He also added that he's not seeing much of a change in terms of India's relations with the US after a change in presidency with President Donald Trump coming to power. He said that over the years, India has integrated already quite well with US's supply chain, and that is set to grow in the coming future. That is all we have from the trade data briefing for October.
Thanks, Rishabh, for those insights. Now moving to the aviation space. Indigo's new business class flight, Indigo Stretch, took to the skies for the first time today. The new business class has only been launched on the Mumbai-Delhi route for now. Designed for India's highest demand business routes, Indigo Stretch offers hopes to target consumers who seek more premium flying experience at economical cost. Indigo Stretch will be a direct competitor to Air India and is looking to rope in customers with lower prices. For next 1 week, Indigo Stretch is offering the cheapest flights as compared to Air India. On to an NDTV Profit exclusive. My colleague Rishabh Bhatnagar caught up with Prabjeet Singh, president of Uber India and South Asia, and asked him about the new feature that Uber has introduced, which will be a relief for the drivers, allowing them to cash out money 4 times a day, relieving their anxiety over online payments.
One of the interesting ones which I'm very excited about is instant payments. Now using the UPI infrastructure, which we're incredibly proud of what the country offers, we're able to now offer immediate cash out to drivers multiple times a day, where in less than 5 seconds, they're able to cash out and get their earnings. So for example, they're just on a cash trip, within seconds of the trip getting closed, they can actually cash out. And hence for them, it becomes, whether it's a cash trip or digital trip becomes irrelevant. It also improves liquidity for them. It's a feedback which we got from drivers.
Austria's KTM, a long-time partner of Bajaj Auto of India, has launched 10 premium motorcycles in India, expanding the partnership. These include motorcycles across 4 segments: naked sports, adventure enduro, and motocross. From 50cc to 1390cc, prices range from 4.75 lakh rupees to 22.96 lakh rupees. These motorcycles will be sold at new KTM dealerships in 7 cities, starting from Bengaluru and Pune. KTM first entered India in 2012 with the KTM 200 Duke and quickly followed it up with the segment defining KTM 390 Duke. Today, KTM sells 12 motorcycles in the country and soon 22. The Enforcement Directorate has raided 23 locations in Maharashtra and Gujarat, where large number of bank accounts were allegedly opened through fake documents. These raids have taken place in Malegaon, Nasik, Mumbai, Ahmedabad and Surat. The ED is investigating a money laundering case against a Malegaon-based trader who allegedly conducted transactions worth over 100 crore rupees using these fake accounts. Now, this raised concerns over possible election fund routing. This comes days ahead of the Maharashtra Assembly elections also. So, now earlier in the day, Delhi residents woke up to severe air quality for the 2nd day in a row. This is a day after the national capital recorded the worst AQI in the country, with dense smog blanketing the NCR, reducing visibility. Low wind speed contributed to a thick fog layer across the city. Anushka Garg from NDTV sends in a detailed report.
Well, certainly yesterday the CAQM chaired an emergency meeting wherein it was discussed about what all is happening regarding the AQI of Delhi. They referred to it as an episodic event and said that they are closely watching the situation, and if the need arises, if the AQI is not seen improving in the coming few hours, they will think about implementing the GRAP third. Now the meeting is about to be chaired by the Aam Aadmi Party Environment Minister Gopal Rai. Because of the deteriorating air quality, the people in Delhi are facing a lot of issues, a lot of challenges. Their health seems to be deteriorating quite, in a very, difficult manner. They are quite facing a lot of challenges. During this time, we are joined by some people also. आपका नाम क्या है?
Jaskaran.
सर, हम देख रहे हैं दिल्ली में जो एयर क्वालिटी है वो काफ़ी ज़्यादा ख़राब श्रेणी में पहुंच चुकी है. क्या क्या परेशानियां हो रही हैं इसकी वजह से?
बहुत प्रॉब्लम्स आ रही हैं. जैसे शाम को ट्यूशन वगैरह जाते हैं तो आंखों में तकलीफ वगैरह होती है, और भी शाम के टाइम तो बाहर निकलना पॉसिबल ही नहीं है. बहुत पोल्यूशन हो जाता है शाम के टाइम तो.
We can see here that the people are struggling to breathe. They are, saying that a lot of issues, are coming on their way while doing morning walk or while going outside of the home. They are using masks, and also because of this, deteriorating air quality index. Right now, also what we saw, the CPCB app, according to the AQI right now in Delhi is around 434. That is in severe category.
With Maharashtra elections around the corner, Prime Minister Narendra Modi is all set to address a mega rally in Mumbai. The rally is part of the ruling Mahayuti Alliance's final push ahead of the Assembly election on November 20th. PM Narendra Modi's rally in Dadar is expected to draw a massive crowd and will also be attended by Maharashtra's Chief Minister Eknath Shinde, Deputy CM Devendra Fadnavis and several other top Bharatiya Janata Party leaders from the state. In fact, a traffic guideline has also been issued to prevent congestion and ensure a smooth road show. My colleague Jui Jadhav has sent in a report on this.
Prime Minister Narendra Modi is all set to address a rally today in Mumbai at Dadar's Chhatrapati Shivaji Maharaj Park, and as you can see right behind me, the preparations for this rally is almost complete. And today evening at 6 o'clock, Prime Minister Narendra Modi will address Mumbaikars, will address the entire Maharashtra today through this rally for the upcoming Assembly Elections 2024. The Mumbai Traffic Police has issued an advisory for the day amid this tight security. Also, the rally is part of ruling Mahayuti Alliance's final push ahead of the Assembly election on November 28th. Prime Minister Narendra Modi's rally in Dadar is expected to draw a massive crowd and will also be attended by Maharashtra's Chief Minister Mr. Eknath Shinde and Deputy Chief Minister Mr. Devendra Fadnavis and several other top BJP leaders and other alliances leaders. Also, the 36 candidates who will be constituting from Mumbai will be a part of this rally, and Prime Minister Narendra Modi will be addressing this rally especially for these 36 candidates. So definitely this rally is drawing attentions because this rally is the last rally for Mahayuti and for Prime Minister Narendra Modi in Maharashtra. After this, on 20th, when the election dates are due, when the people will vote, at that time we will see the result that who the people have trusted, and will Narendra Modi's speech that he'll give and his presence today will influence Mumbaikars and Maharashtrians.
Now on to some international news. Blasts rang out in Beirut this morning as Israel continued its airstrikes on the southern suburbs. The Lebanese Ministry of Health announced that these airstrikes resulted in the death of 78 people, leaving 122 injured. The Israel Defense Force claimed destroying dozens of rocket launchers in Lebanon. Israel's new defense minister said that the IDF will continue their offensive until all the Israel's goals are achieved. He made these remarks during a visit to the IDF Northern Command. Israel said that it was targeting Hezbollah facilities and interests after issuing evacuation warnings prior to the airstrikes. The conflict escalated beginning in mid-September. Israel has launched a widespread aerial bombardment of Lebanon that it said is intended to push Hezbollah back from the border. Now, Tulsi Gabbard has been appointed by the President-elect Donald Trump as the Director of National Intelligence for his second term. She will oversee the 18 intelligence agencies in the United States. She was born and raised in Hawaii and went on to earn a degree in business administration from Hawaii Pacific University and later served for over 20 years in Army National Guard. In politics, Gabbard broke barriers as the first Hindu and the first American Samoan elected to Congress. She was sworn into office with her hand on Bhagavad Gita. In 2022, Gabbard made the decision to leave the Democratic Party and endorsed Donald Trump, citing shared values and a commitment to change. Trump has praised Gabbard as a fearless leader, noting that her strong spirit and experience make her well suited to lead the nation's intelligence community. Exciting news for Coldplay fans in India, as the band has now added a fourth show to their Music of the Spheres tour. This comes after epic concerts in Mumbai. On January 25th, Coldplay will take the stage at Ahmedabad's iconic Narendra Modi Stadium for what promises to be an unforgettable night of electrifying live music. Tickets will go live on Book My Show at 12 p.m. on November 16. Once booked, tickets will be delivered straight to your door by DHL. A thick blanket of smog also covered the Taj Mahal this morning as the pollution levels worsened in Uttar Pradesh's Agra. Visuals show the UNESCO World Heritage Site disappear behind the smog, making it barely visible to the tourists. According to the Central Pollution Control Board data, the air quality index in Agra stood at 193 in the moderate category. The minimum temperature in Agra stood at 17 degrees Celsius, while the maximum temperature is likely to settle around 30 degrees Celsius. IMD has reported that the dense fog is expected to continue till Monday. The increased smog and pollution are due to the rising stubble burning in nearby areas. Well, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Hello and welcome to the Small and Mid Cap Show. I'm Hiral Dadia and joining us is Kavita Shirvaikar, MD at Patel Engineering. Kavita, firstly, congratulations for the strong set of numbers that we've already seen. If you could help us understand, one, the revenue guide growth has been higher than what you had guided for. Margins are in line with the 14% guidance as well. Is this something that you think will be continued in the second half of the year, or do you think you will outperform these numbers as well?
Hi. First of all, thank you very much. See, let me tell you, we are on track on execution. As you have seen, our revenue growth is 15% for the quarter. Our guidance was 12%. So let me tell you, we will be continue to, on track. One example like Subansiri project, its value is around 1500 crore. We have executed around 1500 crore work in 4 years. So let me tell you, we have a strong team of execution and we are on track.
Hi Kavita, this is Anushri joining in. So firstly, you mentioned that 10% was what the guidance was for this year. Now, if we move forward to the next year, it's about 15 to 20%. Want to understand from you, what are the key growth drivers that you're looking at for which you're aiming for this higher revenue growth? And while the FY25 margins is at 14%, do you see a further uptick in this number?
See, let me tell you, what are the growth drivers? As you know, we have a strong order book of 17,000 crore, 64% coming from hydro sector and around 20% from irrigation sector, where we are the pioneer. Like we have completed 87 dams. We are the pioneer of micro tunneling. So all put together, execution at the ground level, execution, a strong execution team, and our vision. So that is the growth drivers for us. And over and above, as you know, we are consistently reducing the debt. Our debt last March, it was 2,000 crore. Now it has come down to 1,500 crore, almost all about. So we are continuously monetizing non-core asset and focusing on our core sector. So going forward also, we are fairly confident to maintain the growth and margin at the same level.
Right. Kavita, a follow-up that I have on this is you mentioned about the debt reduction. What's the plan from here on? We are at almost 1,438 crores. Where would it be by FY25? And what's the target in terms of next year as well? And what is the monetization plan from here on, taking into consideration that you've already monetized around 330 crores worth of your non-core assets?
So this year our plan was around 150 to 200 crore, but we have already achieved around 330 crores. Next half also we are expecting to around 100 to 150 crore. And next year onwards, we are saying that we will be, though we are targeting 15 to 20% growth year on year, but we will be able to maintain the debt level at the current level. Like our interest cost will not go up, but our revenue and margin will go up. So absolutely our net profit will increase.
Okay, so the debt levels will stay at similar levels as that. Is that what you're implying?
Yeah.
Okay.
Overall, over and above growth, our debt will remain at the same level.
All right. And now coming to the order book, now you've mentioned about your order book which stood at about 17,000 crore. I want to understand, of this 17,000 crore, how much do you plan to execute in this next half itself, and what is the kind of pipeline that you're currently looking at?
See, we have first half, we have already achieved 2,200 crore. Our target for this year is 10% growth over last year. So balance also, we see around 2,500 crore next 2 quarters we are expecting to achieve. And next year, our target is to 15% year on year.
Okay.
And as regards order book, we have already started submitting the bids because projects, as expected last year, because of election year, order book was subdued. Now post Q2, orders started coming for bidding. Bids are under evaluation already under 10,000 crore. And over and above, we have shortlisted around 40,000 crore of worth of projects which will be bidding in near future. So we are targeting in next year from now onwards around 10,000 crore, considering our ratio 20%. So around 10 to 12,000 crore order book we are targeting in next 1 year.
Okay. Taking the order book that you are targeting into consideration, would you still maintain your growth guidance of 15 to 20%, or do you think you will be able to surpass that? And an added question to that is, what are the kind of high value projects that you're expected to take to expand your portfolio?
See, let me tell you, hydro, there is huge opportunity available, and overall the single size of the project itself is like 10,000, 15,000, 20,000 crore. So let me tell you, we have signed MOU with RVNL and IRCON, to bid for such large value projects, which will give us, another milestone going forward. Now, as regards target 15 to 20%, it is on a concern. We are fairly confident we will be able to maintain that target.
Kavita, I want to come back to the pump storage projects more. I want to understand what is the current opportunities that we are looking at in this space, because this is an area where a lot of development is happening. 60 gigawatts is under survey, as you've mentioned. Want to understand what is Patel Engineering's role going to be in this, and of this 15 to 20%, I understand that this is a huge contributor to your business. Have the bids already started for this, or it's after the next 1 to 2 years that there would be a ramp up that we'll seeing the order inflows from this side?
So as you rightly say, government focus is on pump storage. Last budget also we have seen there is huge focus on pump storage projects. So like 60 gigawatt, which is under survey and investigation, let me tell you, some of the projects already started coming for bidding, and which I said around 10,000 crore, which bids under evaluation. Out of that, pump storage also we have started targeting. We have started bidding for the projects. So our target, let me tell you, currently around 4 to 5 projects under execution. We are already doing one project for the government. So we are quite hopeful and target around we will continue to maintain our share of revenue.
Considering the pump storage projects that you've mentioned, another one I wanted to mention, what is our capex plans going to be? Because if you look at in the first half and compare it with the last 3 years, the capex was comparatively softer. So are we looking to ramp up our capex for the next half, and for even if you can give us an outlook on the next 2 to 3 years, what the capex number is going to be?
See, capex is based on the new order book. On an average, around 100 to 150 crore addition every year we make to the capex. Now, currently, as I mentioned, that last year, because of election, order book was subdued. First half, capex is looking at the lower side. But as I mentioned, going forward, we are targeting around 10,000 crore of work in next 1 year. Accordingly, capex also will from Q2, Q3 onwards, and next year it will be in the same range.
From the hydropower space and the 10,000, 12,000 crore of opportunities that you're looking at, another kind of an update which was there from NHPC. You've been declared as the lowest bidder for this 240 crore of project. What is the development happening here? What's the progress here? When do you plan to add this to your order book? If you can give more clarity on this one.
See, we are L1 into 40 crore work project. We are expecting LOA to come shortly. The project duration is 18 months, and we are fairly confident we'll be able to complete within given timeline.
Coming to this, I wanted to again emphasize on the margins. Now, if you can just give us a breakup, like if hydro is your biggest segment, but there are other segments also that you have. If you can give us a margin profile, do the margin profiles differ across the various segments that you have? If you can just give us a breakup on what is the kind of revenue mix that you're targeting at the margins of these segments that you have currently.
See, as you know, our majority order book is coming from the hydro. So hydro, there is a margin of 1 or 2% higher than other sector, and irrigation is 1 or 2% lower than the normal margin. So on an average, we are saying we'll be able to maintain the margin of 13 to 14%.
So 13 to 14% is the margin that you are looking for this year. Now, if you look at your overall project mix also, if we take the first half in consideration, H1 was kind of muted on the government side due to the elections which have taken place. What is the kind of update that we are looking at from the government side, and even if the private side, how is the kind of orders that are taking place right now? Are we seeing a pickup happening from the next half onwards? If you can give us more clarity on that.
See, as I said, let me tell you, our 90% of order book is coming from the government. 95% from the government. Now, PSP more focus on PSPs. PSP, there are some of the private players also started taking up the project, like Adani, Tata, JSW. So, as regards PSP, along with government, we are targeting private clients also.
Okay, so that is what is the outlook from the government and all that. Another kind of sector which I want to focus on is irrigation and tunneling. While it has a smaller mix as compared to the hydro side, I want to understand what is the kind of business opportunities that we are looking from these segments.
See, let me tell you, tunneling is our one of core strength. We are the pioneer of the micro tunneling. We had implemented in Ghatkar project and Mumbai and Delhi. See, let me tell you, tunneling also is our one of the core strength. We have till now completed around 250 kilometer of tunneling. Going forward, we see huge opportunity in that sector as well. Around 250 to 300 kilometer further, which will come up for bidding in near future, like railway, road, tunnel. Let me give you an example. Sela Pass Tunnel, which was one of the complex project we completed for BRO. It was at 13,000 feet height, and we completed within given timeline. Successfully completed, where Prime Minister inaugurated. So we are targeting such strategic project. Recently, we substantially completed a tunnel for the IRCON railway tunnel T15 at JNK. So we are targeting one of our major sector, like along with hydro, tunneling sector also we are targeting.
Right. Very quickly, a last question I have, Kavita, is specifically from a government spending perspective, what is the outlook looking like? Because the spends or the capex in the first half of the year has been slightly lower as compared to the guidance that the government has laid out for the full financial year. Are you expecting that cover up to happen, and hence the quantum of government projects that could flow in the coming quarters in financial year will be higher?
Yeah, I expect the same, because as large projects are coming up bidding for in near future, so Q3, Q4 or next half year, we will see a lot of projects coming for bidding.
Right. So again, government projects is going to be of one focus area as well. Thank you, Kavita, so much for joining us on the show and sharing the views. But clearly, that's the management of Patel Engineering. If you see a long-term chart as well, right, some bit of cooling off is happening right now as we speak, but still continues to gain around nearly 3% as we speak. 12 months, 9.5% is the kind of up move. You can see the kind of volatility that we've seen in this stock as well. It's hit a high of almost 76 and then cooled off to now levels of almost 45, 50 at the lows. So that's what is the range that we've seen with regards to where Patel Engineering goes. But moving on. KRBL, that's another stock to focus on. Let's quickly pull up the counter on the screens and see what the stock is doing in trade. 2.3% is the kind of up move that we've seen. Overall, you know, there has been some bit of an impact with regards to where gross margins are concerned, and that's mainly on the back of the input costs that have been higher in the basmati segment. Your branded basmati volumes have grown by around 10%. Overall, inflation carrying cost and volume of rice is one of the reasons for higher inventory. Let's welcome in our guest Ashish Jain, who is the CFO at KRBL, to understand more. Ashish, good morning and welcome to the show.
Yeah, thank you. Good morning to you as well.
Ashish, my first question coming to you is impact coming in with regards to where gross margins are concerned. Profitability has been slightly lower as well. Around 32% is a downtick that we've seen. How are you looking at this quarter, and do you think we'll see some bit of a reversal in the second half of the year?
Yeah, so you're right. You know, we've seen some impact on the margins. I think that's really driven by a couple of factors. One is that, you know, we, given our business, we buy raw material in bulk in the harvesting season, which is typically from October to December. So when we purchased our raw material in last year, the paddy prices were high. However, subsequently, both paddy and rice prices have declined. So because of which there is an impact on the gross margin. Looking forward, you know, the paddy season has opened up and the prices are lower. And we are hoping to, you know, stock up on paddy at lower prices. With that, you know, the paddy cost should moderate. So at least that pressure we don't see as intense in the coming quarters.
Right. Mr. Jain, Mahima also joining in. I want to understand that what has been the realization per ton number for this quarter, and has it been as per expectation according to you?
Yeah, so realization is in line with what we are seeing in the market. So if I look at our domestic realization per ton of basmati, it's around 77,000 per ton, while export is about 1.5 lakh per ton. So these are largely in, you know, in terms of aligned with our expectations.
All right. In terms of margins, your margins have taken a significant hit, and you have mentioned a couple of reasons. But I want to understand with respect to the guidance going forward, when do you expect margins to normalize? How many quarters are they away from normalizing to the levels that they were in the previous quarters?
Yeah, I'll share with you, the way we see the future unfolding. So I think a couple of things will happen. One of the factors that drives our margins is our export revenue because that typically comes at higher margins. So that has seen a steady run rate of about 250 to 60 crores per quarter for the last, I would say, 4 quarters. We are putting in place some action plan where that export revenue should pick up. So that should have a positive impact in the margins. On the cost side, like I said, we with the current season, our paddy cost should recalibrate itself to lower levels, which will again be a positive. So difficult to comment on the timing in terms of the number of quarters, but we do see the margins restoring themselves.
Right. Ashish, one question I have when you mentioned about exports as well, that is with regards to where Basmati as a segment goes, right? Almost 4% of the global sales with regards to rice is from Basmati. And the expectation is that a 9% CAGR growth is what you're looking at over FY24 to 32. If that's the kind of growth that we are anticipating in the global markets for rice, Basmati as a segment, how does that actually translate for the business like yours?
No, you're right. So I think the whole world is looking up to Basmati. There are parts of the world like Middle East where Basmati has traditionally been a part of the diet. But in many other parts of the world, consumers are discovering the value of Basmati, and the specific attributes that Basmati brings over other varieties of rice. And that is driving the demand growth. From our point of view, KRBL with its India Gate and other brands is the largest packaged Basmati exporter from India. Our products are currently sold in more than 90 countries. So, the trend of sort of increasing demand bodes well for us and also for the overall Basmati export industry from India.
Right. Mr. Jain, there has been a shift in terms of the way, the urban India is consuming right now. E-commerce has taken over general trade and modern trade for a lot of consumption companies. I want to understand because, in your presentations also you've mentioned that you're kind of democratizing your distribution network. So I want to understand as to what is the strategy that you're adopting? Will it be more skewed towards the e-commerce space because your e-commerce is rising at a rate of 40%?
Sure. Yeah. So just from a broad distribution strategy, when we're saying democratizing, our endeavor here is to make Basmati rice more widely available in the country. Just to give you some numbers, packaged Basmati rice is sold in about 700,000 outlets across the country. We are by far the market leaders and we have a presence in about 3.8 lakh outlets. So even we don't cover the entire market. So the first endeavor is to make Basmati rice more widely available. A part of this is also to focus on tier 1 and tier 2 cities, which is, the cities below the metros. Because over the past, I would say 3 years, a lot of increase in Basmati consumption is coming from non-metro areas. So that's the second target of our distribution expansion, which means how do we make it more widely available in non-metro cities. And third, like you mentioned, is really the MT and e-commerce. By MT, I mean modern trade. So these two channels are definitely growing faster than the traditional trade channel, although traditional trade continues to be important, still accounts for 70% of our sales. However, these two channels, which currently account for 30%, are growing far quicker than the traditional channel. And we are internally geared up in terms of having the capabilities to service the growing demand from these two channels. So overall, you should see wider distribution of our brands, focusing both on traditional trade as well as modern and e-commerce.
Ashish, I'm going to jump back to the export size. We've always known KRBL with regards to Basmati rice exports, right? However, good potential that has come up with regards to non-Basmati rice as well. And this is post the kind of ban that has been lifted by the Indian government. Where are you seeing the opportunity? Because initially, I think you were already targeting around 100 to 200 odd crores from other countries. How are you looking at this? Because you did capitalize on opportunities that arose earlier in from China as well 2 years or 3 years ago, if I'm not mistaken.
That's right. So non-Basmati, typically accounts for around 5% of our revenue. Our focus is really on Basmati. Having said that, we do non-Basmati when the opportunity makes sense to us. So like you mentioned, a couple of quarters back, there was deficient supply in China. So we rose up, we'd made some supplies to China. Post that, the government of India regime, kind of made it difficult to get non-basmati out. However, the government has relooked at it, and I think that's a positive development. We continue to look at non-basmati opportunities, but it's going to be a smaller part of our overall portfolio.
Mr. Jain, you've also said that you're foraying into new products and categories. Can you give us more details as to what products and categories these will be? And, going forward, how do you expect the mix to be like? Because, since you said that non-basmati exports will be a smaller share, but still I want to understand the mix in terms of basmati, non-basmati and other products.
Yeah. So, just in terms of recent examples of non-rice products that we've launched, we recently had launched biryani masala. The idea here was to make it easier for consumers to get restaurant-grade biryani at home. That's been received very well. During the year, we are going to launch healthy edible oils, which the idea again is that to make it easier for consumers to consume oil that is healthier than the more conventional alternatives. From a longer term point of view, we continue to look at new opportunities which make sense to us. The filters that we use it should be a growth category. It should allow for healthy margins, and it should be a product that benefits from KRBL strengths, which is our capability in sourcing and our end-to-end supply chain, and also our brand. In terms of what the share that we see, I think in the domestic market, we definitely hope to see non-basmati contributing at least 10% of overall revenue in the next couple of years.
Right, so 10% of overall revenues that could come in from non-basmati in the next couple of years. Thank you, Ashish, so much for joining us on the show and sharing your views. So that's the management of KRBL. A quick check in terms of the long-term performance as well. 2.5% up move, a very stable day so far for a KRBL as such. If you can just have a 6-month to a 1-year chart as well, 12 months, there you go, a downtick of around 21 to 22%. So the key question from here that comes up is it the right time to actually enter the rice space from a KRBL to a LT Foods? These will be stocks that will be on investor radar as well. But completely out of time. With that, it's a wrap on this edition of the Small and Mid Cap Show.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Large Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards,
just buy Nifty call option.
मूर्ति के आगे बैठता है, वैसे ही छत्रपति शिवाजी महाराज की समाधि के सामने बैठकर मैंने राष्ट्र सेवा के लिए उनसे आशीर्वाद मांगे थे। रायगढ़ एक ऐसी पवित्र जगह है जो देश की भावनाओं से जुड़ी है। अभी कुछ ही दिन पहले 31 अक्टूबर को गुजरात में सरदार पटेल जयंती निमित्त हर वर्ष एक बड़ा कार्यक्रम होता है स्टैच्यू ऑफ यूनिटी पर। देश भर के पुलिस की एक परेड होती है वहां, एकता परेड। उस एकता परेड के मुख्य कार्यक्रम में, उसकी पृष्ठभूमि में रायगढ़ के किलों को वहां बनाया गया था। और आज जब इतनी बड़ी संख्या में रायगढ़ के लोगों का आशीर्वाद हमें मिल रहा है, ये बता रहा है कि महाराष्ट्र को अब विकास की नई ऊंचाइयां छूने से कोई रोक नहीं सकता है। साथियों, एक प्रकार से ये शहरी क्षेत्र बन गया है और शहरी क्षेत्र में दोपहर को 3 बजे 2 बजे से लोगों का आना और इतनी बड़ी विराट रैली करना, मेरी नजर जहां पहुंचती है ऐसा लग रहा है जैसे केसरिया समंदर लहरा रहा है। ये दृश्य अपने आप में 23 तारीख को नतीजे क्या आने वाले हैं, इसकी गारंटी यहां दिखाई दे रही है। आज महाराष्ट्र के कोने कोने से एक ही आवाज आ रही है, भाजपा महायुती आए तर गती आहे, महाराष्ट्राची प्रगति आहे। साथियों, आज क्रांति गुरु लहूजी वस्ताद साल्वे जी की जन्म जयंती भी है। मैं उनको भी नमन करता हूं। आज इस अवसर पर मैं महाराष्ट्र के सपूत लोक नेता दीबा पाटिल जी को भी श्रद्धांजलि देता हूं। उनका त्याग और बलिदान, उनका परिश्रम हमें महाराष्ट्र के संकल्पों को पूरा करने के लिए नित नई ऊर्जा देता है। साथियों, छत्रपति शिवाजी महाराज ने हमें स्वराज की शपथ दिलाई थी। हमें विकसित भारत के निर्माण के लिए स्वराज के साथ साथ सुराज के संकल्प को आगे बढ़ाना है। और सुराज का संकल्प तब पूरा होगा जब हमारा गरीब आगे बढ़ेगा। इस संकल्प की सिद्धि का काम केवल बीजेपी और महायुति सरकार ही कर सकती है। आप भी जानते हैं, कांग्रेस पार्टी ने तो हमेशा गरीब को गरीब बनाए रखने के एजेंडे पर ही काम किया है। पीढ़ी दर पीढ़ी ये लोग केवल गरीबी हटाओ का झूठा नारा देते रहे, बोलते रहे, गाते रहे। गरीबी हटाओ के नारे के नाम पर कांग्रेस ने गरीबों को ही लूट लिया। इसलिए मेरा गरीब जिंदगी की मुश्किलों से बाहर नहीं आ पाया। रोटी, कपड़ा, मकान, आजादी के 70 साल बाद भी देश के ज्यादातर लोग इसी को पाने में जूझते रहे। पिछले 10 वर्षों में पहली बार ये हालात बदले हैं। पहली बार कोई सरकार 25 करोड़ लोगों को गरीबी से बाहर लाई है। हमने 4 करोड़ बेघर लोगों को पहली बार पक्के मकान का सुख दिया, सुरक्षा दी। हमने 12 करोड़ गरीबों के घर में शौचालय बनाकर उन्हें सम्मान से जीने का अधिकार दिया। जल जीवन मिशन चलाकर हमने 12 करोड़ घरों में पहली बार पाइप से पानी पहुंचाया। आज देश में करीब करीब हर व्यक्ति के पास अपना बैंक खाता है। रेहड़ी पटरी वाला व्यक्ति भी, एक मेहनतकश मजदूर भी अब मोबाइल पर यूपीआई से पेमेंट कर रहा है। गरीब अब खुद भी आगे बढ़ रहा है, देश को भी आगे बढ़ा रहा है। और इन योजनाओं का सबसे बड़ा लाभार्थी कौन है? इसका सबसे बड़ा लाभार्थी है हमारा दलित समाज, हमारा आदिवासी समाज, हमारा पिछड़ा समाज, हमारे वंचित समुदाय के लोग। महायुति सरकार की नीतियां आज शोषितों, वंचितों की ताकत बन रही है। भाइयों बहनों, जो काम 10 साल में हुए, वो काम पहले भी हो सकते थे, लेकिन कांग्रेस की सरकारों की मंशा ही नहीं थी कि गरीब आगे आकर अपना हक मांगे। इसलिए आज भी कांग्रेस ऐसी हर योजना का जो गरीबों के लिए कल्याणकारी हो, जो नागरिकों के लिए सुविधा की हो, जो मध्यम वर्ग को सुख चैन की जिंदगी देने वाली हो, ऐसी हर योजना का कांग्रेस जमकर के विरोध करती है। आप देखिए, हम देश के 80 करोड़ लोगों को हर महीने मुफ्त राशन पहुंचा रहे हैं। हमारे यहां रायगढ़ में भी करीब 18 लाख लोगों को मुफ्त राशन मिल रहा है। अब मुझे बताइए भैया, इस काम से किसी का भी विरोध हो सकता है क्या? हो सकता है क्या? गरीब के घर में चूल्हा जले, हमें खुशी होगी कि नहीं होगी? मैं जरा आपसे पूछना चाहता हूं, खुशी होगी कि नहीं होगी? अगर गरीब का भला होता है तो आपको खुशी होगी कि नहीं होगी? लेकिन कांग्रेस पार्टी को नहीं होती है। कांग्रेस पार्टी क्या कहती है? कांग्रेस कहती है कि जो 25 करोड़ लोग गरीबी से बाहर निकले हैं, उन्हें राशन क्यों मिल रहा है? कांग्रेस चाहती है कि इन लोगों का खर्च बढ़े और ये फिर से गरीबी में चले जाएं। अगर अगाड़ी वालों को मौका मिला तो ये महाराष्ट्र में यही करेंगे। इतना ही नहीं, हमें तो सवाल पूछा जा रहा है कि गरीबों को मुफ्त राशन क्यों दे रहे हो? लेकिन आज कांग्रेस के एक नेता ने झारखंड में घोषणा की है, आप सुनकर के चौंक जाएंगे। उसने झारखंड में घोषणा की है कि वे सस्ते गैस सिलेंडर हिंदुओं को देंगे, मुसलमानों को देंगे और आगे क्या कहते हैं, जो घुसपैठिए हैं उनको भी देंगे। आप मुझे बताइए भाई, ये जो घुसपैठियों की आरती उतारते हैं, क्या ऐसे लोगों को देश में कहीं पर भी अवसर मिलना चाहिए क्या? जरा दोनों हाथ ऊपर करके पूरी ताकत से बताइए, ऐसे लोगों को कहीं पर भी अवसर मिलना चाहिए क्या? खुलेआम उनका एक नेता घोषणा कर रहा है कि जो घुसपैठिए हैं, रोहिंग्या है, बांग्लादेशी है, उनको हम सस्ते में गैस सिलेंडर देंगे। ये वोट पाने के लिए देश के साथ आपके बच्चों के उज्जवल भविष्य के साथ कैसा खेल खेल रहे हैं, इसका ये उदाहरण है। इसलिए हमें ध्यान रखना है, ये कांग्रेस वोट बैंक की राजनीति करने में तो अग्रिम है, लेकिन गरीब की दुश्मन है। इसलिए कांग्रेस को रोकने की बड़ी जिम्मेदारी भी मेरे गरीब भाई बहनों की भी है। साथियों, बीजेपी और महायुति सरकार के लिए महाराष्ट्र का विकास ही पहली प्राथमिकता है। हम महाराष्ट्र के उज्जवल भविष्य का लक्ष्य लेकर काम कर रहे हैं। साथियों, पिछली सरकारों ने जो काम नामुमकिन बना दिए थे, हमने उन्हें धरातल पर उतार कर दिखाया है। मुंबई में अटल सेतु बना, अटल सेतु से रायगढ़ भी नई संभावनाओं से जुड़ गया। अब रायगढ़ से मुंबई जाना पहले से कहीं आसान हो गया है। इसी तरह 20,000 करोड़ रुपए की लागत से बना रहा नवी मुंबई एयरपोर्ट, 80,000 करोड़ की लागत से बन रहा वाढवण पोर्ट, लगभग 50,000 करोड़ रुपए का समृद्धि महामार्ग, मुंबई कोस्टल हाईवे, मुंबई एक्सप्रेसवे, पनवेल कर्जत तक के रेलवे ट्रैक के दोहरीकरण का काम, इनसे पूरे महाराष्ट्र की तस्वीर बदल रही है। इनसे पूरे महाराष्ट्र की तकदीर बदल रही है। भाइयों और बहनों, आज हमारा रायगढ़ विकास की नई गाथा लिख रहा है। आप देखिए, तालोजा में 30,000 करोड़ की लागत से डेटा सेंटर पार्क एशिया का दूसरा सबसे बड़ा पार्क बन रहा है। रायगढ़ पनवेल आने वाले दिनों में डेटा और एआई का, आर्टिफिशियल इंटेलिजेंस का बहुत बड़ा केंद्र बनने वाला है। कलम्बोल में सेंटर ऑफ एक्सेलेंसी बनाया जा रहा है। यहां स्किल यूनिवर्सिटी भी खुल रही है। पनवेल में सेमीकंडक्टर सेक्टर में भी बहुत बड़ा निवेश आ रहा है। पालघर पोर्ट और जेएनपीटी पोर्ट से भी नए रास्ते खुलेंगे। यानी पनवेल, रायगढ़ और एक क्षेत्र भविष्य की संभावनाओं का नया सेंटर बनकर उभर रहा है। इससे महाराष्ट्र के युवाओं के लिए रोजगार के लाखों नए अवसर बनेंगे। महाराष्ट्र विकसित भारत का सबसे प्रमुख ग्रोथ इंजन बनेगा। साथियों, पनवेल, रायगढ़ का ये पूरा इलाका समुद्री संपदा से भरपूर है। हमारी सरकार कोस्टल इकोनॉमी को सशक्त कर रही है, अपने मछुआरे भाई बहनों के लिए काम कर रही है। हमारे मछुआरे साथियों की आमदनी बढ़े, उन्हें समुद्र में कम से कम मुश्किलें हो, इसके लिए आधुनिक बोट से लेकर आधुनिक नेविगेशन तक की व्यवस्था की गई है। पीएम मत्स्य संपदा योजना के जरिए मछुआरों को हजारों करोड़ रुपए की मदद दी गई है। हमने मछली पालकों को किसान क्रेडिट कार्ड से जोड़ा है। प्रदेश की महायुति सरकार भी महादेव, कोली और आगरी समाज के लिए कई योजनाएं चला रही है। लगभग 450 करोड़ रुपए की लागत से कोंकण में 3 नए बंदरगाह भी बनाए जा रहे हैं। जीवना, हरनाई और साखरनाते में बनाए जा रहे बंदरगाह हमारे मछुआरे भाई बहनों की आमदनी बढ़ाएंगे। इन सारे प्रयासों से ब्लू इकोनॉमी को भी बढ़ावा मिलेगा। साथियों, आज हमारा भारत हर क्षेत्र में प्रगति के नए रिकॉर्ड बना रहा है, क्योंकि आज देश में महिलाओं को आगे बढ़ाने वाली सरकार महिलाओं के सशक्तिकरण के लिए काम कर रही है। महिलाओं को आगे बढ़ाने वाली सरकार महिलाओं के सशक्तिकरण के लिए काम कर रही है। हमारी सरकार ने गरीबों को घर देने के लिए पीएम आवास योजना शुरू की। हमने तय किया कि इस योजना के तहत मिलने वाले घरों की रजिस्ट्री घर की महिलाओं के नाम भी होगी। हमने देश भर में शौचालय बनवाए। ये कांग्रेस वाले उसका मजाक उड़ाते थे, लेकिन आज वही शौचालय करोड़ों माताओं बहनों के लिए इज्जत घर का काम कर रहा है, और उत्तर प्रदेश में तो उसको इज्जत घर के नाम से जाना जाता है। साथियों, हमारी बहनें देश की आर्थिक प्रगति को गति दे रही है। केंद्र सरकार की मुद्रा लोन योजना का लाभ भी करोड़ों महिलाओं को मिल रहा है। अब हम 3 करोड़ महिलाओं को लखपति दीदी बनाने की योजना पर काम कर रहे हैं, और 3 करोड़ लखपति दीदी बनने का मतलब ये वन टाइम नहीं है। हर वर्ष उस दीदी की वार्षिक आय 1 लाख रुपए से ज्यादा हो, ऐसी व्यवस्था। ये काम 3 करोड़ लखपति दीदी बनाने का सपना है मेरा। ड्रोन जैसी नई टेक्नोलॉजी आज हमारे देश में उसकी चर्चा है। इसका लाभ भी महिलाओं को मिले, इसके लिए ड्रोन दीदी योजना का काम चल रहा है। माताओं बहनों, महाराष्ट्र में महायुति सरकार महिलाओं को डबल लाभ दे रही है। इसका उदाहरण है महाराष्ट्र की माझी लाड़की बहन योजना। और इससे आपके खर्चों में मदद मिलती है, अपने काम को आगे बढ़ाने में मदद मिलती है। लेकिन कांग्रेस और अघाड़ी वाले बहनों के लिए ये जो योजना बनी है, इसका भी विरोध कर रही है। इनके लोग इस योजना को रुकवाने के लिए कोर्ट तक चले गए थे। आप सोचिए अघाड़ी वालों के इरादे कितने खतरनाक हैं। इसलिए मैं माताओं बहनों को विशेष आग्रह से कहता हूं, ये आपके भविष्य के हर चीज को रोकने के लिए इंतजार करते बैठे हुए हैं। और इसलिए अघाड़ी वालों को मौका न मिले, ये महाराष्ट्र की महिलाओं ने ठान लिया है। और मुझे विश्वास है, जब महिलाएं ठान लेती है तो मैं नहीं मानता हूं ये कांग्रेस अघाड़ी वालों के लिए किसी के दरवाजे तक पहुंचने की हिम्मत रहेगी। साथियों, देश अब कांग्रेस की सच्चाई को भली भांति जान चुका है। इसलिए अब ज्यादातर राज्य में कांग्रेस का वजूद तक खतरे में है। कांग्रेस अपना वजूद बचाने के लिए सत्ता पाने के लिए कुछ भी करेगी। इसलिए कांग्रेस पार्टी अब समाज में जहर घोलने पर उतर आई है। इन्हें सबसे ज्यादा खतरा एसटी, एससी, ओबीसी के ताकतवर होने से, उनके आगे बढ़ने से कांग्रेस कांप जाती है, गुस्से में आ जाती है। कांग्रेस की मंशा है दलित, आदिवासी, पिछड़ा, जो आज उसकी एक पहचान बनी है, संगठित ताकत बनी है, वो जातियों में बिखर जाए, जाति जाति के बीच टक्कर शुरू हो जाए और ओबीसी कमजोर हो जाए, एसटी कमजोर हो जाए, एससी कमजोर हो जाए और कांग्रेस फिर से पुराने जमाने की तरह अपनी जड़ें जमा ले। दलित, पिछड़ा, आदिवासी आपस में अगर एक नहीं रहेंगे, अगर कांग्रेस की ये झूठी बातों में भ्रमित हो गए, तो कांग्रेस इन सभी समाजों को तोड़ करके, बिखेर के दे करके वो सत्ता पाने का मौका ढूंढ लेगी। और इनके शहजादे ये विदेश में जाके कह चुके हैं कि उन्हें मौका मिला तो वो आरक्षण को भी खत्म कर देंगे, इसलिए आज कांग्रेस एसटी, एससी, ओबीसी की एकता को, उनकी एकजुटता को तोड़ने में जुटी है। कांग्रेस चाहती है एसटी की जातियां आपस में लड़े, कांग्रेस चाहती है एससी की जातियां आपस में झगड़ा करें, कांग्रेस चाहती है ओबीसी जातियों में आपस में टकराव हो जाए। इसलिए कांग्रेस आगरी जाति को उनको माली से लड़वाना चाहते हैं। ये लोग तांडेल जाति को कुंभार से लड़वाने के एजेंडा पर काम कर रहे हैं। हर समाज में भी ये जाति के आधार पर विद्वेष पैदा करना चाहते। मेरे प्यारे भाई बहनों, हमें इस षड्यंत्र से सावधान रहना है और हमें याद रखना है, हम एक हैं तो सेफ है। हम एक हैं तो दोनों हाथ ऊपर करके पूरी ताकत से बोलिए ताकि समाज को तोड़ने वालों की नींद हराम हो जाए। हम एक हैं तो, हम एक हैं तो, हम एक हैं तो। साथियों, आप इस चुनाव में केवल अपना विधायक नहीं चुनेंगे, बल्कि आप महाराष्ट्र का भविष्य भी तय करेंगे। महाराष्ट्र का भविष्य महायुति सरकार के हाथों में सुरक्षित है और आपको याद रखना है, महायुतीचीच सरकार पाहिजे। आप इतनी बड़ी तादाद में आए, हमें आशीर्वाद दिया, मैं आपका हृदय से बहुत बहुत आभार व्यक्त करता हूं। मेरे साथ दोनों हाथ ऊपर करके पूरी ताकत से बोलिए, भारत माता की, भारत माता की, भारत माता की। बहुत बहुत धन्यवाद।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles.
Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. Now, this show gets you actionable insight on everything mutual fund related. And by the way, if you've got questions for us, you can send them on that number that you see flashing on your screen. Before we get to the topic that I've chosen for today, I would like to talk about some data that has emerged from the portfolios of mutual funds at the end of last month. we've actually managed to compile them. Most of them come around the time of 13th or the 14th of the month. And there's some interesting talking points that have emerged there. The aggregate cash that has been held by actively managed equity schemes has fallen for the first time in this financial year in the month of October, but that needs to be put into a little bit of context. We've discussed in the past, and I would actually want you to pull the next slide up because that talks about October and the more recent data. We've actually seen an unprecedented amount of selling by foreign institutional investors in the past month and a half to 2 months, but that's more or less been matched by domestic institutions. That's been led, of course, by mutual funds. And the feeling was that mutual funds are using the significant cash holdings that they've accumulated from retail investors to buy at these levels. The thing is, the reduction, if you look at the value, 1.49, you won't even see the difference because the decimal points are the same. The difference is about 500 crore between September and October, less in October than September. And so you will think, where is the deployment taking place? The difference is only 0.3% lower on a sequential basis. Now, you have to understand that in the month of October, there was an inflow into equity mutual fund schemes of over 40,000 crore, close to 42,000 crore rupees. So mutual funds have deployed all of that and perhaps a little bit more. But the interesting part is this, they still have a significant amount of cash, or had at the end of October, because with the assets falling, the equity market itself falling, as a percentage of assets under management, that 1.49 lakh crore now stands at close to 5%, which is still the highest level in this year. So all of this does not mean that mutual funds have not deployed. What it means is that they've actually deployed quite a significant amount. And what is also interesting, what I found interesting is, you see those NFO flows. The flows at 13,000 odd crore rupees were actually a bit of a peak in this year. They have dwindled somewhat. They've come down a little bit in the month of October. And so therefore what you can interpret from that is that a large amount of flows into the mutual fund industry have been in the form of lump sum investments, with a lot of people trying to buy the dip. And you've had mutual funds that have tried to assist you in buying the dip. So you will likely see a lot of funds that had cash positions. We've spoken to a few of them over the last few weeks where they've started deploying, and let's see how that pans out in the month of November. It's going to be very crucial to watch that. We'll get into some more metrics on the portfolio side in just a bit, but I'd like to move now to the conversation that I've lined up for today, and that is in a fund category that you've probably been focusing on in the recent past. It is the multi-asset fund category. Particularly in the current context, it's a great idea to have a diversified approach to your investment strategy. So if you have, for example, had a large allocation towards small cap, you would likely have seen your portfolio drop more than maybe your neighbor who had an equal split between large, mid and small. But here we're actually talking about a multi-asset investment in one fund. But if you were to think of multi-asset as a category and think that all strategies are the same, it would be as problematic or as wrong as it would be if you were to think that all flexi caps are the same or all mid caps are the same. That certainly isn't the case, and that's because of the way that mutual funds have interpreted the rules set by the regulator to define their strategies. To talk about how this is constructed, I've got Manoj Jain, who is a product head of White Oak Capital AMC, in studio with me today. Manoj, thanks so much for taking the time. Pleasure having you in the studio. Thanks so much for coming by. Let's talk about how this is constructed, because you get into the brass tacks of it, the way that you constructed this in the making of this mutual fund. You had some thinking behind it. So first, let's define the broad tenets as defined by the regulator, and then find out how mutual funds have interpreted this differently.
Sure. So first of all, thank you so much, Alex, for inviting me. So like you know that the regulator has said that if you are launching a multi-asset allocation fund, so minimum 10% has to be invested in 3 different asset classes. So let's say usually it is 10% equity, 10%, minimum 10% debt, and minimum 10% commodity. Largely it is gold, but it can be silver also or any other commodity. So this is the guideline given by regulator, which means equity can be 10 to 80%, gold can be 10 to 80%, debt can also be 10 to 80%. Within that, you have the flexibility of buying 0 to 10% REIT InvIT also.
Yes.
So that flexibility also with all the asset management companies to pick and choose. And you also know, Alex, that as per the current taxation laws, if a mutual fund manager investing more than 65% in equity and equity related instrument, this scheme will be qualified as a equities oriented scheme, which means after 1 year of holding period, you will get
long-term capital
gain tax.
Yeah.
But if you are allocating, let's say, more than 35% but less than 65%, then again you will get taxation benefit. You are still eligible for long-term capital gain tax, but after 2 years. So many combination can be created depending on what is your objective.
Okay, so let's talk about some of those objectives. And while we're at it, and I know that you're not going to specifically speak about your competition, but I want to pull that graphic up if we have it. I'd asked for us to pull this up because the way that, for example, an ICICI Pru multi-asset fund operates is that at the end of last month, they had equity allocation of over 70%. They didn't have gold and silver, and they actually had debt of about 13%. Let's see how that pans out for SBI multi-asset fund as well. They had 53.36% in equity, and they actually had about 37% in debt. Edelweiss had 28%, much lower and much more towards debt. In fact, that last value is how Manoj's product is also defined. So let's talk about why that is. You've got a much lower equity allocation than quite a few of your peers. What is the thinking behind that?
So see, as I said, it all depends what is your objective and what kind of investor class you are targeting. So we have a view that if somebody is investing in hybrid category and not equity, that means that person is looking for slightly lower volatility. Otherwise, you know that over the long term, equity is a fantastic asset class, should generate better return, but it is very volatile. So you are dealing with an investor who is not okay with pure equity volatility. But then why that investor is not investing in debt? Because debt is more stable, but debt can generate only very moderate return. So our understanding is that if somebody is looking for hybrid category, those investors are basically worried about too much volatility. At the same time, they want reasonable return, and obviously they want tax efficiency. Everybody likes tax efficient return. So this is our approach. Our approach is that we are targeting a certain level of volatility, that it should be closer to gilt, okay, over the 1 year period.
Government bonds.
Government bond over the 1 year period. Within that volatility range, within that targeted volatility range, what best we can do, how we can optimize return in most tax efficient manner. So basically, we strongly believe that various asset classes have a various degree of correlation with each other. Like, you know, gold has negative correlation with most of the asset classes. Debt and equity has low correlation. Within equity, domestic equity versus US equity has positive correlation but low correlation. So we can use this correlation to achieve this objective of minimizing asset allocation. Now, if we start with this precondition that our fund should have equity taxation, which means we are saying that at all point of time, come what may, whether it is recession or boom or whatever it is, we will invest minimum 65% in equity because that is what we have promised. Then in such case, let's say you are investing 67% in equity, another 2-3% in cash to manage redemption. Minimum 10% has to be gold or commodity, minimum 10% has to be debt. So you are left with only 10% to take benefit of varying or dynamic market condition, which we believe may not be the right way, because the right way should be you first decide what should be the best asset allocation basis on various parameters and then try to optimize for taxation.
Okay, so help me understand the objective of your multi-asset fund as you've defined it. It's not maximizing capital gains, right? It is, in fact, to a larger extent, it would be protecting against capital loss or erosion while also trying to give you the benefit of investing in an equity. Is that the right way to look at it?
Yeah, let me add one more point, but you are absolutely right. So like as we speak right now, we have about 28-29% invested in equity. Obviously, we have invested another 8-9% in arbitrage, so that our total equity allocation, including unhedged and hedged, will be more than 35% to get the taxation benefit.
Right.
So let's say 28% equity, domestic equity plus foreign equity. Another 20% is gold. Now, both these asset classes over the long period of time should generate reasonable return. Like if I have to give you some number, over the last 13-14 years, both equity and gold has generated double-digit return, solid double-digit. So both of these asset classes are growth asset classes, and both these asset classes have negative correlation with each other. So first, by having almost 50% allocation to growth asset, you are giving some growth participation. So it is not that we are only focusing on reducing volatility. You have 50% assets which are growth asset, and another, let's say 45% assets are basically debt arbitrage, which is giving you stability and reasonable accrual income. So this combination, yes, you are right, will give you reasonable return, may not give you the highest possible return. I am of the strong opinion over the long term equity is one of the best risk class, should give the highest possible return, but with lot of volatility, like the kind of volatility we are seeing from the last 20 years.
So therefore, to drive home the point, your multi-asset fund should not be compared to an equity mutual fund. In fact, if anything, it should be looked at not as an alternative necessarily, but a lot of people have moved away from the traditional fixed income.
Correct.
And so therefore you're more tilted towards fixed income than equity.
Correct.
Okay. So, but let's talk about that fixed income component of the multi-asset fund that you operate as well. And in fact, what I've noticed is that the duration of the paper that you hold is actually on the lower end of the tenure. And so as a result of which, the potential for capital gains is not as significant as it would be if you were on the longer end of the spectrum. Why is that?
Sure. So the debt portion, how we designed our product, we want to keep duration between 1 to 5 years, which means we want to run it as the short to medium term bond fund at most point of time. To your question, why not, let's say 10 years duration? Because again, it will add to volatility. As I said, our preference of between volatility, return and taxation is that first we want to target the volatility. Because our preference is volatility first, that we want to reduce volatility, hence we will keep duration under check. Because yes, sometimes we will take right call, sometimes we will take wrong call in duration. Let's say over the time we will take more right call and less wrong call. It will add to alpha, it will add to some return, maybe 0.25% higher return, but there will be years it will add to a lot of volatility. So again, because our objective is to reduce volatility, so we will keep it short duration, 2 to 3 years most of the time, sometimes 4 to 5 years, but definitely not 10 years. Lastly, within the credit quality also, we want to target very high end of the credit quality, which means sovereign bonds, government bonds, AAA, very, very high quality AA papers only. Again, because the objective is first reduce volatility, then see how best you can optimize return, and obviously in tax efficient manner.
Okay, and one of the final points that I want to raise is how is it envisaged or how is it planned for this type of fund to react to a change in the interest rate cycle, if at all?
Yes, so it is not straightforward because again we are using the chemistry of investing, which means we are using the chemistry of these asset classes, how they react to each other. Like take example of last 3 months. In the month of July, when government decided to cut import duty, so we have seen a drawdown of about 8% in gold prices.
Yes.
And then in the month of October, as we know, that we have seen about 8 to 9% drop in various equity market indices, but gold did well. In both this period, I mean, at least till now, this product of our White Oak Capital Multi-Asset Location Fund did very well. In both the month, we have given very decent experience because while one asset class was not doing well, so we have to see while debt doing well, what will be the result for subsequent classes, asset classes. So usually it has been seen that in falling interest rate scenario, typically you will find equity not doing well. Because why would you cut interest rate? Because there will be some challenges, you are trying to address those challenges, and gold will be doing well. Take example of March 2020. So in March 2020, last 1 year return of equity was about minus 22%, but gold was up by 30%. Debt was also up because there was an expectation that there will be rate cuts.
Yes.
So yeah, I mean, it is not very clear that how this product will react, but I can tell you that different asset classes will react differently, and we are using those correlation to ensure that we can keep volatility under check.
Fantastic. Last question has to do with the international equity that you hold. I saw in your presentation there's an asterisk that says that there's not going to be incrementally more investments. Is that a conscious call, and why is that being done?
Because currently RBI doesn't allow us to.
Sure.
But as and when they allow us, we can buy up to 10% foreign equity. In foreign equity, we want to buy US equity because again, Indian equity being a domestic developed market, And US equity, which is a developed market, has a low correlation, and we want to buy assets which are growth asset, but at the same time have low correlation, because that is how you can reduce risk.
Understood. Manoj, thank you so much for joining in and for giving us that perspective. I think it sets the context perfectly for the second half of this conversation, where we're going to talk about multi-asset funds and where it fits in an individual's portfolio. Thank you so much for joining.
Thank you so much, Alex.
All right. Himanshu Kohli, co-founder of Client Associates, joining in right now. Himanshu, I've chosen in the recent past to talk about multi-asset funds more than I would normally have, because I think it's an interesting space and it's growing quite significantly. Is this a conversation that you're having more with your clients? Are you telling them about it, and what is the kind of response that they have, and where, according to you, does it fit in somebody's portfolio? We were talking to Manoj from White Oak Capital, and he was explaining that his fund house has a slightly different interpretation than certain others, which have more of an equity orientation.
Right. So, Alex, I am a great believer of asset allocation. And what asset allocation does is it just brings in a discipline which increases the probability of success of any investor. Now, today, HNIs, UHNIs, they have the benefit of having an advisor, which is the space which we are in. But still, within our universe also, we recommend 15 to 30% into hybrid funds, and multi-asset class funds actually get positioned over there. So we recommend even to HNIs and UHNIs to look at some hybrid funds, a part of which is into asset allocation funds or into multi-asset classes funds. But for a retail investor, if you ask me, who do not have the advantage of hiring an advisor, it's one of the best things which could have happened, because they get the exposure to different asset classes. And a fund manager is basically changing between fixed income to equities to gold, depending on what's the view they have on these asset classes. And when the fund managers takes more rational decisions, there are also advantages which comes of the taxation, also the operational efficiencies which comes through this process. So I am a great believer of multi-asset class funds, especially for the retail investors, and a part of the portfolio for HNIs and a smaller portion of that towards ultra high net worth segment. It brings in huge amount of efficiency in any client's portfolios.
Now, Himanshu, what I wanted to achieve in the first half of this conversation is to kind of lay out how the treatment of these schemes can be very different. And so therefore, the return expectations also should be different. And so not necessarily right to compare the return of one particular scheme in the category to another. And I don't know how a normal retail investor will be able to understand. So let's try and break that down so that they understand, right? When they're approaching this investment, should it be from the objective of trying to protect their capital, as White Oak Capital seems to be trying to, or White Oak AMC seems to be trying to achieve? Or should it be from the perspective of somebody like an ICICI Pru, which has a much more aggressive equity orientation and will likely use the other asset classes tactically to move from one to the other? Do you need to identify what your objective is at the start?
Right. So it also depends on the profile of the investor. Alex, two individuals, similar age profile, can behave very differently to the same situation. Also, maybe someone's goal could be next 3 years, someone's goal could be next 10 years. Now, the difference in the time horizon and the risk appetite helps people to decide which product to go from which manager over there. So if someone is slightly more risk averse and has a shorter term time horizon, can go for White Oak. But someone who is comfortable taking a slight volatility in the portfolio and want to basically get into equities, but they just want some tactical allocation to happen in case the market is overvalued and is becoming slightly more volatile, so that gold or fixed income can come and give a cushion over there. They can go for ICICI Prudential over there. So I am generally believe, Alex, investors have a long-term money. They don't think it that long-term. But if they start thinking with the right time horizon, they can actually go more towards equity-oriented products over there, where gold and fixed income or arbitrage is coming to build the cushion over there and really compound their money at a better rate over a long-term period.
Final question on this particular topic, and I have a couple more in something else that we were speaking about at the start of the show, which is how mutual funds have utilized cash. And I'm curious what you think about some aspects there. But Himanshu, where would this therefore fit in somebody's portfolio? And I know you kind of answered this, but what kind of allocation would you give to something like a multi-asset fund?
So let's say if I talk about HNI, which has a 10 crores kind of a portfolio, I would say if the profile is moderate, maybe 20% goes towards hybrid kind of schemes, which is, let's say, roughly about 2 crore rupees. Now, out of 2 crores, multi-asset class could be 1/3 of that, which means roughly about 67 lakhs. Suppose someone is not a HNI and has only a 1 crore portfolio, and they do not have the advisor to themselves. Maybe they can have 50% towards hybrid, and out of 50%, they can have 1/3 towards multi-asset class over there. So which could be roughly about 1 crore, 50 lakhs is hybrid, and 1/3 of that, which is 16-17 lakhs. So 16% of their overall asset allocation is multi-asset class. That's the way I define it. Similarly, for UHNIs, it will be a smaller percentage, but it will certainly be a part of the UHNI also.
Thanks so much for laying that out. Now, what I was curious about is I've broken down the latest portfolio holdings for mutual funds based on the data that we pulled yesterday. And it turns out that the cash holdings on an aggregate level for actively managed equity schemes has fallen by just about 500 crore. And it's fallen for the first time, Himanshu, in this current financial year. And more than 40,000 crore coming into actively managed equity schemes seems like a large chunk of that, all of that, in fact, has gotten deployed. So what is interesting to me is that you saw significant inflows across the board in the last month. There are murmurs that perhaps some people are starting to redeem small cap. Is that something that you've heard? Are people dialing you up on the phone to say, what do we do in this kind of a scenario?
Right. So first of all, Alex, if you see last month, $13 billion was sold by FPIs in India, but $12.8 billion was bought by domestic institutions. So whatever money is coming in, domestic market is actually very, very active, and whatever FIIs are selling, domestic market is buying through mutual funds. And that's the reason we have seen for the first time cash allocation has come down, because markets fell between 5 to 7% last month. Similarly, this month, FPIs are selling and domestic institutions are coming and buying it. Yes, on the second part, small cap is relatively overvalued compared to large cap today. And people have made phenomenally good returns in small caps in last 5 years. And today, since it's overvalued and it has gone up quite a bit, it does make sense to maybe reallocate a part of your small cap portfolio towards large caps. Or if your fresh money is coming in, do not invest into small caps. Maybe look at investing more towards large cap, or maybe right now going through hybrid funds, maybe some of this asset allocation funds or multi-asset class funds also, because still market is overvalued, more towards the small cap, and also it's becoming quite volatile. So I would say, yes, it makes sense to rebalance your portfolio, not within different asset classes, but within an asset class also. Maybe reallocate from small cap to large cap, or fresh inflows can go towards large cap today.
Himanshu, I do want to take a couple of questions with you. We have a couple of minutes left. Devamita Banerjee, who's 23 years old, has asked a very interesting question, I think. What is the ideal fund that can capture India's long-term consumption story?
So I would say you can create a portfolio of 3 to 5 managers. 3 to 5 managers, don't go with one particular fund. Try and build this through a systematic plan. You can also say, if I'm building up 5 funds, maybe 3 can come, 1 from large cap, 1 from multi cap, 1 from mid or small cap, and 2 could be from thematic. And right now I would say technology and financial services or banking financial services could be added as a part of your satellite portfolio. Do long-term systematic investment plans in mid-cap, medium-term in large cap and multi-cap. But in financial services or technology, maybe do a short-term 3 to 6 month systematic investment plan to build up these portfolios. But try and be more with diversified funds, and maybe a bit of satellite you can capture through sectoral funds like technology or financial services at this point in time.
One quick...
So I would not like to name any one particular fund. Yeah. It's always a combination of funds. That is what is important. And maybe you can go through the ratings of some of the schemes, or you can write to us specifically and we can send you our ratings, client associate ratings on different funds. Yeah.
Okay, but one quick follow-up then. Zunera Dongre was asking, banking and pharma fund as part of a satellite portfolio. Can you suggest some names here, Himanshu?
So Nippon runs a fairly decent banking fund. You can also go through a index fund also over here, because the idea of a satellite is just to get overexposure towards that particular asset class for the time being, because they are right now satellite in nature. So I would say in a mutual fund, Nippon is fairly decent. And in a pharma space, maybe go through a index fund. That is what I would recommend.
Okay. Himanshu, thanks so much for joining in. Pleasure having you on the show. Insightful conversation as always. Yeah.
Thank you. Thank you so much, Alex.
All right. That brings us to the end of this particular edition of the Mutual Fund Show. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
for UNESCO World Heritage Sites, Ajanta and Ellora caves located on its outskirts, Aurangabad, also called the City of Gates, is a thriving tourist destination attracting visitors from around the world. With its rich history, cultural significance and economic importance. This heart of Marathwada was once one of the fastest growing cities of Asia. Marathwada may be known for Maratha agitation, but it also has a very, very positive side, which is that it is almost like a pharma, fiber optics and breweries hub of the entire country, entire India. I am with this group of entrepreneurs who are running the chambers of commerce in Marathwada, and so let's talk to them and understand what are their issues in this election. It's a young team which has taken over. What was the need for ensuring that there is a young team which understands the aspirations of India better?
Aspirations of India, and we are all hungry to grow. We've been born and brought up in the city. We've studied here. All of us have done our schooling here, and we've all studied abroad or outside the city. We've come back, and what we felt was there is a need for transition. There is a need to grow, and that is what got all of us together. Our seniors promoted us that okay, it is the next generation now which needs to take over the chamber.
So interestingly, there has been a generational shift, and you come from Pune. Yes, and that's one of the towns, famous towns of Maharashtra. What is the transition been for you from Pune to Aurangabad?
Yeah, initially when I came, Aurangabad was not as developed as it is today. So rather my friends used to tell me, oh, you are going back in time. But then I kept my patience. The company for which I work for, Endres Hauser, a Swiss company, we had just one plant then. And today we are 5 and we are still hungry for more land and we are waiting for more expansion. So that's the phenomenal growth that we've seen, not only for Endres Hauser, but overall for all the industries. I guess 20 years back, we had just Waluj as industrial area. Now we have Auric and Bidkin, and then there are multiple industrial hubs which are developing. So that's the change.
And you made an interesting point that every fiber optic of this country right now, which is being laid across India, has something of, Chhatrapati Sambhaji Nagar.
Absolutely. In addition, just not fiber optics, we are also the brewery capital of India. We are fourth in terms of VAT collection in the state of Maharashtra. We are also the largest tire manufacturers of the country. So manufacturing and processing is the hub of our city and of our region.
So you guys actually have that in your blood. All of you are in your blood.
Yes, all of us are second generation or first generation also we have here.
Second, third generation
entrepreneurs. Largely all our businesses started from a focal point of Bajaj Auto, and now because of Bajaj Auto we have grown our ecosystem such that we are catering to all the car manufacturers or two-wheeler manufacturers around the world, and looking at that capability, Toyota and Ather also are building their focus here.
When we talk about Aurangabad, the transition has been also Aurangabad and it has been renamed as well. As the CII president of Marathwada, are the businesses coming here? Because there is always this talk of Maharashtra versus Gujarat, that some industries which are supposed to be set up in Maharashtra move their plans to Gujarat.
Yeah, Maharashtra is always ahead in the industry when we compare to other states. So Bajaj Auto has developed their capabilities and capacities. And if you could see, recently Toyota came, Ather came, JSW came. These people came from north, these people came from the Karnataka, these people came from Tamil Nadu. So why Aurangabad or Maharashtra? It is because a ecosystem from tier 1 to tier 5, a matured supply chain, a skilled manpower, best infrastructure, and the concept of MIDC is unique all over India in Maharashtra. which is not been seen in other state, other people are now copying. So when it comes to performance, every industry prefers Maharashtra first. So it might be the political statement of comparison of two states, but we are having some good edge in the manufacturing. Not only manufacturing, the culture in Maharashtra is the accepting and inviting. So that is creating the distinct difference, and I feel this Chhatrapati Sambhaji Nagar will be the next Gurgaon or next Pune in future as far as manufacturing capability is concerned.
This group of young entrepreneurs emphasize on the need for a stable government, one that completes 5 years in office. What will decide your vote in this election?
For me, who brings stability to the region, who brings growth to the region, and their track record is what will decide my vote in this election.
Whenever there are MLA elections or Vidhan Sabha elections, they are always on local issues. And in terms of national issues, then we go to Lok Sabha. So party is secondary, the candidate is primary for us in this case.
Same thing, the candidate is primary for us, because if he has done something for that region where we are staying and the development is happening, we can see the change over a period of time. So we are just concentrating on the person rather than the party out here.
So it's important the candidate has to be strong, who can take care of the local issues and voice our things at the center.
I think more to do with stability in the government. So if I talk about the business point of view, and the businesses coming in, or the local businesses, or the community as a whole, till we have stability in the government, a government which is running for 5 years, addressing to all the issues, may it be the city infrastructure issues or the industrial issues. Till that, I think that is the biggest deciding factor for us to vote.
This renaming which has happened, does it disappoint you?
Not at all. I think, it's more of a shift that I say that we were born in Aurangabad and we live in Chhatrapati Sambhaji Nagar, and we'll grow in Chhatrapati Sambhaji Nagar.
On 29th June 2022, a day before Uddhav Thackeray government fell, his cabinet approved the renaming of Aurangabad to Sambhaji Nagar. It was to honor the second Chhatrapati of the Maratha Empire, Sambhaji Bhosle. The renaming came in the backdrop of BJP accusing Uddhav Thackeray for compromising with its core Hindutva ideology. Uddhav then was struggling to retain power amidst an internal rebellion led by Eknath Shinde. In Marathwada, the real Shiv Sena battle seems to have been settled. 50 kilometers from Aurangabad town is Paithan, famous for its silk sarees that sport intricately embroidered gold or silver borders. 36-year-old Vicky Dhalkari is a BCom graduate and a fourth-generation weaver. His shop on the main highway has the retail unit in front and a weaving center behind. ये पैटर्न साड़ी आप लोग भी करते हैं, आप वीविंग भी करते हैं और रिटेल शॉप भी?
हाँ जी, फिर मैं खुद वीवर हूँ, खुद रिटेलर हूँ और खुद सेल करता हूँ। और अभी ये तो बिजनेस मेरा खुद का बहुत चौथी पीढ़ी से स्टार्ट है। तो मेरे परदादा जी के बाद में दादाजी, मेरे पिताजी और मैं खुद इसमें ही हूँ। और इसमें क्या है, स्टार्टिंग प्राइस पैटर्न का है, नारली बॉर्डर से स्टार्ट है। उसको बनाने को 10 से 12 दिन लगते हैं। फिर उसके बाद में जैसा वर्क बढ़ेगा उसका टाइम बढ़ेगा, वैसा प्राइस भी बढ़ेगा उसका।
तो ये आपने सीखा कब? क्योंकि आपने बीकॉम किया है, तो ये वीविंग कैसे सीखा?
नहीं, अभी तो घर में ही था, घर का ही बिजनेस था, तो थोड़ा थोड़ा करके हम तो 10वीं के पहले थोड़ा काम करते थे, लेकिन जैसे 10वीं हो गई तो पूरा इसमें आ गए। एक तरफ कॉलेज भी चालू था, उसको भी ये भी चालू था, पढ़ाई भी चालू थी और एक तरफ काम भी चालू था। फिर अभी तो फिर कैसा भी जैसे टाइम मिलता था हम सीख लेते थे। जैसे कॉलेज कंप्लीट हुआ पूरा इसमें आ गए, पूरा हम काम में।
तो ये आपने क्या एडिशन किया है? आप 4th जनरेशन है, तो आपने कैसे उसको बढ़ाने की कोशिश की है?
हमने अभी क्या है, अभी उसमें अपडेट किया, कुछ डिज़ाइन में चेंजेस किए। उसमें अभी मार्केट के हिसाब से चलना पड़ता है। अभी ऑनलाइन का ज़माना आ गया है, ऑनलाइन भी करना पड़ता है कुछ, जो अभी यहाँ से खुद वहाँ से आता नहीं इतनी दूर से। तो अभी क्या होता है, ऑनलाइन का ज़माना है तो हम ऑनलाइन पे डाल देते हैं, व्हाट्सएप पे या सोशल साइट पे करते हैं। उसमें अब इतना अपडेट करें हमने अभी तो।
शिंदे साहब ने काम किया है?
हाँ, यहाँ तो काम किया है क्योंकि उनका ही बुमरे साहब का पहले से यहाँ से ही है ना, पहले से वही कैंडिडेट है उसको।
लेकिन सब लोग बोलता है कि उद्धव ठाकरे की जो सेना है वो ठाकरे है, इसलिए उद्धव
वो उधर है, पर यहाँ जो काम किया वो बता रहा हूँ मैं अभी।
लोकल कैंडिडेट।
हाँ,
तो ये जो आप लोगों के लिए क्या सरकार ने अनाउंस किया है, कुछ है?
अभी तो बहुत से किए, अभी फिलहाल में किया है 200 यूनिट माफ़ किया है बिल, जो लाइट बिल रहता है उस 200 यूनिट हर महीने माफ़ किया है व्यूवर्स को।
कितने साल से ओवर चल रहा है?
अभी ये 6 महीने से स्टार्ट हुआ है, अभी 6-8 महीने से स्टार्ट हुआ है। उसमें फिर अलग अलग लूम के भी आते हैं डिमांड, लूम का भी कुछ आता है, उसमें भी स्कीम रहती है, अलग हर इसमें स्कीम चालू है। इसमें पेंशन भी चालू है, जो हमारे पिताजी को पेंशन चालू है, इसके हैंडलूम में ही चालू है।
Roshan and Neha Dhalkari too speak about benefits being given to pattern weavers like them. इलेक्शन में क्या होगा? महिलाएं किधर जाएंगी इलेक्शन में?
अभी कुछ कह नहीं सकते अभी।
तो आप लोगों ने मन नहीं बनाया अभी?
मतलब अभी जैसे अभी ये गवर्नमेंट ने जितना फैसिलिटी दिया है, अभी लेडीज़ तो यही है कि सरकार जो है वही रहने वाली है, ऐसा ही कुछ सब बोल रहे हैं। तो जो सरकार है अभी वही रहने से अच्छा रहेगा, क्योंकि ये सरकार ने हमको जैसे लाइट में 200 यूनिट फ्री दिया है। हाँ, और गणेश चतुर्थी का जो लेडीज़ को 15,000 का भत्ता मतलब मंजूर किया है, मतलब वो साल का
15,000
साल
मिलते हैं ना?
लेडीज़ को 15,000
साल में 15,000, जेंट्स को 10,000
रुपये मिलता है, और वो यही गवर्नमेंट ने किया है। तो वो हिसाब से यही सरकार रहनी चाहिए,
शिंदे सरकार।
हाँ।
उद्धव ठाकरे?
उद्धव ठाकरे अभी कह नहीं सकते, क्योंकि वजन भी उतना होना चाहिए वो हिसाब से। अभी जैसे इन्होंने जैसा सपोर्ट किया है वैसा कुछ तो भी।
With 46 assembly and 8 Lok Sabha seats, Marathwada is a crucial region for all political parties in Maharashtra. 4 chief ministers of Maharashtra, Congress's Shivaji Rao Patil, Shankar Rao Chavan, Vilas Rao Deshmukh and Ashok Chavan are from the region. Since the beginning of the Maratha quota agitation in 2023, Chief Minister Eknath Shinde, who is a Maratha himself, has been treading very carefully on the demands for Marathas to be included in the OBC category. Marathas account for 28% of the state's population. Shinde, in fact, travelled to Jalna in Marathwada to meet 40-year-old Jarange Patil, who was spearheading the agitation. Though Patil is yet to announce support for any political party after withdrawing his candidates from the race, he remains a dominant figure among the Marathas. Away from all the buzz of the campaign, he tells us he will launch his agitation for reservation soon after the results for the polls. अगर आपकी नाराजगी भाजपा के खिलाफ है, तो इसीलिए शायद जरांगे पाटील महाविकास आघाडी के साथ हैं.
नाही कोणाच्या सोबत असण्याची काही गरज नाही आम्हाला मराठ्यांना. आम्ही कोणाच्या सोबत नाहीत. आम्ही आमच्या सोबत आहे. आमची जात आमच्या सोबत आहे, मी जाती सोबत आहे, जात माझ्या सोबत आहे. आम्ही एकमेकांच्या सोबत आहेत. आम्हाला कोणाच्या सोबत राहण्याची काही गरज नाही. कारण सत्ता कोणाची पण आली, महाविकास आघाडीची काय आली, महायुतीची काय आली, आम्हाला लढावं तर लागणारच. आम्हाला संघर्ष करावाच लागणार आहे. आम्हाला लढूनच मिळवावं लागणार आहे. आम्हाला काय कोणी असं देणार नाही फुकटामध्ये. त्यामुळे आम्ही लढणार आहेत. कोणी पण समोर आला तरी आम्ही चॅलेंज म्हणून मराठी उभा असणार आहेत. ते जरी कितीही म्हणले, आम्ही मराठ्यांना आंदोलनाला मोजणार नाहीत, किती आंदोलन केलं तर ऐकणार नाहीत. मराठी त्यांना गुडघ्यावर टेकवणार, कोणी पण असू दे. आम्ही सामूहिक आंदोलनाची तयारी सुरू केली लगेच. आमरण उपोषण सामूहिक करणार आहेत महाराष्ट्रातल्या मराठी. आता हे देशात पहिल्यांदा असं घडणार आहे की सगळे मराठी एका जागेवरती आमरण उपोषणाला बसणार आहेत आरक्षणासाठी. आणि सरकार कोणचंही असू दे, गुडघ्यावर टेकवणार आम्ही त्यांना. त्याला हरवणार, म्हणजे घालवणार सुद्धा त्याला, आरक्षण नाही दिलं तर.
मराठा एजिटेशन या मराठा रिजर्वेशन की लड़ाई काफ़ी सालों से चल रही है. इस बार क्या रूप है उसका?
उगा डोक्यात खूळ घालून घेऊ नका. राजकारण ते सोडून द्या. ते तात्पुरता आनंद आहे. आयुष्याचा आनंद आपल्याला जर घ्यायचा असला तर आरक्षण द्यावं लागतंय जातीला. त्यामुळे जातीच्याही लक्षात आलं की दुफळी निर्माण होऊन आपल्यात मनभेद होण्यापेक्षा आपण त्या राजकारणाला महत्त्व कमी द्यायचं. आणि मराठ्यांनी कालपासून ठरवलं आता राजकारणाला कमी महत्त्व द्यायचं आणि आरक्षणाच्या लढ्यात सहभागी व्हायचं. सुरू झालं, गावोगावी बैठका सुरू झाल्या. की आरक्षण ज्या दिवशी आता आम्ही तारीख सरकार स्थापन झालं की लगेच तारीख डिक्लेअर करण्याची सामूहिक उपोषणाची. तोपर्यंत आम्ही पूर्वतयारी करून घेतोय आमच्या आंदोलनाची. यंत्रणा तर त्याच्याकडेच आहेत ना, फडणवीसकडे आहेत, मोदींकडे आहेत, एजन्स्या सगळ्या त्यांच्याकडेच आहेत. SIT, CID, रॉ असेल, त्यांची IB असेल, सगळ्या त्यांच्याकडे. तपास लावा म्हणा, आणि ज्याने फोन केला त्याला उचलून जेलमध्ये टाका.
The Shinde government's attempt to assuage the sentiments of the Marathas with 10% separate reservation through a law did not yield political dividends. The Mahayuti lost 7 of the 8 Lok Sabha seats in the region. This time, the Mahayuti is closely watching the moves of Jarange Patil. And then there are rebels like Bandhu Oak, one of the oldest Shiv Sainiks. Oak was hopeful for a ticket from the Uddhav Thackeray Shiv Sena, but he was denied. Now he is contesting as an independent candidate. जयवंत जी, आप अकेले चुनाव प्रचार कर रहे हैं?
मैं खुद अपक्ष यहाँ पर खड़ा हूँ. गए 39 साल से मैं शिवसेना का प्रचार किया था, 25 साल युति का प्रचार किया और 2.5 साल ये आघाड़ी का प्रचार किया. मैं 39 साल से राजनीति में हूँ. 3 बार नगर सेवक रह चुका हूँ इस वार्ड से. अब मैं खुद न्याय मांगा पार्टी को कि मुझे
पार्टी से शिंदे
शिवसेना उद्धव जी बाला साहब ठाकरे कि मुझे न्याय दीजिए, मुझे मेरे 39 साल का फल दीजिए. और अभी जनता के दरबार में जा रहा हूँ. अभी मेरी
इंडिपेंडेंट कैंडिडेट
मैं अभी अपक्ष हूँ. जनता के दरबार में जा रहा हूँ. जनता के दरबार में न्याय मांग रहा हूँ कि सभी जाति के लोगों को न्याय मांग रहा हूँ कि आप मुझे एक चांस दीजिए, दुआ दीजिए और कामयाब बनाइए. मैं आपकी सेवा, सुरक्षा और विकास, मैं 15 साल यहाँ जैसा नगर सेवक था, जैसा काम किया, उससे भी अच्छा काम मैं करूँगा.
रेबल्स को तो निकाल दिया सब उद्धव ठाकरे ने अपनी पार्टी से, तो आपको भी निकाल दिया?
नहीं, ऐसा नहीं है. उद्धव जी साहब के वो बहुत अच्छे लीडर है, लेकिन यहाँ के जो नेता है, यहाँ के नेता जो उन्होंने कुछ गलत बता दिए होंगे हमारे बारे में, क्योंकि मेरे पास पैसा नहीं है. मेरे पास मेरा बंडू ओक, मेरा नाम है जयवंत बंडू केशोरा ओक. ऐसा कुछ होगा, इस वजह से मैं कैसा हूँ ये मेरे मतदाता को मालूम है. ये मेरे मतदार है पूरे. आप पूछिए, देखो. अब ये तो योग है कि आप यहाँ पर यही मेरे वार्ड में आ गए. मैं तो पूरे शहर में सुबह 6 बजे निकलता हूँ और पूरे मतदार राजा के पास जाके हाथ जोड़ के आदाब सलाम.
लेकिन पार्टी का अगर सपोर्ट नहीं है जयवंत जी, तो आप तो फिर वोट काटेंगे?
नहीं, वोट काटेंगे नहीं. ये मतदाता मुझे जिता देंगी. देखो, तुम इतिहास करा देंगे ये शहर का. ये शहर ऐतिहासिक है.
In central Aurangabad, near a famous Naan Kalia restaurant, we meet 32-year-old Feroz, who works as a data engineer. Muhammad Ahmad has seen many elections and is now disillusioned with politics. यहाँ पे कितने साल से हैं?
हम 1960 से. अच्छा. 1960 से यहाँ रहने को आए हुए.
कैसा है यहाँ पे सब चीज़?
यहाँ सबसे ज़्यादा तकलीफ हमको बरसात के पानी की, और सब दरगाह मस्जिद में पूरा पानी घुस जाता है.
इंफ्रास्ट्रक्चर सही नहीं है, सड़क
हाँ, ये हमारे पास कहता है कि चौक से, अपने बुड्डी लाइन से, भड़कल से और अपने टाउन हॉल से पूरे शहर का पानी आके हमारी दरगाह में घुसता है. उसका आज तक किसी ने सोए नहीं करा.
सियासत में क्या होगा?
सियासत में बाजी अब तो कुछ मज़ा ही नहीं रहा है बात करने का.
सियासत में जो आपने बोला मज़ा नहीं है, क्यों नहीं मज़ा है?
क्योंकि सही बात कोई करता ही नहीं ना बाजी. कोई भी आदमी सही बात करने को लीडर तैयार नहीं कि हमारे लिए कुछ करेंगे पब्लिक के लिए, वो बात नहीं करता. वह आए कि बस मंच पे खड़े रह के अपना जो है इधर की उधर की यही बात है बस चल रही है. बस आप हमारे जैसा पुराने ज़माने में कि आपके लिए यहाँ शहर में ये तकलीफ़ है, शहर में ये होना चाहिए, आपको बहुत तकलीफ़ है. हमारे पुराने शहर में तो कोई देखता भी नहीं.
Feroz, what are the issues of young voters like you?
ओके, हमारा इशू इतना ही है कि जो है तो सही तरीके से जो है तो जब एजुकेशन में एडमिशन हो रहा है स्टूडेंट का, यंग बॉयज़ का, तो उसके बाद में जो है उनको गाइडेंस के लिए जो है वो सपोर्ट चाहिए गवर्नमेंट की तरफ से. तो अभी तो दिया है गवर्नमेंट ने, इसमें जो स्कॉलरशिप दिया है, उसके बाद में इंटर्नशिप दिया है, तो ये आगे भी ऐसे कंटिन्यू होना चाहिए, ये एक इशू है। और एक गाइडेंस मिलना चाहिए अच्छा तरीके से, क्योंकि अपना जो है अच्छा जो है अपना मराठवाड़ा जो है, तो इसमें बहुत एजुकेटेड जो है अच्छे है, लेकिन उनको सही तरीके से गाइडेंस नहीं मिलता है, तो वो आगे नहीं जा पा रहे।
The restaurant, one of the oldest in Aurangabad, is run by a 22-year-old. Adil, a Virat Kohli fan, hopes to take the cuisine to online platforms like Zomato and Swiggy. Graduation के बाद ये करने को क्यों सोचा आपने?
ये खुद का एक बिजनेस है और बहुत अच्छा इसमें रिस्पॉन्स भी है, क्योंकि अभी जॉब का उसका इतना मैं इंटरव्यू देता हूँ मगर अभी तक तो मुझे कुछ आया नहीं रिव्यू, तो उस वजह से मामा लोग को थोड़ा हाथ बता देता हूँ और बिजनेस में ध्यान देना है और रोज़ की रोजी रोटी के लिए मैं यहाँ ट्राई किया हूँ।
और इंस्टाग्राम पर, फेसबुक पर सब जगह है या नहीं है? क्या क्या पसंद आता है?
पसंद तो सब आता है मगर काम में ज़्यादा ध्यान है, उस वजह से ज़्यादा देख नहीं पाता हूँ।
किस चीज़ के फैन हैं आप? क्रिकेट के या? क्रिकेट में कौन पसंद है?
क्रिकेट में विराट कोहली पसंद है।
विराट कोहली के फैन हैं आप? अच्छा।
हाँ।
और ये जो बिजनेस है उसके बारे में बताइए, नान खलिया क्यों इतना फेमस है ये पूरा मराठवाड़ा में?
नान खलिया जो कि बहुत पुराना है, नहीं बोले तो 400 साल पुराना ये डिश पकवान है।
हाँ।
ये मुगलों के टाइम का है।
तो ये डिश में क्या है?
ये डिश में बोले तो मसाले डाल के बनाया जाता है और शादी ब्याह में और जो भी इवेंट्स में रस्म खाने में इसमें पकाया जाता है।
ये एक्सपैंड करने का प्लान कर रहे हैं कि इससे और भी जगह जगह खोलेंगे? ऑनलाइन जाता है ये?
हाँ, ऑनलाइन तो नहीं, जोमेटो स्विगी पर तो नहीं है, इंशाल्लाह आगे ट्राई करेंगे, अभी तो इतना ही है, बट और इससे आगे का सोचे है कि आज एक ही बिजनेस है तो और 2-3 खोल लेंगे अपन इंशाल्लाह।
क्या करोगे, कहाँ पे खोलोगे?
जहाँ भी अच्छा एक पॉइंट मिलेगा उस टाइम वहाँ पे खोलेंगे अपन।
Muslims are an important voting bloc in Aurangabad town, forming nearly 30% of the total population. In 2014, Imtiaz Jalil, a former journalist, won as an MIM candidate. Jalil went on to represent the constituency in the Lok Sabha in 2019. In this battle for Maharashtra and Aurangabad in particular, Imtiaz Jalil, what is the role of parties such as yours? Of course, you have been chosen as a member of parliament from here, you were also an MLA. But in this election, when there are multiple political parties, splintered groups, what is the role of party of yours?
See, this election is going to throw a fractured mandate. As of now, it doesn't look like anybody is going to get absolute majority. So it's smaller parties like us. Independents are going to play a very crucial role, and definitely we are in a position now, we can say that we will be one of the kingmakers in the formation of the government this time.
You're calling yourself a potential kingmaker, but many would say that parties of yours are likely to damage the Mahavikas Aghadi more.
See, basically we are contesting just 16 seats out of 288 seats in Maharashtra. So this time nobody can point fingers at us that we are contesting more number of seats to benefit of one particular party or the other political party. Basically, the 16 seats that we have selected are very strong, formidable strength that we have in those constituencies, and which is why we are contesting only 16 seats. So even if you leave those 16 seats, it doesn't going to matter much as far as the formation of the government is concerned, because we are talking about 288 seats. We are not even contesting 5% of the seats.
Okay, but Mr. Jalil, the larger question is that when you look at the battle which is playing out in Marathwada, for example, where we are right now, and it's throwing up surprises every day. The issues are changing every day. So what really is happening there?
See, as far as Marathwada is concerned, this is going to be a very crucial election. We have never seen a caste divide as serious as we are witnessing this time around.
And the entire credit goes to the BJP, Eknath Shinde and Ajit Pawar for playing this dirty game, because Maharashtra was always known as a state of Chhatrapati Shivaji Maharaj, Dr. Baba Saheb Ambedkar, Phule, Shahu. And unfortunately, because of the vested interest of the political parties, look at the situation we are in. Marathas are fighting against OBCs are fighting against somebody else. So it's entirely now caste-based election that we are witnessing, and no development issue is being talked about.
So who's talking development then? Is it Mahavikas Aghadi which is talking development?
Nobody is talking about development issues. Nobody is talking about the large number of farmer suicides that are taking place. In 2023, 2,813 farmers committed suicide in Marathwada. In just the first 6 months in Aurangabad division, 430 farmers have committed suicide. And here you are dancing all the way that, hey, we are giving 1,500 rupees to our ladli sisters, and you are just trying to make hay out of it.
In 2019 assembly polls, the BJP and the Shiv Sena swept Marathwada. The Congress and allies could manage just 13. With multiple independents in fray, which way will this region go? We'll know about it only on 23rd November.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money. When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of.
Good evening. This is India Global. I'm Gauri Trivedi. Let's get the show going with headlines this evening. First up, voting ends in Sri Lanka's parliamentary polls. It's in fact a litmus test for the new president, Dissanayake. Iran is willing to end an impasse over a range of issues with the UN nuclear agency on its atomic program, but it will not succumb to pressure, its foreign minister said after meeting the International Atomic Energy Agency chief in Tehran. In the first ever direct maritime link between Pakistan and Bangladesh, a cargo vessel from Karachi arrived at Bangladesh's Chittagong port with Pakistan's High Commissioner to Bangladesh, calling the move a major step forward in enhancing bilateral trade between the two countries. Super Typhoon Usagi slams into the Philippines. 24,000 people have been evacuated so far as fifth major storm hits the nation in just 3 weeks. All right, on to some very important and breaking news coming in as we speak. Update coming in that the arrest of Khalistani terrorists has taken place in Canada. In fact, India has demanded that these terrorists be extradited. In fact, External Affairs Ministry has responded to reports of arrest which are suggesting that Khalistani terrorist Arshadullah has been arrested in Canada. MEA has said that India expects that Canada will extradite Arshadullah. And External Affairs Ministry has said that they will follow up on extradition requests. Let's get in my colleague Mohammad Ghazali to fill us in with the very latest on this. Now, this is very important, Ghazali, that's coming in, especially at a time when there's so much happening with regard to the Khalistani probe and efforts mounting from India's side to ensure that some of those Khalistani elements are brought to justice.
Yeah, Gauri, the first big development is that the Indian government is also acknowledging the fact that he has been arrested because the Canadian police or the Canadian authorities were reluctant in admitting that the person arrested is Arshadullah, a designated terrorist who was designated as terrorist back in 2023. And since then, India has placed multiple requests with the Canadian authorities to verify his properties, his involvement in the crimes which have been committed in India, not only killing, but he has been recruiting people to carry out extortion, threatening people of other community in Punjab, outside Punjab. His men or people associated with him have been carrying out such threatening calls in Delhi and NCR areas, even in Rajasthan, Haryana, Punjab. And now he has been arrested in one of the shooting incidents in Canada, which happened like last month. And today was his bail application, which was scheduled to be heard in the court. And he will still remain in the custody as per the latest reports. But Indian authorities, the External Affairs Ministry has issued a statement saying that despite placing multiple requests to treaties for his extradition, the Canadian authorities were reluctant to admit it, and they have been placing more information or requesting for more information from Indian authorities. External Affairs Ministry has said that they have shared as much as possible. All the replies have been given to the Canadian authorities, and they are hopeful now that after verifying these details, perhaps his extradition will be initiated by the Canadian police. Now, this also shows that how much Canadian police or the Canadian authorities are willing to accept the fact that they have given a safe shelter to somebody who has been a designated
I was coming to just that, that this arrest is important on two counts. One, the fact that there's admission on the Canadian side, and second, that he is in fact very, very significant in the Khalistani terrorist network.
Yes, he heads the Khalistan Tiger Force, and after the killing of Hardeep Singh Nijjar, as per the intel sources here in Delhi, they particularly claim that he was the one who was handling all the terror activities there, running the terror modules, recruiting people, in fact, here in India, sitting there in Canada, and then carrying out these crimes. And almost every terror attack, if you see in the last 2-3 years, which have happened in Punjab or outside the state of Punjab, all the links of the people who are arrested by the police shows or indicates that there is some link of Hardeep Singh Dalla with these terror activities. But despite placing these requests with the Canadian authorities, they were very reluctant to admit the fact. Now, as we have seen that in the last 1 month, the developments between India and Canada and the relations, the way it has taken a hit, perhaps it is a chance for Canada to recalibrate on these relations by initiating the extradition request and by sort of supporting Indian authorities in getting this person who has been responsible or who is held responsible for multiple terror attacks in India, and he has been booked
Right.
for more than 50 cases.
All right, Kazali, thanks much for filling us in with those details. In fact, shifting focus now to the other big story that we are tracking right now, which is the snap polls in Sri Lanka. Parliamentary elections have taken place and voting has ended in these parliamentary elections. These elections are a litmus test as far as the new president Anurakumara Dissanayake is concerned. He's a very popular leader. He's stormed into power, but that has now supposed to transform and translate into actual power in terms of parliament seats as well. Sri Lanka polls have witnessed 50% in terms of the voter turnout that has taken place. 17 million, over 17 million Sri Lankans eligible to vote in these snap elections, and they were called by the new president, Anurakumara Dissanayake. As I said, he had only 3 parliamentary seats till now, and he needed a majority to be able to really come out with authority and legislative work going forward, which is why these elections are so crucial. They are important also for the president himself in terms of his political capital. He's popular, he's caught the popular imagination, and now he needs to translate that into significant political heft. And in fact, he hopes that he secures majority in parliament, which will ensure that he will have a fresh and a more resounding mandate in terms of some of the reform agenda that he's spoken about in the past as well. On 24th of September, he had dissolved the parliament, and voters are electing 196 members to parliament, and 29 seats are to be elected by another vote as well. So all eyes on whether Dissanayake is able to get a majority in parliament or not. All right, on to the other big story that we are tracking right now, which is from Pakistan, where Imran Khan's final call for protest in Islamabad has happened. Remember, he made a clarion call earlier to his supporters. He's done so again as well. Jailed former Prime Minister has urged his supporters to descend on Islamabad, and his party has called for nationwide protests on the 24th of November. Now, what does this translate into? What does it add up to the political chaos that already has engulfed Pakistan's political establishment? Add to the fact that there is now Donald Trump set to be in office, who has a certain rapport going with Imran Khan and has a deep distaste for the deep state that operates in Pakistan. That's the big question that we are asking on India Global. All right, so we have both Imtiaz Gul as well as Imtiaz Alam joining me on the broadcast. Thank you so much, both of you gentlemen, for taking out the time. Let me start with you. So I'm going to say Mr. Gul and Mr. Alam so that, we can both avoid confusion. Mr. Gul, let me start with you, sir. In terms of the significance of this protest, he's made so in the past as well. There was a lot of back and forth. He called it off the last time because, of course, the multilateral meetings taking place. But he still continues to remain extremely popular in his country. There continue to be fresh cases that are coming. There's one that's come today as well. Another Tosha Khana case that's come. How do you see this clash between Imran Khan and the present political establishment going on from here?
I think the clash is intensifying, only most probably for a bargain as far as the establishment is concerned. Ever since the return of or the re-election of former President Donald Trump, there are some concerns here in Pakistan because of Donald Trump's human rights focused agenda, which he has already announced, and he issued like 5 points as far as the free speech is concerned, and that those 5 points basically target the intelligence, the military establishment, as well as the conventional TV networks. So if we were to look at that, this means if he is so keen about implementing his agenda within the United States, the same agenda probably would also guide his policy on dealing with Pakistan. So that's why there are some concerns, and there's no doubt about the popularity of Imran Khan, but how that popularity plays out actually in dealing with the military establishment is a bit questioned.
Right. 4th of October is when the last protest that was called on by him and his supporters didn't translate into the kind of action and result that they hoped it would on ground. But Mr. Alam, in terms of how you see this, the political climate in Pakistan, there is an looming economic problem. Add to it the fact that Donald Trump is set to be in Oval Office in about 2 months' time, a man who has a deep distaste for the deep state and a certain rapport going with Imran Khan as well.
This is there are a lot of speculations about it, and there is a lot of optimism in the ranks of Pakistan Tehreek-e-Insaf, PTI, that perhaps there is some rapport between President-elect Trump and former
Do you think that optimism is misplaced?
I think it is overstated and there are over expectations. I don't think that Trump can release him from the prison. Pakistan is not very much close to US at the moment, nor it is seen somewhere in the US strategic view in the region. So Pakistan is not a very important country at the moment for US. So why should he will have a lot of things on his plate, from Ukrainian war to Middle East, and from immigration issue and other issues, especially in the economic sphere.
I agree with you on the fact that Pakistan, Mr. Alam, I agree with you on the fact that Pakistan is not high up on the strategic calculus of America. So why will Donald Trump invest an iota of his political capital on Imran Khan? I'm with you on that. But what I want to ask you is, in the backdrop of misplaced, misguided, overstated enthusiasm in the PTI cadre, do you see the flashpoint between PTI and Imran Khan and the government increasing going forward?
I think Imran Khan has now built a capacity to stir the streets and to create an agitational atmosphere. Last time it was quite astonishing that PTI people reached at the center of Islamabad despite massive restrictions and hurdles. This time too they can reach to Islamabad, and they will have to face this time greater hardships and greater hurdles. But I think this is a premature call. They have not very well prepared. They lack organization. Their leaders outside jail do not agree with each other.
Okay, let me ask this to Mr. Gul. Let me ask this to Mr. Gul, that what is Imran Khan's game plan? And how does that add to the political instability that's engulfed Pakistan since February election this year?
Well, I think the game plan is very simple. There are 3 demands that Imran Khan has been insisting on. One is the return of what he calls the stolen mandate from the February 8 elections. Everybody agrees, almost everybody is unanimous in the fact that there were massive systematic manipulation of the electoral process.
Mr. Gul, all those 3 demands are unlikely to be met, whether it is coming down on the constitutional amendment or the mandate being restored or the fact that he should not be in jail. But in terms of that, the fact that he's taking on the deep state, the establishment again and again, sitting in jail, even as fresh charges and fresh cases are being slapped on him, obviously he has a fallback plan, right? Or is it brinkmanship?
Obviously, as long as, if you let me complete kindly, so then I can basically respond to that. Basically, the man is in jail. He remains popular. He also knows this, and so does the establishment. And obviously, anybody pushed against the wall would try to exploit his or her position as a popular leader. This is what Imran Khan is doing, because he knows that even if the establishment at the moment refuses to accept the demands, which you also mentioned, the demands are basically very fundamental. It's about the stolen mandate. It's about removal of the cases that have been made against Imran Khan and many other leaders. So the hope or the expectation of the military establishment is that the stolen mandate story should be forgotten and the party should learn to move on. I don't know which political party would basically afford to forego the mandate, the narrative that was created around the elections, and then start dealing with the sitting government, which it believes is illegitimate.
All right. Thank you so much, gentlemen, for speaking to me and really helping our viewers decode what's happening in Pakistan. One thing is clear, the political instability and crisis is only going to increase from here on, and India needs to be very careful and wary of what's happening on its borders. All right, on that note, we slip into a very short break. We come back on the other side and ask the key question: does India also need its very own Department of Government Efficiency? Stay with us.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.